Very good morning. We have an exciting power-packed show lined up for you guys. I think the first 10 minutes is just going to be breaking down what Trump has done overnight, which is a lot. Overdrive overnight. From pharmaceuticals to home furnishings to TikTok. Well, it's a lot of action. So, all right. Meanwhile, the India-US trade talks continue. We're going to be talking about it with the head of Asia Research at ANZ. Stay tuned for that. Accenture has cut its FY26 guidance. Accenture's read-through. How does it matter to Indian IT companies? How will IT stocks react? Trip Chaudhary is going to be with us on the show. So will Sandeep Agarwal.
Big blow for Indian pharma. Trump, this is part of what we were talking about at the start, plans a 100% tariff on pharma imports from the 1st of October. There's also a conversation that we have lined up with the management of Ixigo. Quite a lot happening in that space, and some of the insights will be useful to you.
The Vodafone Idea AGR dues case, Supreme Court to hear the plea today. Big developments for 4 or 5 key players, so all eyes out on that. And some very notable D Street debuts today, including GK Energy, which was subscribed 89 times. So stay tuned for all of that and more on your favorite show, India Market Open.
Let's kick off with the global cues on the show. US stocks have ended in the red, and surprise, surprise, that's because of the strong economic data which has come in overnight. The concern among investors now is that because the US economy is doing great, there are less chances and fewer possibilities of the Fed cutting rates. Let's just pull up the indices for you and how US markets closed, all down in the red. The Nasdaq down about 0.5%. Meanwhile, here's the data that came in. Initial weekly jobless claims dropped to 218,000 from 232,000. That's below the estimate of 235,000. So that's a good number where there has been concerns about the labor market. The third quarter US GDP growth has also been revised higher to 3.8%. This is versus expectations of a 3.3% number. Bond yields meanwhile ticked higher as strong data reduced chances of Fed cutting rate. The 10-year was at 4.17%. Oil has also been studied after that strong US economic data. The Brent is at the $69 mark. But Asia, you will see, had some trouble starting off, all down in the red. The Hang Seng down about 1%. The calculations are starting that all of the tariffs, the fresh tariffs that have been announced overnight, which companies does it impact? And a lot of Asian nations that have been exporting these products, including pharmaceuticals, including home decor, etc., are all going to be seen very, very closely. There's some impact on auto as well. So let's take you through the big one from the Indian context. This is what the US president posted on all his social media. He said, starting October 1st, 2025, we will be imposing a 100% tariff on any branded or patented pharmaceutical product unless a company is building their pharmaceutical manufacturing plant in America. He goes on to explain, is building will be defined as breaking ground and or under construction. There will therefore be no tariff on these pharmaceutical products if construction has started. Thank you for your attention to this matter. Just guys, you know, we've been working since early this morning, and of course Varsha, who tracks the space, has been talking about it as well, to understand the extent of impact. And you will see a reaction right up for a Sun Pharma, etc. But it may not be that bad because a lot of large companies already have manufacturing facilities, Indian companies. And then if you have to just break ground, it's not that hardest task to do. You know?
Yeah, I would think so.
No, also patented and branded. I don't think a lot of Indian companies get impacted at all.
So you're talking about generics mostly that are going to the US.
Yeah, so I think a lot of global pharma majors, European majors might need production facilities if they don't have already in the US, and they have to set up a facility out there.
You can even just break ground.
Exactly, right?
You are creating loopholes in advance. This is you're setting up for jugaad.
Yeah, but wanting the investments. But I dare say, maybe, which is why the implied is not suggesting as big a downtick, not that pharma is such a big weightage per se, but it may not really have that much of an impact on Indian pharma, hopefully.
You know, I want to just take that question to Khun Go, because the implied is completely flat this morning. Khun Go, head of Asia Research at ANZ Research, joining us this morning. Thank you so much for speaking with us, Go. Let me start by just looking at the whole Asia basket and everything that Trump is talking about, because fresh set of tariffs have now come in.
Yeah, good morning to you. Look, I totally agree with you in the sense that the tariff on pharmaceuticals, or the headline looks really alarming at 100%, but it's only for branded and patented drugs. And for India, the majority of the production and exports are generics, so that will be exempt. Now in Asia, Singapore is the other country that will be impacted, because Singapore does have a fairly large pharmaceutical cluster here, which is largely patented drugs. But quite a few of them are US companies. So the question around that loophole is breaking ground, under construction, does existing facilities count? Details are important, and details are scant at this stage. So we'll just have to wait for more clarification in terms of what is exempt. And the same goes for the other tariffs on trucks, etc. Do existing trade deals that have been struck mean that the lower rate will apply rather than the higher sectoral rates, as it does for cars? Again, we have to await those details, which is why you've seen markets not overreacting at this stage to these announcements.
Khun, morning. I just wonder what you make of the latest data coming out of the United States, because you can't make sense of it directionally, seemingly, right? Because you have GDP data that's revised upwards, you have the jobless claims data, which has been trending in a certain direction, suddenly moving the other way, dropping to 218,000 from 232,000. I'm wondering what the end of the week data will point to. So do you see directionally that there's a weakening, or would you disagree with that and say that there is a fair bit of strength still evident? Or do you expect that some of what we're seeing on the tariff side, on inflation, etc., will come to bite later on?
There's no doubt that taken as a whole, the US economy is still holding up pretty well. I mean, the outward revisions to Q2 GDP plus the real-time GDP tracking for Q3 is still indicating growth of around 3% and above. So there's no signs of a deeper slowdown in the aggregate US economy. But I think this is where you have to really dig down into the details, because part of the strength of the US economy is being held up by the AI-related investment boom. Now, this boom, while it's great for certain companies, and it's a key reason why US equity market up to recently have been hitting all-time highs, it's not necessarily great for the labor market. And this is where, for the Fed itself, it's really to focus on inflation and the labor market. There's no doubt the labor market has been weakening. The downward revisions and the recent loss in job momentums point to that. So next Friday's payrolls number, assuming it comes out, if there's no government shutdown, will be the critical one for the Fed, as is the PCE deflator tonight. So far, the Fed has admitted that the impact on tariffs on inflation has been milder than expected, and that's key. If companies continue to absorb some of that tariff impact and the pass-through is not as strong and the labor market continues to weaken, I think the Fed will continue to cut rates, and that's my view. I'm looking for 4 more rate cuts to take the Fed funds rate to 3.25% by March next year.
Khun, I don't know how closely you look at relative multiples of other Asian markets, but just day before yesterday, one of your peer sets upgraded India to overweight, saying that the valuations for India have come off so much that at some point of time, independent of the India-US thaw, investors will return to Indian markets. Are you of the same belief, or do you think differently?
Well, I'm not an equity house, but I do look at relative valuations just to detect how flows might pan out. There's no doubt that there has been outflows in the past few months, and sentiment had turned negative towards Indian assets. I do agree at some point you'll probably start to see valuations become attractive again, and some of those outflows start to come back in. The question is when. I think the pharmaceutical tariffs are not as bad as expected, so I think that might help to have investors start to relook at India again. And if there's a possibility that that 50% tariff rate might come down, I think that really could be the bigger catalyst to see investors start to rethink and maybe start to reallocate back into Indian markets. But in terms of when that could happen, I think we're still waiting for that.
Okay. Thank you for that, Kun. Go there with the overall picture, and I think it's becoming clear that a lot of what Trump has announced last evening may have a greater impact on other Asian markets. Relatively, maybe India is going to look okay. Now, sources are telling NDTV Profit that India's imports of Russian oil remain the most pressing issue in trade talks with the United States. The negotiations led by the US trade representatives are aimed at a comprehensive deal covering goods and services. For more on this, let me go across to Rishabh Bhatnagar, who's been tracking this very, very closely. Rishabh, the Indian delegation has returned from the US. The minister will come back on Friday. Has there been any headway at all?
Absolutely. I think these two informal rounds that took place, one in New Delhi, and now you had the Indian team that has just returned last night from Washington. Both these informal rounds, very, very crucial, though they don't count towards the official sixth in-person round of negotiations, but they come after a thaw in relations. So there is a definite direction that the talks are headed in. Both sides have come out and said that they are very happy with the progress that has been made. The talks have been in a very conducive, in a very positive environment. So there's definitely some headway that is being made. And also what's important is that both sides are continuing to stick to that fall deadline. So they are still very much optimistic that by mid-November or by end of October, a first tranche of the bilateral trade agreement could be signed between the two sides. So you have Rajesh Agarwal, the chief negotiator, who has returned from the US last night. You have the Commerce Minister Piyush Goyal coming in sometime later today, is what we're hearing from sources. All of this, of course, with the context of the trade talks, given that India is consistently pushing, rather the US is consistently pushing for India to buy more and more American oil, or just oil not from Russia, just non-Russian oil, is the current aim that the Americans have from the current set of negotiations. What we're also picking up is the H-1B visas issue will not be a part of trade talks. That will be handled diplomatically and separately. So those are some of the key updates that we have on the trade talk.
And important updates, absolutely. Thanks so much, Rishabh, for joining us and giving us that latest this morning. Let's talk about what's happened in trade over the course of the last few trading sessions, because that will set a little bit of context before we get into the setup for today's trade. The benchmarks have extended their slide to a sixth straight session, and more than half of the gains from the end of August have now been erased. We actually went very close to that, or were around that 25,500 mark, and we broke below the key supports of 25,000 as well as 24,900 in trade yesterday, and we ended very close to the low point of the day. In fact, markets saw selling pressure intensify in the last hour of trade. In fact, if we pull up the intraday chart for the benchmark 50, you will see a slide towards the end. The broader markets kept pace with the benchmark and therefore lost ground as well. You saw the market breadth, which turned pretty sharply towards the end of the session. In fact, pull up that advanced decline ratio as well. It was quite dramatic shift at the end of the session. Most sectors ending in the red, led by realty, IT, and these stocks, in fact, seeing quite a big decline. Realty losing quite a bit of ground on a second session in a row. Defense stocks bucked the trend and ended in the green, though, and that was one pocket of strength. Of course, quite a bit of action in the space, not least of which the big projects that the government has announced, and there is a little bit of clarity on.
Yeah, I think we've seen that trend since what, April or May, right? Yeah. Since then that's happened. Guys, we don't normally do this, but I just thought it's important to highlight that what viewers have gained if they have watched this piece in the morning, right? So trade setup on Tuesday, we spoke about how markets may consolidate now and can't rule out a trading dip in the very short term. Trade setup on Wednesday, we said that a small corrective move not ruled out due to the bullish positioning of the markets. And we've had that Tuesday, Wednesday, Thursday, the corrective move that has come in. It is a trading bit. We do not say that anybody can predict the markets, but just looked so over positioned on the long side that it was important to highlight that. Now, today, it does seem that with the Nifty 50 below the 50 DMA, it is a red flag for sure. And I think one of the key reasons might be that the optimism around the India-US thaw has reduced. No, it's not reduced the pain point. It is actually a key pain point. Yeah, okay, that's what we're trying to say. But this optimism coming off is the key pain point because remember, viewers, we were in Delhi at the GST conclave when this whole thing of the thaw started and the markets took heart from that. We've had 3 straight weeks of an uptick. In fact, if I'm not wrong, it's what? 2,300 points rally for the Sensex in the past 3 weeks. So some bit of it had to give way, and I think we're seeing that 5 days on a trot, maybe likely happen today as well. Let's see if this lasts. It seems very unlikely that bounce back will happen immediately from these levels, and therefore it might be advisable for people to sit on the sidelines if you are leveraged for sure. And even if you are using leverage on the long side, please be very, very careful and picky and choosy. Maybe you could choose a defense pocket, something else, but please be very choosy and try and stay light because this doesn't seem like a trending market higher. There is a bit of a dip that has come in, and the dip for now is not being bought. So please keep that at the back of your mind.
You know, I would be very keen today to see, folks, how Indian markets react to the latest Trump assault. Because after a point when you get used to it, it's like the boy who cries wolf, right? I know there are various versions of this, including the taco trade, but maybe today it is the boy who cries wolf because there's been so many announcements by Trump on what they want to do to tariffs and to imports. And then you see what actually happens. Nothing much has happened to the US economy. Nothing much has happened in terms of actual impact. Having said that, I think what would be even bigger in terms of impact than pharma stocks are IT stocks today because of Accenture's numbers. Now, Accenture, one of the largest IT companies in the world, put out its quarterly updates, and it's often seen as a flag bearer for what the quarter is going to look like for Indian IT companies. So their numbers are actually in line, better than what was expected, but it's the guidance number that has failed to impress. Came in between 2 to 5%. The expectation was at a little higher than 5%, and the lower end is showing a bit of a problem. They're also saying that macroeconomic indicators are not really easing. So you could see IT companies under pressure. Pharma companies could be under pressure sentimentally for more than any other reason because Trump has announced a 100% tariff on branded or patented pharma products unless a plant is built in the USA. Now, a bulk of the exports from Indian pharma companies are not patented or branded. Those companies that do some of that work also have facilities in the United States, and those that don't can very quickly rectify it because the rules that Trump is talking about include things like just breaking ground. So you may have to simply announce a manufacturing plant and start some amount of work to get bypass that. As far as the markets are concerned, Nifty has extended its losing streak for the 5th straight session, in fact, on Thursday. By the close, the sell-off intensified, dragging the Nifty below its 50-day exponential moving average, eventually ending near the day's low. So that pressure is definitely building up. 24,800 is what you need to watch out for the next crucial support because we've breached key levels in yesterday's trade. 24,700 to 24,600 are potential downside targets if 24,900 is also decisively broken. 25,000 now becomes the immediate resistance level, which was previous crucial support. 25,100 is a sustainable move above this level could signal a bottom reversal. So watch out for 25,100. 25,000 to 25,050 becomes your resistance zone. For the Bank Nifty, close below the 10-day, 20-day and 50-day EMA, that's the exponential moving average, suggesting emerging weakness in momentum. Supports at 54,910, 54,820, resistance at 56,000. So those are some of the levels you need to look at, but clearly the mood is not very, very positive. And, I want to go across to Puneet and ask, is that something that you're seeing in the derivative space as well?
Well, that seems to be the trajectory, definitely, because we did, break 24,900 yesterday as well, which was the key support level, as you rightly mentioned. Now, if that is decisive, that'll be the other one to watch out for, because the implied open also not showing so much action as of today. But when you look at, both the Nifty as well as the Nifty Bank, that's largely been essentially absence of triggers and the continued pressure, to say the least, as well. We saw the decline in open interest that's largely led by what happened yesterday because of the expiry. When you look at the foreign investor positions in terms of buying and selling on the index, let's go across to the next one. We have seen some selling in Nifty futures, while there has been some buying in the index options as well as the Nifty options. Subsequently, because of that, the index long is now at 15.6%. It is recovering in a slow and steady fashion, to say the least. So while there has been a larger pressure on the Nifty 50, we have seen foreign investors slightly trimming their positions on the short side, not meaningfully adding long positions as well. That seems to be what the foreign investors are doing in terms of open interest distribution. 25,000 is now a decisive level. We have seen an increased interest of calls being maintained for a subsequent period of time. 25,600 as well as 25,200 as well. We've seen a deceleration essentially from the 25,000 level all the way down to 25,600 in terms of calls, but the interest is still there compared to the put investors. We've seen actually for all the put investors largely seen deceleration at both 24,800, 900 as well as 25,000 as well. So we could see this key level both as a key interest for both calls and puts as well. For gainers and losers, open interest distribution, we've largely seen not a lot of meaningful change, and the trajectory hasn't been built in yesterday, and that's what we've been maintaining this week as well. But as you guys rightly said, again a day where you'll see individual pockets like pharma and IT being in focus.
Pharma will be in focus, IT will be in focus, and everything Trump does will be in focus. I want to add one specific company where I start my watch list. Thank you for that, Puneet, which is Waaree Energies. Now, there is a Bloomberg report that says that there is a US probe on Waaree Energies. The Indian solar panel maker is under that probe. Customs is suspecting evasion of anti-dumping and countervailing duties. Temporary restrictions have already been put in place. The allocations are of mislabeling Chinese origin solar cells as Indians, as made in India. The case has been triggered by the American Alliance for Solar Manufacturing Trade Committee. In fact, we're going to try and speak to the management and understand what the impact of this is, but you could see some hit today on Waaree Energies. Meanwhile, pharma stocks, we've been talking about it in some detail, but I want to pick out Sun Pharma for impact, if any. So just to quickly recap, here's what's happened. US has imposed a 100% tariff on pharma imports on branded or patented pharma products, and this kicks in from the 1st of October. Tariff will not apply to companies building drug manufacturing plants in the US as of that date. So even if someone wanted to, there's very little time to go ahead and do it. There's no tariff if a local manufacturing project is already initiated. Now, why this matters for India? US is the largest market for Indian drug makers, and India exported $3.7 billion pharma exports to the US in the first half of 2025. In terms of companies that can be impacted, Biocon are key branded players. As well, in the US, Biocon has already commissioned a new plant in the US this month itself, will have no impact. Sun Pharma may have some impact unless and until they announce their US capex plan. So I think Sun Pharma is something you need to look out for. Tariffs are largely targeting branded and patented drugs, and MNCs dominate this. So it's unclear if complex generics and specialty drugs from India could also face scrutiny. There are already some Indian companies that have US manufacturing facilities. These include Cipla, Dr. Reddy's Laboratory, and Lupin. So keep in mind that as of the rules as they've been announced, these companies will not be impacted. The other side, and I mean, I have all thumbs down on my watch list this morning, guys. So I don't know if you guys have better luck. BHEL and REC. Now, they have not got DIPAM's approval for a JV that they've planned. So the JV plan with REC was in place. The power arm announced a JV in March 2024. It's aimed at jointly developing utility-scale renewable energy projects across India. The government department, DIPAM, has not given them the go-ahead for it. So you might see some sort of sentimental hit there.
So the first reading of the stock that I will start with is that it is a thumbs up, but it is conditional because unfortunately, this company has said that it will do many things over the course of the last decade or so. and some things they have not been able to do. But there's a lot that is in the works for all cargo logistics. We'll talk about that. In fact, we're speaking with the management as well. The company has projected aggressive growth in FY27. It assumes the completion of the ongoing restructuring of businesses. The gross profit is seen growing 8.2% in FY26, 7.6% in FY27. But I think what is more interesting is the EBITDA growth that they're seeing in FY27, which is 33.3%. There is also a projection that they have made in the volume picture, and it's pretty anemic in this year, FY26, but then it starts picking up in FY27, where they're talking about the full container load growth of 9%, double-digit growth in the air freight that they're taking, and there's also an improvement that they expect in the less than container load volume. But all told, this involved the restructuring of the domestic business, or consolidation of the domestic businesses within all cargo logistics, and international business is set to be demerged and listed separately. Express and contract logistics will be merged into the all cargo logistics business. So all of that has yet to happen. The latest update, of course, is that the NCLT has reserved its order in this case, so it's not yet taken place. So all of this is conditional to that, and conditional also to business activity. So put that as a caveat. The projection looks pretty rosy, heading all the way up to FY30. The second stocks that I'm talking about is RITES, and this is a positive development. It's an order win, 153 crore rupees or thereabouts from South Korea's Thales Logistics. The company is set to supply diesel-electric locomotives. That order will be completed over the 6 to 8 month period. And finally, Supreme Petrochem. It has commenced operations of 2 new lines at one of its facilities, and those 2 lines will essentially be capable of producing 20,000 tons per annum of compounded ABS. This is a product or an item that is used in multiple applications, including in the automotive sector as well as in the electronics sector and the structural application sector. So the commissioning of new production and the start today of production will be interesting to watch.
I have a very peculiar list today, guys. The first one, and this comes on the back of very strong subscriptions even yesterday, right? So when we saw yesterday, Sesashahi was 68 times, Solar World 65 times, etc. The IPOs are doing well, and today we have a blockbuster, presumably blockbuster listing, simply because GK Energy, it's an EPC services player for solar-powered water pump systems. It was subscribed 89 times, and it lists today. So you suspect that, even if the market was really a deep red, this one could have had a good listing. Since the market is not a deep red, this one could have a good listing, and watch out for the other subscriptions as well and for the listings thereof. So that is one. 2, very interesting, the headline number for Bosch, or the headline piece for Bosch, is that the global parent will cut 13,000 jobs to bring down costs. But the point is, they are doing this largely within the German ecosystem. They are not doing it across geographies. So Indian Bosch operations are not seeing a slowdown that prompts them to cut jobs here in India. So very likely that there could be a sentimental reaction on Bosch as well. But that's what it will be, a sentimental reaction, because Indian operations are not getting impacted. They're very well clarified in their commentary as well. So keep that in mind. That's number 2. And then number 3, all of us spoke about it and just kind of do a little bit on that, and that's IT stocks. And what do they do today? Now, there are two things to the IT space. One, what Accenture did, right? So it posted decent Q4 results. Revenues were up 7%. Overall bookings were up about 8% quarter on quarter, 6% YOY. But the guidance was muted. Now, keep in mind, both the ADRs of Infosys and Wipro dropped nearly 3% on NYSE. A couple of checks with some people in the early morning seem to suggest that maybe the US data also had a part to play in that, right? Because if the data is strong, you know that the rate cut cycle that everybody penciled in, that gets delayed a little bit, and that's also a bit of a negative. So Accenture guidance plus maybe the US data kind of played part into the ADRs dropping, and therefore IT companies may drop per se. But say for Accenture's guidance, almost everybody seems to be saying that things are not all bad. So I know Puneet is going to come in and talk about all the other brokerages, but just highlight what Macquarie is saying. Macquarie is saying that Accenture's best performing vertical was financial services, up 12% YOY in quarter four. That was quarter four for them. And Indian companies have higher exposure to financial services, TCS having the highest. It's their marquee buy idea, and they believe that there is significant margin expansion and growth pickup over FY27, which will help drive re-rating. So will we see a pullback today? Very likely, yes. What happens post that is anybody's guess. And in fact, we'll try and talk about that with experts in just moments from now. But before we do that, Puneet, what are other brokerages saying about Accenture's number and the guidance impact on Indian IT?
Well, definitely, and I think that's one of the key aspects, right? As you mentioned, that while Accenture's guidance is lower, it's also lower because of its exposure to the federal government contracts, something that Indian IT companies are largely absent in. So that is the key aspect, and it essentially suggests that there's nothing negatively new for the Indian IT companies coming out of Q4 results. That's the key takeaway coming out of the numbers. When you look at the other ones, revenue growth guidance of 2 to 5% in constant currency terms for FY26, that's largely known. Apart from that as well, when you look at the guidance cut, as I mentioned, is from the US federal government business essentially that's getting cut. There's also look at the other aspects that the Indian IT company largely don't have that kind of exposure as of now. And the financial services vertical growing at 12% YOY on a constant currency basis is a key positive. When you look at something like a Nomura, let me start off with that first, because we've seen that they mentioned that the 1.5% impact on the guidance is largely because of the US federal business, and the financial services growth momentum is likely to continue for the company, as well as that will be, and there's no noticeable change essentially in the macro environment. That is one key takeaway I'm taking out from Nomura's note. The other one's Investec, where they suggest that it's nothing new, negative coming out of the results for Accenture, and they've highlighted that while the commentary and acceleration demand is there compared to the previous year, they've said that the lower end of the guidance assumes some kind of deterioration in the macro environment, and that's not visible as of now. Finally, Goldman Sachs, to complete this particular list as well, Accenture's results indicate that the discretionary demand is unchanged. And while this, it's not anything new that's coming out of positively, there's nothing negative. And I think that's, summation of all the brokerages as well. And a key positive is the financial services vertical that's grown 12% on a YOY basis.
Yeah, the stock was down yesterday, though, after the results were out. Indian IT companies' ADRs were also negatively impacted. I wonder if that pushes through. Trip Chaudhary joining us on the phone line. He's Managing Director, Equity Research, Global Equities. And Sandeep Agarwal, Fund Manager and Co-Founder at Sovilo Investment Managers, also joining in on the conversation. Welcome to both of you. Trip, let me start with your take on Accenture and the read-through for Indian IT.
Definitely. I heard the few comments that you presented before, and I think all those comments are totally useless because they are looking at the trees rather than forests. And there's a fire in the forest which every comment has ignored. First, let me tell you what is the problem with Accenture. Accenture is domiciled in Ireland, and for that reason, they're not even participating in any federal contract. And I think this is such a simple thing to fix. They can re-domicile themselves from Ireland back to USA. They're not doing it. So first, Accenture problems are self-made and it can be fixed, but the management of Accenture is clueless. That's number one. Number two, we were trying to extrapolate what is happening with Indian companies and what is happening with Accenture, and somehow there's a connotation that Accenture is a bellwether and we need to follow what they say. That's wrong. Why? A customer needs two things today, and neither the Indian IT companies or Accenture are able to deliver on that. When you think about AI, the customer is looking for AI efficiency in the services too. That is, if I get Accenture or Indian IT services to do an AI, artificial intelligence implementation, and I'm just making a number, if it costs me $100, they expect that implementation to be AI efficient, and the cost to do that implementation should be $25, $30. That is not the case. For AI, they are IT services not AI efficient, and AI implementation which would cost $100, they are charging about $250. And all the IT services company, including Accenture, are selling Cadillacs to customer who is on welfare. There's a big disconnect.
Are you short, Trip? Are you short Indian IT, Accenture, etc. then? If you're so strong on your view around how IT...
We only do... we don't short, we are equity research staff. But I can tell you the message here is not to short the stock or go long with the stock, is for the management of each and every IT services company to wake up to the new reality, or the IT services industry from India will disappear forever. It is a wake-up call for all the Indian IT services companies to control the narrative, which they have failed. Let me ask you, which Infosys or Wipro or TCS have been able to control the narrative? None of them. That is so critical in these very, very difficult times.
So it's perspective, Trip, that we appreciate that you bring to the table, because I remember this very conversation that we've had in recent earnings season as well. But I want Sandeep Agarwal's view on this as well. Sandeep, you've been listening to the arguments that Trip has made, and he has consistently called for relook at the business models of some of the largest IT companies in India and asking them to stay ahead of the curve. Do you agree with some of the arguments, though? Because the read-through, I think, that everybody has is that financial services is done reasonably well for Accenture, and this federal business is not something that Indian IT is through. So at least for the short term, there appears to be a little bit of resilience for Indian IT companies.
Hi, good morning for having me on the show. So I will just reiterate that, last 10, 12 months, we have been consistently highlighting that Indian IT companies will not see growth for the large names, primarily because, I firmly believe, based on my practical experience also, that there is a 25-30% dip in efforts, and you have to now cover those efforts by, giving more efficiency, which cannot happen overnight. So there is a tough task in the hands of large IT companies. They have become primarily X growth. Now for X growth, what pay ratio, what multiple anyone wants to assign, that is there, the fund manager's call. I think the stock should not be seen that they have time corrected in last 3 years. There has been no return. That is not a logical argument in my view. Still, they are very expensive. The large caps are expensive on peg ratio. The mid caps are also very expensive on the peg ratio. The small caps do have an advantage in a big way that, all the contracts which were coming before 2019 as $500 million, they fell to $150 million, which benefited the mid caps in 2021-22. Now they have further fallen to, $100, $200, $500,000, $1 million, $2 million. So they will further benefit the small cap. So that is my view for last 1 year. We are not positive on the large names. We are not very positive on the mid names because of they are very expensive. We are very positive on some of the small names, but they are very, very small and may not make much sense to the larger funds and others. So that is the way we look at the sector. I don't think that Indian IT company will lose its presence or its anything. That is not going to happen in my opinion, because I have seen this industry for last 30 years. I have run tech company, I have met clients, and the challenge is that we own 96% of the global sourcing market if you exclude BPO from the numerator and denominator, and that the second best provider of services is more expensive than what we charge to the global players. So I am not so negative. I think Accenture numbers suggest one thing clearly, that it is a X growth sector. So I don't read more than that, and we will see similar commentary and numbers from Indian IT companies, large caps especially.
Okay, so Sandeep, then the long and short of it, are you expecting a negative impact on Indian IT companies today? Number one. And number two, do you think that it's an opportunity, or there is any case to be made for buying into Indian IT right now when the trend is so bearish? Or is it a clear stay away?
So see, large cap Indian IT company, they are replacing some of the FMCG names because they are also now giving same growth, similar margins, and at half the multiple. So, some people may buy them as quasi cash or replacing the FMCG in their basket. But otherwise, I think, because they have become X growth, so they can only be, defensives in some portfolios, but they cannot be something which will make money for you in a big way. Some dividend funds will definitely buy them because the dividend yields are now consistently going up. But let me tell you that, consistent announcement from the US, some or other announcement not related to even IT, that keeps things in a risk. And because of that, people are not buying the stocks. And I believe that, these prices which are there right now, they are very, very good prices. But still, if a sector there is no growth, then, obviously, why should one buy? We buy shares for growth. We buy companies for growth. So if there is 5-4% growth which is going to come, why should I invest? So I will avoid large names. I will avoid mid names, but I am selectively looking at some of the small names. We run a PMS, so very tough to disclose.
Strong views from both our guests, and Sandeep and Trip, thank you so much for expressing them. Lovely to have both of your views on board. Viewers, it does seem that it is not going to be a sunny side up for the IT stocks, at least this morning. Let's see how it goes.
I thought you're a vegetarian.
I am, but I can talk about the egg omelette.
His disposition is sunny side up.
Okay.
I think Neeraj is the perfect example of sunny side up, and I'll tell you why. He always looks at the bright side of things.
Yeah.
So the sunny side is always up.
Very good, as long as there's sun. All right, on that note, we'll slip into a very quick break. We'll talk about stocks on the other side and not necessarily egg preparations. Do stay tuned.
बहू, आज जो कुछ हमारे पास है सब इनकी देन है। एक अगरबत्ती की दुकान से इतना बड़ा बिजनेस खड़ा किया।
प्रणाम दादाजी।
दादाजी, ये तो पुष्पा अगरबत्ती के मालिक हैं, घनश्याम दास। इनके स्टॉक्स में इन्वेस्ट किया था, इसीलिए आज ये सब कुछ है।
जो आगे की सोचते हैं, ग्रो करते हैं। डाउनलोड ग्रो फॉर स्टॉक्स, म्यूचुअल फंड्स एंड IPO।
और ये कौन सी कंपनी के मालिक हैं?
ये तो दादाजी हैं।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
One night before we were supposed to get the money in the bank, we get a phone call and the deal was off. We were in the middle of COVID. We were in a situation where we did the math that at zero revenue, we could not survive more than 3 to 4 months.
You're 25, you work for a multinational, you're living in the south of France.
Welcome back. You're watching India Market Open. The suggestion is that we will have another negative start to trade at the end of this week, and that will extend the streak to 7 days. To talk about this and what the levels are on the downside to watch for, I'm joined this morning by Kush Bora, founder of kushbora.com. Kush, as always, very good morning to you. Is your disposition also sunny this morning? You're on mute.
Let me start.
Okay.
Kush is ready for Dandiya this morning.
Yeah, I can see that.
Kush, have you put on the outfit early?
You guessed it. You guessed it. In fact, I was going to say, since no one from the team has done a ground report on Navratri,
okay,
I think let me go to the heartland, Gujarat, and do one.
So you already dressed, packed, and ready for that. Okay. Is market going to dance to your tune, Kush? That's the question.
Market's been dancing to a very different tune and a very volatile one at that, right? I think it was Tuesday or Wednesday when we said that there is winds of caution in the market, and that is now starting to play out. We've had 5 sessions of falls on the back of FII selling, very heavy FII selling, and we spoke about the lower high, lower low formations that continue to disturb the market. I think from a very near-term perspective, this could come to a halt because now we are in that 24,800, 25,000 zone, support zone. And if you do have a positional long, keep a stop loss at 24,800 and continue to hold. But if you were to initiate a fresh position, I would suggest a wait and watch approach. The first thing that has to happen is that the lower low, lower high formation needs to be negated. And on the way up, 25,100 needs to be taken out. So until one of those two things happen, I think it's a prudent idea to wait for any fresh long positions. If you have one with a very strict stop loss at 24,800, you could continue to hold a long position in Nifty.
But Kush, then, so therefore that is your benchmark view. Specifically, a very quick view on IT because that's likely to be under pressure today, and then jumping into your individual ideas.
So, Alex, my view on IT really hasn't changed, despite whatever's been happening, because I think there was this broad consolidation that we've been speaking of, and we mentioned that IT is not a very short-term play. So, if you do want to consider trades, I think the likes of Coforge, Infosys, and Emphasis, these are the three stocks that I believe will continue to do well in the coming time. So, any kind of dip should be taken as an opportunity to enter. But mind you, this is a 3 to 6 month kind of play, not a momentum play. For that, we've got banking and defense. Now, speaking about stocks, on my radar, since the market setup is a little mixed, so is my selection of stocks. I've gone with a long and a short. Nippon Life, this one has had a good run, continues to do well. Breakout above the 850 resistance zone on the back of good volumes yesterday. So I think momentum likely to continue to 875, 895 levels. 830 is where you keep that stop loss. On the short side, Bandhan Bank. One reason, banking is already starting to see some profit booking, but this one didn't really participate when the entire banking pack was doing well. 200-day moving average given up. So I think on the short side, 155, 152 are your targets. 161 is where you place that stop loss.
Okay, we began the show with this, and we'll come back to you on this one as well, Kush. But US is set to slap a 100% tariff on branded pharma imports from the 1st of October. What's the blow to Indian companies though? Because as you know, a large amount of what is produced is in the generic space. So let's talk about the implications for Indian companies, and Varsha joining to talk about the implications. Varsha, what are you picking up?
Yeah, thank you so much for that. Yes, US will impose 100% tariff on branded and patented products and not on generics, because India is a hub when it comes to generics, pharmaceutical exports. So these tariffs are not on generics. Now, the tariff will also not apply to companies who already have manufacturing plants in US or building, or some of the companies who are building manufacturing plants in US, so the tariff would be exempted. Now, which companies will be impacted? One is Sun Pharma. Why? Because they have a specialty portfolio, like Illumia. So almost specialty portfolio contributes 19% to their overall revenue. Now, onto the facilities of Sun Pharma in US, they do have one facility, but they do not disclose how much contribution US facility contributes to overall revenue. But in Q1 FY26 con call, they did say that they're not going to invest more capex into US facilities because Indian domestic plants capacities are enough to cater to all the US products as well. Now, why today, if you see, despite only tariffs on patented drugs, why whole pharma sector will be under pressure? Because if Trump can impose 100% tariff on patented drugs, investors may are of concern that he may tomorrow impose tariffs on generics, and that's the uncertainty that lies ahead, and because of this whole pharma sector will be under pressure. But do note that these tariffs are not on generics, and India is a hub when it comes to export of generics pharmaceutical products.
Yeah, and that is something that now we've established, viewers, that very likely a couple of pharma names might get impacted, but not all. In fact, I would dare say that if you're an active trader, you never know. A dip and a large sentimental dip on open might actually turn out to be an opportunity to buy. Kush, just trying to understand before we get to what dealing rooms are recommending, how is the strength on the charts for the large pharma names? So leave Sun out, Kush. I don't want a view on Sun. I want a view on Lupin, Oro, maybe a Cipla.
Hi, Neeraj, and a quick word. I think you had mentioned how jam-packed Falguni Pathak sessions were, right? Let me double down on that. 12 midnight, you still don't have any place to dance. So consumption story well and truly kicking. Now over to pharma. I think what's happening is that you need to buy strength. What I would look at is stocks which were doing well before this news came out, and maybe you could see some sort of a dip towards towards the opening session today. So the likes of Loris, fantastic move, right? Consolidation. So if I get any dip towards the 885, 880 zone, I would be a buyer. Lupin's had a big gash, some support levels being broken. So I would wait and watch on that. And Aurobindo also, a big move, a big up move on that. So any opening towards the 1070 mark will be a buying opportunity. So very constructive on Aurobindo and Lupin, Aurobindo and Loris Labs, I'm sorry. And Lupin, I might just wait and watch.
I think Kush has come straight from Falguni Pathak to this show in the morning. And
then he's had a good night.
But yeah,
not even managed to change.
He looks very energetic. Looks like he has had a good rest.
But that's what Falguni Pathak does.
Exactly. So I was going to suggest that.
Okay. Now let's get to Heard on the Street. I think this is the segment that we all wait for to see what is buzzing in the dealer rooms. I think at least Sumit, before you start with in the list of stocks that are is seeing all of the buzz. I think not too much sweat right now over what Trump has done overnight.
Well, it's not much of an impact that for any of the sectors, in fact, neither for big trucks, no direct impact on kitchen cabinets or furnitures, and no direct impact on pharma as well, other than Sun Pharma, which might see some impact coming in given the fact that they do not have any major capital expenditure or any plant in US. So other than Sun Pharma, other pharma companies do not stand to get impacted because of this. But when it comes to some stock specific action, Astral is one counter where there were sell flows on institutional desk, and dealers are indicating that weak earnings growth and expensive valuation is largely the reason why there are a high amount of sell flows that we are seeing when it comes to Astral. But the stock would be interesting to track given the fact that there was some promoter buying that has happened in Astral. So keep an eye out for that counter. For KPIT Tech, that stock was standing out yesterday. Despite the sell flows that we were seeing in IT index, KPIT Tech was in green, and dealers were indicating that there are buy flows on DI desk. In fact, a specific mutual fund was a buyer in trade in KPIT Tech yesterday. When it comes to Dabur, stock was down yesterday, but there are some buy flows on FI desk at lower levels is what dealers are indicating. So keep an eye out for Dabur as well. Polycab, yesterday the stock was under pressure owing to the block deal which was upsized, but dealers are indicating that some large HNIs were accumulating this counter at lower levels on expectations of strong quarterly numbers that could come in going forward. For Indian Hotels, dealer sell flows on PMS desk on expectation of weak Q2 numbers, and for APL Apollo there were buy flows on large HNI desk because dealers are saying that the Q2 quarterly update could be on the stronger side. In fact, a UBS note also came in today where they maintained their buy rating and a target price of 2,000 rupees, and they have also concurred with the view that a quarterly report for quarterly updates for APL Apollo could be strong. In fact, it could beat analyst estimates is what they're also expecting.
Okay, so we are talking about a whole host of companies which might have some impact. We spoke about pharma, but I also want to ask Kush Bora about IT stocks right now. Kush, anything in IT that is seeming like it is on the verge of breakout or more pain is what you see? Accenture is not going to be seen very positively today, but TCS continues to be a top pick for a lot of brokerage houses.
So, Tamanna, a lot of these large names aren't really doing well. Infosys had that bump up and then gave way. TCS also. I think one of the reasons why some of the houses, as you mentioned, preferred because it's very close to support zones. Of course, they would have their fundamental reasons, but I would at the moment prefer Infosys over TCS. There has been a good support at lower levels. Right now, the stock has actually consolidated rather than declined. So for me, as long as the 1400, 1425 zone is held, from a positional standpoint, I would actually be very constructive on Infosys. Like I mentioned, Emphasis, Coforge, these two also, look strong. For now, they've come under pressure, but closer to key support zones. So for me, from the large cap names, Infosys and Coforge and Emphasis from the smaller names.
Deepan Mehta, founder and director of Elixir Equities, joining us. Deepan, thanks so much for taking the time, and a pleasure speaking with you as always. We've been debating a little bit on what to make of IT, and we've had some very strong views on either side on Accenture, right, and what to read from that. We had one voice saying that we're missing the forest for the trees. and there's a fire in the forest, and ultimately IT companies will have to reorient or they will be forgotten forever. The other said that while earnings is not going to be something to crow about in the near term, there's no life-threatening issue for IT companies. What did you read from the Accenture results?
Good morning, and thank you for having me on your show. Even I have strong views that is against our software companies. And sure, I think they can survive, for a long period of time. They've got cash on their books. They've got contracts which are, highly client stickiness is there and good earning visibility, but there is no growth. So I view them like utility companies, like, say a government utility company, like a water company or electricity company. They'll keep on supplying their services, but there's going to be no growth. And what I read from Accenture, one thing which really always pops out is what their guidance is, 1 to 5% top line revenue. From investors' perspective, 1 to 5% top line revenue is a complete no-go, because you need at least revenues which are growing higher than the nominal GDP of the country, even higher than that if you want to generate any kind of return or wealth. So all of these software companies, rather most of them are an avoid. Of course, there'll be a few exceptions, companies which are focused on specific verticals, which have got certain skill sets which are in short supply and which have an excellent track record and growing even when there has been a slowdown all around. Those may be preferred, but by and large, I think investors need to get out of software completely and almost bring it down to nil weightage if you can. Because I don't see any other way of this industry or the large cap company can start growing at 12-13%. I mean, I see no road forward for that.
Dipan, the other overarching view has been what happens to, for example, a stock like Vari Energies, wherein there is conversation that maybe there is some investigation into whether they avoided duties, etc. I mean, this will keep on happening, but is that a big negative for Vari or any other company which is supposedly being investigated?
See, I think any company which is being investigated, there's always that uncertainty as what the outcome will be. And certainly one needs to track that event and assess its seriousness. But look, underlying fundamentals for Vari Energy are superb. Their order book position is bulging. They are going more and more to backward integration, which will improve their margins. And there's no slowing down over there at all. I mean, despite US trade tariffs, they themselves have set up a plant in US, which they're also expanding to kind of hedge themselves over there. And I think reasonable valuations as well. I think this is one company investors should certainly keep an eye on. And in the entire CapEx theme, this renewable energy equipment manufacturers, being wind or power, are certainly our favorites.
Okay, stay on, gentlemen. Need to slip into a quick break. We'll be right back with the pre-open session. Stay tuned.
बहू, आज जो कुछ हमारे पास है सब इनकी देन है। एक अगरबत्ती की दुकान से इतना बड़ा बिजनेस खड़ा किया।
प्रणाम दादाजी।
दादाजी, ये तो पुष्पा अगरबत्ती के मालिक हैं, घनश्याम दास। इनके स्टॉक्स में इन्वेस्ट किया था, इसीलिए आज ये सब कुछ है।
जो आगे की सोचते हैं ग्रो करते हैं। डाउनलोड ग्रो फॉर स्टॉक्स, म्यूचुअल फंड्स एंड IPO।
और ये कौन सी कंपनी के मालिक हैं?
ये तो दादाजी हैं।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
One night before we were supposed to get the money in the bank, we get a phone call.
Okay, we're just going to start off with the pre-open session in a bit, and here's what's going to be playing on top of mind. Trump has made a series of announcements imposing tariffs on furniture, trucks and pharma, but they're unlikely to impact Indian companies majorly. In fact, we've been having over the last hour or so several Indian companies coming out with statements that we do not have exports in this area, especially in the kitchen cabinet and furniture space. Most Indian pharma companies, meanwhile, are exporting generic drugs and not branded drugs, so not too much of an impact seriously coming in. Tariffs on trucks and furniture won't have much impact either. In fact, the resolution of the weekly expiry issue may be a bigger concern for the markets right now. I'm going to take that question to Deepan Mehta, founder director of Elixir Equities, who's with us. Of course, Kush Bora continues to stay with us. Deepan, do you think that this weekly expiry issue is also going to be top of mind? Do you see any major impact sentimentally of this tariff news coming in? Because every day, even as talks are going on, there's something new that's being announced.
Good morning, Tamanna. See, I think this is the new world and new order, and we have to live with President Trump and his announcements and tweets from time to time. But I think Indian markets are getting quite resilient, and whatever worst could happen has happened. And I think investors are prepared for even more. We didn't expect 50% tariff, but that has happened. H-1B visa also out of the blue, although not so detrimental in the short term, but certainly does reduce the flexibility for Indian IT companies in the long run. So whatever bad news has still come, and yet the market is what, 4 or 5% from its all-time high. The real factor here for investors to consider is when will the earnings improve, and the government has done everything possible to make the earnings trajectory move up, right from interest rate cuts, tax cuts, GST cuts, and we've been favored by good monsoon as well. But end of the day, last 2-3 quarters, we've been expecting pickup in earnings, and that's not happened. But as and when that happens, I think you will see the market go into a new zone. And I think downside is largely protected, one, because of solid domestic flows. And two, if there's a steeper sell-off, then I think there's a lot of FI money also waiting to invest. I think if you speak to any of the foreign brokers or institutional investors, they're very positive on the fundamentals of Indian economy and companies. Their problem is with valuation. So if valuation corrects, then there could be a wall of money coming in from there as well.
For that to correct, either you have a protracted period of consolidation or you have a downside. Let's talk about the Indian pharmaceutical space though, and just want to revisit that as the markets open, the pre-open session kicking in, and you're seeing some of those rates on your screen. Pull up Sun Pharma, and of course these are initial rates. You'll see them settle over the course of the next couple of minutes, but a few more of the pharmaceutical companies, all of them down about 10% or thereabouts right now. Torrent Pharma not too much, maybe the companies that are more focused in India not seeing too much of an impact. But Sudarshan Jain, Secretary General at Indian Pharmaceutical Alliance, joining in to talk about the implications of that. Mr. Jain, the initial read-through on this was that it's not going to impact Indian companies to the extent that they manufacture generics, and this is targeted at branded pharma. Is that the way you're looking at it as well?
Yes, this is the correct position. This order is applicable to patented branded products supplied from outside US. It is not applicable to generic products.
Having said that, Mr. Jain, the direction is looking a bit dangerous, isn't it? Even if this particular order is for patented and comes with these ifs and buts, the direction of everything that is coming out of the United States is that they want to really discourage any kind of imports into the country.
It is very important for all of us to realize that as generic suppliers, we operate on a rather thin margin. It will be not in the interest of the US patients if tariffs are imposed on generic. And there is a significant reliability on India for generic supply. Let's see how it happens in the future. But as of now, it is applicable only on patented branded products.
So that my viewers understand what you're talking about, can you illustrate, and I know that it would vary company to company and product to product, but can you illustrate the range of margins that generic providers essentially are working on when they're exporting to the US?
Now, all of us know that all the companies who supply generic products, although everyone is trying to upgrade to complex generics and injectables, where the profit margin is high. But for other products, the margins are relatively less, and it is very, very clear that if tariff is imposed, there will be shortages in the U.S. And it is not in the interest of the U.S. patients if it is imposed. And that is the position which IP has taken, that we have been a consistent, reliable supplier to the U.S. We will continue to supply affordable medicines to the U.S. And it is in the interest of the U.S. patients that the tariff should not be imposed.
Got it. Mr. Jain, is there any kind of conversation that the Indian pharmaceutical industry as a body is taking with any global majors or the US itself, any bodies there to try and understand what further measures would come in and if any pain can be alleviated, if at all?
It is very difficult for anyone to predict. All of us know that only we can keep on emphasizing what we are doing in the interest of the patients, because that is what we are concerned with. All of us know that generic supplies to US get $211 billion saving to the US healthcare system. We supply 80 to 90% of the medicines in cardiovascular, diabetes, mental areas, and even in the cancer oncology area, we are supplying 60 to 70% of the medicines. If the tariffs are imposed, naturally, it will put the burden on the patient. It is very, very, we have been saying in all the forums, in fact, we have done a lot of research studies in the US. So it is all supported by facts.
Agree completely, Mr. Jain. Mr. Jain, sorry, but I'll have to cut you here, but I agree completely with what you're saying, and I appreciate your view, but we'll have to let it go on that note. The market's about to start, but thank you so much for your views. Really appreciate your time.
Thank you so much. Thank you very much.
All right. The stocks aren't quite starting off well, though. Keep that in mind. But these are initial rates. Remember, these rates will settle in the next 4 minutes, but Sun Pharma, I saw a sharp 10%. Gash downwards. And frankly, from amongst that pack, and Dipan Mehta, come in here if you have a view, but amongst that pack of companies which are exporting, Sun, because of its specialty segment, is probably the one that gets hit the most. The others like Lupin, Oro, Cipla, etc., maybe not as much. Dipan, how would you view pharma?
Yeah, right. I think you hit the nail on the head that because of their specialty chemical focus, branded product focus, Sun may be hit, but they've got manufacturing facilities in US as well. So let's see how they manage their production. But look, the last threat from President Trump is on the pharma industry. I mean, we've seen what has happened with gems and jewelry. Those exports are gone, or they are trying to do from other countries and export, re-export. All the other traditional products, be it textiles, leather, they also have got hit badly. Automobiles, auto parts also impacted. So end of the day, this is the only last bastion which needs to be attacked by President Trump, and he may do so as well. But I think markets will move behind that and we will absorb this negative development as well. Let's see, I think, whether he bites the bullet and in fact puts some tariff on Indian generics and therefore increases the healthcare costs for US consumers. So I don't think that's going to happen.
Dipan, just very quickly, do you think that's the fear this morning? Because we've been speaking, and I think every analyst has come and said that by branded, there's not that much exposure, yet the opening ticks are showing that pain. Is that the fear that he's not going to stop here?
See, we can't predict these things, Tamanna, and if it happens, then we have to deal with it. But end of the day, I think if there's a kind of a tariff agreement with US, pharma stocks will be first off the block. So you want to play contrarian, then certainly there is an opportunity here.
Very quickly, we don't do this very often, but then we should today because the rupee is at all-time lows or very close to that mark. It has opened a little bit lower today as well. Just want to talk about why this is and what is occurring here and where the downside is further from this point. Anindya Banerjee, who's Senior Vice President, Currency and Commodities Research at Kotak Securities, joining us. Anindya, help us put this in context very quickly. We're just a few minutes, unfortunately, away from the start of markets in the equity space. What do you make of the rupee right now?
Very good morning, and thank you for having me. See, as long as the trade war is on, Indian rupee will continue to underperform. So if I look at all the top 26 currencies, currently the rupee is one of the weakest and one of the few currencies which is down 3 to 4% against the US dollar. So this is primarily because of the trade war and the FPI outflows. They have been selling the equities and some bit of debt for the past few months. So close to $11 billion has gone out this year.
Is the downside at this point? What are the levels that you're looking at?
See, I think 89 RBI might come in heavily and intervene because RBI had taken a little bit of hands-off approach, which is a right thing to do when you are doing a trade war, because you need the support of the currency, which should flow to the exporters. But one thing we have to keep in mind, Indian rupee appears very significantly undervalued compared to its peers. And this kind of a divergence between its peers, which are stronger against dollar, last time happened was in 2013. And their situation then was very different. So yes, short term, we could see 89 or beyond 89. But once a trade deal is signed, we could see a snapback, an appreciation in the rupee.
Got it. Apologies for the very quick conversation, Anindya. Appreciate that you've taken the time to speak to us.
Thank you.
All right, we have to slip to the brokerage call of the day. That's normally something we go at 9:05 to. We've got Nomura that has initiated a buy call on Titan, and we've got Somit here to tell you about why that is. Somit, what are they saying?
Well, yes, Titan will remain in focus on the back of this initiating note that has come in from Nomura with a buy rating and a target price of 4,275, which suggests a return potential of around 25% currently. Now, if you look at what the brokerage is saying, they're saying that the demand will remain quite steady for Titan going forward, and they also believe that organized player will continue to grow at 1.5 times faster than the industry growth, and that overall growth rate could be around mid-teens as per the brokerage. Now, they're saying that the headwinds that were there for Titan are largely behind. Sales growth and margin will reset to new normal levels from here on. They believe that most of the realistic headwinds have been factored in at the current prices, and they say that certain other concerns are overestimated and might not materialize and would not impact the fundamentals of financials of Titan going forward. Now, they're expecting the company's sales and EBIT to grow at a CAGR of around 18% and 19% over FY26 to FY28. But on the downside, they're also saying that the second quarter of FY26 could be a weaker for Titan because of seasonality impact. But then from H2, they're expecting a strong recovery to come in on the back of wedding festive demand and more store openings. Overall, they're saying that the structural story remains quite strong for Titan going forward, and the company is better placed when compared to other domestic peers. Also, the recent international acquisition increases the total addressable market for Titan. That's what the brokerage is saying, and they're expecting the company's EPS to grow at a CAGR of around 24% over FY26 to FY28. Valuations are quite reasonable and in line with its long-term averages as per the brokerage.
Thanks a lot for that, Somit. So that's a view on Titan, and it's a peak season. I wonder, Kushbora, if any of the jewelry names are showing any traction.
I'm afraid not. There has not really been a significant uptick in most of these names. In fact, even a Titan for that matter, if you want to do a range play, kind of a trade, then it makes sense. For the past 5 months, 3,300 has acted as a very strong support. 3,700 on the upside has been a resistance. So from that perspective, maybe. But the volumes on the downside, even now surging. So I would be a little cautious on Titan, and same for some of the other jewelry names.
IT down 0.43%, nothing too dramatic. Banks about 1/3%. So that's the template. They will start off maybe about 1/4% lower and then see when we go from there. The other big thing today is going to be the Vodafone verdict, right? Dipan, it's a classic case of sher aaya, and you never know when does it happen. But if indeed there is some bit of resolution today or over the course of the next few days, weeks, etc. for Vodafone, is it a business worth investing in, or would you play that verdict via some of the others, like maybe an Indus Tower or a Bharti Airtel or some such?
I'll go with the latter strategy, but trader mindset means that Vodafone may be in the limelight. And look, it's a low price stock, great amount of volume over there. You can buy even 1 crore of shares with hardly moving a decimal or so. So it's going to be a trader's delight, and it doesn't take much to push the share price up by 8-10% on positive news flow. But look, the fundamentals need to improve a long way for us to justify a long-term buy. According to our assessment, you need a 50-60% type of a ARPU increase just to break even. I don't see that happening in the near future. So, it will just live on all these kind of moves done by the government to keep it afloat. And how long that lasts is anybody's guess. But yes, I think there could be a strong trading rally in it. We mustn't deny that opportunity if at all.
Okay, very quickly on Vodafone, Kush, and on any of the pharma pack. What's the top pick today?
Yes, same views as Deepan, and I haven't really been constructive on idea for a very long time. But just technically speaking, the stocks made a good move. I think 9.510 are good levels on the upside to watch for. I'll still go with the Lawson and Aurobindo that we discussed, from the pharma pack. Yes, there's a gap down, but still within those support levels. On Lawson, it comes to about 870, so still holding ground. I think this one could resume its uptrend. Was into a consolidation phase, but I think on the upside, there are levels of 900, 925 to be looked at. Aurobindo also very similar. I think this had a good run. Consolidation was, under works. So as long as 1,050, 1,040 odd levels are maintained, I think it could resume its uptrend. So still remain a little constructive on some of these pharma.
Kush, from the consumption pack, and it's quite a wide pack to talk about, but you've seen a little bit of profit taking, for example, for the automotive companies, but a little pressure in the FMCG basket as well. How would you play that? Would you use any opportunities to add for the slightly longer term?
Alex, I'm afraid the FMCG play is done. Whatever sentimental boost had to come from the GST cuts, that's come in, and I'm seeing a lot of these names, for the with the exception of Tata Consumer in the FMCG pack in particular, seeing sharp gashes of profit booking. So I would wait and watch. I would play this slightly differently. Radico Khaitan, from the broad consumption space, as you mentioned, continues to do well. I think that is one stock that you can keep on the radar. And the pharma names, despite a lot of them seeing profit booking, amongst the ancillary pack, Lumax Auto continues to gain ground, continues to impress on the upside, and has given a breakout. So for eventual targets, or at least intermediate targets of 1325, I think this still has steam on the upside. So I would play Lumax Auto and Radico in the broad consumption theme per se.
Because you got to keep an eye out for whether some of the auto ancillaries which might be exporting have some indirect impact of the trucking tariffs as well that Donald Trump has put in. I mean, he's done 5 things on tariffs. We are obviously looking at pharmaceuticals because that probably has the most relevance for us. And some of the other managements have already told us that Indian furniture exporters, for example, don't really get impacted too much. But watch out for the indirect impact on some of the auto ancillaries, if at all. So that's something you have to keep at the back of your mind. And we'll talk about that. But here come the rates this Friday morning. So let's talk about how the markets are starting off. A bit of a red. And that's all that is, at least in the first tick. Let's see if this changes. IT should come up on your screen. 0.5%. Accenture guidance plus the US economy health. That comes in as well. And because people believe that the rate cut trajectory might change. Mid caps 0.18%, small cap index come up on your screen, 0.25%. Let's get the heat map. Maybe more red than green, despite the fact that it's only 0.25%. But it's okay. So Sun Pharma, 4%. The others well behaved, by the way. Titan is starting off 1.5% lower, despite that brokerage note. Cipla, Dr. Reddy's, those are the other two. And then a bit of IT, in fact, a smattering of IT there, right? Because we see Infi, HCL Tech, Tech Mahindra, all of them, Wipro right here in the red. What's doing well? Larsen, 1% higher. JSW Steel, about 1.25% higher. Some strength in Hero, BEL, Hindalco, Tata Steel, and Grasim. And Adani Ports, about 1/3%. So that's the long and short of it. It's now starting to worsen just a little bit. VIX also moving up a little bit today. So that's something you have to keep in mind. But yep, the export stories getting some reactions. Keep in mind the domestic consumption piece around Navratras still ongoing, Tamanna.
Larsen & Toubro is an interesting one. They have a tie-up with Bharat Electronic to make fighter jets. So I think the L&T story perhaps is not played out entirely, and you could see more on that coming in as well. I reckon after the kind of tariff bombardment that we've seen overnight, this is not half bad. You are about 0.25% down on the Nifty, agreed, but that could be any day in the last 2 weeks as far as the Indian market opening is concerned. Let me pull up the broader markets for you and see what's going on there. And yes, you will see some weakness, about 0.5% down on the Nifty mid-cap 150. The sentiment has not been positive overall. A little over 0.5% down on the Nifty small cap 250. Let's pull up the sectoral heat map, and I reckon you'll see defense stocks relatively doing okay. Metals are fine, more red than green, and those that are in the green are barely holding on. So the breadth of the market definitely negative. No surprises that Nifty Pharma is the worst hit, about 2.5% down. But it seems more sentimental than anything else. The small cap 250 now 0.25% down. So you have IT stocks also in the red, and we told you about this morning. If you'd watched us right from the morning on NDTV Profit, that IT and pharma are going to see some pain coming in. Healthcare index is also following suit. What's, I think, worrisome among all of this, because the rest was expected, is a small cap 250. That the broader markets are seeing this kind of a hit shows that there is some uncertainty in the market overall, despite everything else that's happening. I want to pull up the India VIX for a second, because this is an important indicator to understand what is the mood of the street and the sentiment of the street, so to speak. Up in the green means there is an issue, about 3% up and inching up above the 11 mark. That means the volatility index is seeing more pain coming ahead possibly. Let's go through some of the stocks that are being hit, and I want to pull up pharma first. This is going to be the obvious one, and we should see what a range of companies are doing. Right now it seems that there is no discrimination or distinction being made, whether it's branded, generic, exporting to the US, has a plant there. Across the board there is a cut. So Aurobindo Pharma, DRL, we'll go through it quickly. Glenmark, Gland, Laurus Labs, all in various degrees of pain. Gland is about 4% down. Biocon, in fact, has announced a US facility, so will be spared this new hit completely, but 2.5% down. Wockhardt, 4% down. Natco Pharma. So sentimentally, you're seeing play there. Remember Deepan Mehta telling us that if you want a contra bet, this is what you should look at. Bharat Forge, I just want to see Bharat Forge. Logically, no big hit over there, because the tariff is on import of trucks, but Bharat Forge does supply parts and is in that supply chain pipeline. Just about 0.5% down. On the good side, or the positive side, let's look at what's happening with Hindustan Aeronautics. The Tejas deal was finally inked yesterday, just mildly in the green, barely holding on, frankly. Vodafone, the SC hearing today, and from what the observations were last time, there is some hope it might be positive for Vodafone Idea, about 0.5% up. RITES is the other one that I want to see. They bagged 153 crore order. Well, that's the only one showing some signs of life, 6% up this morning. And so order wins is something that could dominate perhaps. And a quick look at the IT pack before I hand back to Alex and Neeraj. Infosys, TCS, Wipro. Let's look at what the big ones are doing, all of them in the pain. Accenture, better than expected, but in terms of what their guidance is, their outlook is, not looking great. Infosys with the deepest cut among the three that we've talked about.
Well, and you've highlighted quite a few of the big movers, Tamanna. I'm just going to talk about one or two more. Of course, pharmaceutical companies or allied companies in the list of declines, even in the Nifty 500. In fact, at this point, on the Nifty 500, just about 57 stocks are currently trading with gains. But the worst performer is Waaree Energies. We briefly mentioned this at the start today, and there is a negative development. In fact, a couple of negative developments for this company, one of which is that it is currently being investigated by the United States for alleged skirting of payment of duties. By utilization of products that emerged allegedly from certain other geographies and avoiding payment of anti-dumping duties. Down about 4.5% or thereabouts, and hopefully we'll get a chance to speak with the management. I'll get a view from Deepan about it as well. But RITES currently building on that strength. BSE bouncing back from recent underperformance, up about 1.6% or thereabouts. Anant Raj has been in focus and gaining steadily. One other gain of 2% today. Godrej Agro is the other big winner today, up about 4.35%, right? I want to come to you, Deepan, on what you make of Waaree Energies. Of course, the potential exists for solar PV for the very long term, but then these niggles keep coming up, particularly for their export markets, and they are dependent on the US. What do you think of this business? And if you don't want to comment specifically on Waaree, of course, you can speak about that value chain as well in the solar space.
No, I think it's the market leader in solar equipment and doing backward integration as well. They have US facilities, so one cannot say the outcome of this particular investigation, what the damage it will do. But underlying fundamentals are good for the company, not barring what the outcome may be. And I think that within the entire Capex group, solar equipment companies are really sitting on very good order book position. And recently there was a news that Indian solar power rates have come down to below 2.7 rupees per unit. And that's extremely positive. I think that would make solar powered mainstream, and very good news for these companies, and companies like Bari and the entire industry is looking at exports, excluding US, in a very strong way as well. So an Indian market also is doing well for them. So I think next 2-3 years look good for Bari Energy. Of course, there are concerns about overcapacity, but let's see how that actually plays out.
And therefore, on balance, is it a good idea to look at it right now? Would you wait for some clarity on the ongoing investigation?
I think, see, if you have a longer term view, these corrections are great opportunities to buy. Whatever the outcome will be, it'll be settled in terms of penalties. In any case, I think the US exports would have dried up, and more manufacturing from US facilities itself. So I think any correction like this in a growth stock should be considered as a buying opportunity. But let's see, what the outcome is. You cannot bet the bank on something like this. You have to wait and watch and gradually try and increase your holding. That's our view.
Got it. Kush Bora, opening thoughts, anything that stands out for a trade?
So PCR is slipped under 0.7, so it's 0.68. That support could come in. 24,800 is a technical support, strong technical support zone that should be held on to. If it is, then you could see a rebound from these levels. So that's just a quick word on the index. Fresh positions, as I said, you could perhaps wait up a little before initiating. Metals still stand out. JSW Steel in particular has been, we all know, has been doing well today. Also, there's an uptick on this one, and it's held on to whatever 8-10 minutes of opening that we've seen. So I think if you have a position, continue to hold. If not, for higher levels of 1180 with a stop loss around the 1135 mark, and still be considered as a long trade.
Okay, thank you so much for that, Kush and Deepan. And joining us in the first leg, as markets have opened, a bit of turbulence there. The Nifty, just for a bit, dipping below the 24,800 mark as well. Now back above. So it is a tough morning, and led by sentiment, led by pharma seeing the pain. In fact, we have the perfect person to talk to us about what he sees as the impact on pharma companies. Aditya Khemka, fund manager at Incred Asset Management, with us this morning. Aditya, great to speak with you as always. Just trying to get a sense that is the concern what Trump has said or what he could say. Let me clarify. He said 100% tariffs on companies that are exporting or importing into the United States branded pharmaceuticals without any manufacturing facility. Logically, not too much impact on India, but that's not what we're seeing.
Yeah, so look, good morning, and thanks for having me. I think the issue that we are noticing in the Indian pharma stocks is that many of these export to the US, and earlier the entire pharma space was exempted. Now there is branded and patented that is getting taxed, whereas the other part of it is exempted. The unbranded and the generic is still exempted. So I think investors at some point are saying, look, we are getting tired of this and we don't know what the future holds. And hence, to discount that risk or to discount that uncertainty, the stocks need to fall so that the reward for the potential shareholder goes up. And that's when you will see some buying coming into the stocks if the stocks sort of dip significantly from where they are today.
Good morning, Aditya. And so therefore, on balance, how would you approach something like today? And I know that you wouldn't worry too much about one day or the other, but if you are looking at a long-term structural story and you believe in a certain direction for a pocket maybe of these pharmaceutical companies, when the entire space is getting tarred by the same brush, which is maybe not the right way to look at it, would you look at opportunities, and where would those opportunities lie?
So within the pharma space, I'd be more keen to look on companies that focus more on India and hence are relatively insulated from whatever is happening in the geopolitical scenario with US. I would also be inclined to look at CDMO companies that do business with the global innovators like Pfizer, AstraZeneca, GSK, Amgen, because they will also probably be, sort of insulated from this geopolitical situations that we are encountering these days.
Good morning, Neeraj here, and just trying to think, would the non-sun pharmaceutical branded generic companies, would large dips into them be an opportunity for tactical buys? I know you don't have them in your portfolio, but just trying to think out loud.
Yeah, they could be tactical buys, yes, but two things need to be accounted for, Neeraj, as we stand today. Number one, most of these non-sun generic pharma companies have exposure to Revlimid. and Revlimid is going off next year. So these companies will have a very tough time showing double-digit bottom line growth next year. So that's factor one. Factor two, valuation multiples obviously are, on the higher end of the historical sort of band. And number three, now you have this potential risk of a tariff which never existed earlier. And hence, the historical band valuation multiple should not hold, because historically you do not have this risk built into their valuations. So if you take these three factors together, can it be a tactical trade? Yes. But at what price? I mean, it has to be significantly below where the stocks are today.
Aditya, the other question that a few industry experts just wrote was that CDMOs, do they remain in an uncertainty zone, because the definition of the drug manufacturing in the US not clear as of now, whether they extend to the entire value chain, etc. And therefore, could there be at the very least pricing power and maybe some more damage if indeed across the entire value chain? I heard you say that you are constructive CDMOs.
So, Neeraj, look, if you are imposing tariffs, and if you just think about, how do you impose tariffs? One way to do it is to just put it on the final product. Wherever the final product is getting manufactured and it's getting imported, that is exactly the point of tariffing, right? But if you start putting it on intermediates, on raw materials, on, other phases of production other than the final product, then you will have a situation of multiple tariffing, right? So let's say raw material A is exported from Europe to US, where it is converted into API, then it is exported from US to India, and then where it is converted from the API to final product, and then again it is exported to the US. Now in this situation, how do you sort of manage the tariffs, right? So because that is how integrated the pharma supply chain is. So the call that we are taking at this time is that it is probably going to be just the final product that is going to get tariffed, and which is where the CDMOs are relatively insulated, because they don't deal with the final product, they deal with more the intermediate products in the supply chain.
Aditya, just trying to understand big picture. One, is there a contrarian play on pharmaceuticals this morning as things start looking, a bit hazy? Second, then which of the spaces or which of these companies would you look at positively? Because while all of this tariff business is going on, the fact is that you've had some very good news in terms of innovations from some Indian pharmaceutical companies as well in the recent past.
Yeah. So if you think about it, the companies which have had good news on innovations, these companies are considered valuable because these innovations are aimed at selling into the US, right? And it is the US which is basically acting up. So hence, I would say that part, we need to be worried about that part. Companies which are innovating, market is obviously extraordinarily rewarding them. And if the tariff situation or if these, make in America kind of things play out, then the economics will not be as good as they otherwise would have been, for the innovative products. The second part is that, if you look at today's stock price movements, CDMOs, hospitals, branded generics, diagnostics, everything's down. Now, none of these have any meaningful exposure to the US, right? So that's where the opportunity is. You're just getting to buy the same business at a lower price, because these companies are, one, services businesses, number two, they have no exposure to the United States.
Yeah. Always a pleasure speaking with you, Aditya. Thanks so much for taking the time, and look forward to our next chat.
Thanks.
All right, we spoke about All Cargo briefly this morning before the start of trade. The stock is down about 2.75, 3% or thereabouts this morning. It has announced its guidance heading into FY30, so it's a pretty long time frame that they've looked through. And this is as per the merged financials of All Cargo Gati as well as All Cargo Supply Chain. There's quite a bit that is happening in that reorganization of the business. We're going to speak to the management. We're going to be joined by Mr. Ravi Jhakar of the group, who's the group CFO. But before we go to him, let's try and set the context for you. Vansh joining in with some of the takeaways from that presentation that was uploaded yesterday to the exchanges. Vansh, what are you picking up?
Thank you for that, Alex. Something wrong with Vansh's audio. Okay, Vansh, we can't quite hear you. Your audio's gone off. We'll try and get it back on that. But let me go straight across to Ravi Jhakar. He's the Director Strategy and Group CFO of All Cargo. Mr. Jhakar, thank you so much for speaking with us this morning on NDTV Profit. You've had your analyst day yesterday and a lot of focus on what the path ahead is. But before we do that, I just want to get your sense if you're seeing any impact of tariffs right now. For any company in the logistics space, this is also a big issue. So let me start there before we get to the takeaways from your analyst day.
Yeah, so I think, speaking on tariff, what we're noticing is that there have been disruptions and volatile patterns in trades. For an example, when China tariffs were announced, we saw a sharp decline in China volumes, which then picked up again as the policies got reversed. We have seen impact on India to US trade. But if you look at the global landscape, what we're finding is that month on month, and we do release monthly updates on volumes as well, month on a global basis, we are finding largely steady volumes. So there are pockets, primarily exports into US, which have been declining, and exports to other destinations from Asia have been generally increasing. Having said that, if there was no disruption of tariffs, perhaps you would have seen some growth rather than the volumes being flat. So I would say the impact is that on a global basis, the trade is not growing. It's remaining flat for us. And in terms of specific segments, trade into US has been declining. That's how I would read the impact.
So what would be the strategy then, Mr. Jakar? Just trying to get a sense of what your mindset is right now, because all companies need to realign in that sense with what is happening right now. So is there more of a domestic focus? I mean, how are you going to tackle this going forward?
Yeah, so one good part with us is that we have our own offices in about 70 plus countries, which means that only a part of our business is linked to India as far as the international trade is concerned. So when cargo flows change, and if India volumes are to go down and Vietnam volumes are to go up, or contrary, if China was to go down and India was to go up, we are able to realign our trade lanes as well. Being a global company with significant market shares in almost all the key consumption countries and all the key production countries, what we notice is there could be fluctuations within what trade lane is working well for us. But on a global basis, we are well covered. Unless the entire global trade was to come down, that is the kind of macroeconomic impact which would affect us as a company. A country-specific, restriction or decline generally does not impact our international supply chain business.
Mr. Jakar, good morning, Neeraj here. And how easy it is, and I'm sure it's not easy, but how is it that in the current scheme of things, are companies able to guide for possible revenue, EBITDA performances over a 5-year period? I think it's difficult to figure out what will happen over the next 5 months, right? So I'm trying to understand, how did you guys come up with this CAGR growth estimates for till FY26 to FY30?
Right, no, absolutely. So I think if you go through the presentation, which we also shared yesterday, we have provided guidance for FY26, which is the current year. We have also spoken about FY28 in the domestic business, which is 2 years down the line. And we have spoken about only FY30 as the only number in all cargo terminals, which is a long-term gestation projects business, where we are developing some new infrastructure projects like an ICD in Farrukhnagar, which will only take a couple of years to materialize. And therefore, the long-term guidance becomes more essential than the near-term guidance. And if you look at the all-cargo terminals business, there is a pretty steady business. India's exports and imports are bound to grow well. There could be some marginal impact on the trade with US, which I also feel is more near to midterm at best. And the industry is running at very high utilizations. And given our market leadership and competitive positioning, it is more infrastructure development-led revenue and cost visibility, which is also very certain for us. We have fixed outflows across all the 7 existing facilities and the new upcoming expansions as well. So we have a very clear roadmap ahead in terms of what infrastructure gets ready when, what volume capacity kicks in. And given the overall market situation wherein the market is operating at a very high capacity utilization with a lot of port capacity coming in and the growth story intact, I think it is much easier for the all cargo terminals business to predict how the outcome of the capex and the new projects and expansions would look like. Coming to the domestic supply chain business, that is again more driven by the domestic consumption on the all cargo gati and on the all cargo supply chain, which are now also, of course, coming together. We had our final hearing day before yesterday, which is now concluded as a process, and we expect the order very shortly. So perhaps effectively as early as next 4 to 5 weeks, we should see the demerger being implemented on the ground. So on the domestic side, with this GST reforms as well kicking in, we are clearly seeing increased consumption and increased trade flows. The month of September continues to be a very strong month. On the contract logistics, our pivots are chemical industry, which is more specialized, and e-commerce and quick commerce, which again has been growing at a very healthy rate. So I think on the domestic business, the approach on the projections is more like annualized growth rate, and it's not like an absolute far out 5-year target in case of all cargo terminals, which is more projects driven. So in all cargo, Gati, in the domestic business, we have spoken about what kind of compounded annual growth rates do we expect over the next 2, 3, and 5 years. And that's largely driven by the operating leverage. There's an Indian economy growth, the market growth, and we're not looking at a significant expansion in market share, but more of operating leverage by controlling costs, which has been playing out for the last 3 quarters as well. So it's pretty scientific in that way.
Fair call. Just one quick a question on how do you see the economy linked pieces right now, because you may be doing certain parts of this logistics supply chain, not all, but you may have a view, you will have information on all. Is there brisk activity starting to happen because of the consumption boost, but accompanied by some bit of exports or imports being lower? How do you contextualize the two?
So what we are witnessing is that there is a selective decline in trade from India to US, which is impacting certain industries. And there are a few industries which are heavily dependent upon the US exports. So those are badly hit. For instance, a lot of exports on the gems and jewelry, on the textile, and there are a few industries which are, I would say, severely impacted, and they are hoping for some kind of reversals and negotiations taking place over the next 2-3 months. And if that was not to happen, there could be severe impact on those industries, at least I would say in a 12 to 24 month period, maybe over a longer period. If this was to be a long-term phenomena of, sort of preventing Indian exports, they could find alternative markets, but there would be tough times for 1 to 2 years for those selective industries. Now, as far as we as a logistics company are concerned, we don't play much into these high value commodities, which are largely driven by air freight. We're not focused on the cross-border e-commerce that much. The kind of business that we do, a containerized LCL trade, that is something which is more steady cargo. When the volumes go down, FCL converts to LCL. When the volumes expand, we see industry tailwinds. So, which is why if you would see over the last several years and also specifically quarters and breaking down into months, we usually see more consistent volume flows. What is happening is that, like I said, ideally, with the inflation coming down, there should have been more disposable income. We should have expected the trade to rebound, both into Americas and Europe. Unfortunately, tariff has put brakes on that growth path. So to give you an example, we would have expected about 800 to 810,000 cubic meters of cargo, which would have been a substantial growth over the past few months. But we are still seeing about 750 to 775,000 cubic meters of LCL cargo in our business, which is more or less steady or marginal growth. So there's an impact, but I believe personally that this impact is more near term, and which is why, if you ask me, there could be more volatility in the next 6 months. But when I look at 12 to 18 months down the line, I believe the business should be more stable. That's how I see it.
That's why targets are being looked at from an FY28 perspective. Understandable in the world we live in. Just trying to understand if there is any kind of insight on the post-GST cut volume that you're seeing, since e-commerce also is something that dominates your revenue mix. And of course, this will be from a domestic perspective. Are you seeing any uptick there?
So on the domestic business, I would say over the last 18 months, we have seen a tremendous increase in the quick commerce business. And it used to be a small part of our business, and now perhaps is the largest business segment already in our contract logistics segment. So that's something which we are finding it's possibly becoming a habit for customers. And we see the quick commerce part, which is now growing much faster than the overall e-commerce. We see that fundamental shift continuing to happen over the next few years. And we see that having an impact on our business as well, creating opportunities and managing dark store, last mile supply chains linked to the quick commerce. On the overall GST, we clearly, like I mentioned, we are witnessing stronger volumes. And these are essentially, if you look at the lower priced commodities or the essential commodities which have largely been impacted, the auto sector seems to be benefiting a lot, which means there would be increased auto components, and after service spare parts market should expand. These are some of the segments which from a logistics perspective are part of organized market. For example, the organized market does not play that much into the agri-logistics, for instance. So it's not directly dependent on the monsoons, though indirectly consumption gets impacted. But if you look at the GST impacted areas, most of these are mass market commodities traveling in the domestic hinterland in an organized logistics framework. So that's something which should benefit us and the other logistics players also in the market.
Okay, thank you so much, Ravi Jakar there of All Cargo Group in that exclusive conversation with us. The company had its investor day yesterday, and that focus has definitely been there with a hope of improvement by 2028. But as any company in the logistics business, what is happening with tariffs and a global trade war will weigh heavy as well. But let me go across now to the big market conversation. And Manish Sonthalia, Director and Chief Investment Officer of MK Investment Managers, with us this morning. Manish, thank you so much for taking out the time. I know you were on your way somewhere. You stopped your car to do this conversation with us. We deeply appreciate it. And it was also important because we want to try and get a sense from you on what is the mood right now. Is there panic because of these, tariff tornadoes or tariff tsunamis which have come overnight? Or is there a sense that this is more of the same?
So, Tamanna, yeah, I mean, every day there's something new that is coming on account of tariffs, and obviously India is also getting impacted because of that. But somewhere down the line, there is also a realization that, everything said and done, the earnings downgrade cycle is somewhere close to the bottom. That whatever earnings downgrade one was to have seen as far as India is concerned is coming to a close. And you could say that there's also been some compression in P multiples. So from that point of view, if the flows continue to remain what they are, I'm talking about the domestic flows, then it's okay. I don't think there's much to panic. I don't see too much of panic in investors' minds. In fact, people are looking to deploy capital in these declines. I don't see any panic as such.
Manish, that's a strong statement and good to hear that. In fact, day before yesterday, HSBC upgraded India to overweight. And when we spoke to Harold van der Linden, his call was that his Asian clients seem to be believing, and they seem to be telling them that even if the thaw between US and India were not to happen, valuations relative to history are in favor, and 2026 allocations would mean FI flows would return. So if the domestic flows stay strong, and if HSBC's thesis on global flows is correct, are we actually looking at some upsides and significant ones at that over the course of the next 6 months?
The harakiri in the market today is the currency. The
That's
currency
true.
the currency depreciating to 89 and below that. Of course, one could say that Indian currency is somewhat undervalued at these levels. It's not overvalued. At one point in time, it was overvalued. Now, based on the current situation, Indian currency is undervalued. So from that point of view, the negative implication of all the export embargoes and tariffs, etc., is broadly more than priced in the currency. And if the currency is undervalued, you don't have too much of an impact on earnings, or whatever impact on earnings had to happen has already played out. There's still rate cuts that are likely to happen. I think there is a case of a buy only. There is no case of a sell per se. There could be some time correction. The markets may take some time to digest this, but absolute downfalls in the market from these levels, unwarranted according to me.
So what would be the play here, Manish? Let me just get your take on pharma, for example, the latest recipient of attacks. Just thinking back on all the whole host of attacks. There's an H-1B attack, impacts IT. Then there is at one point an auto tariff which impacts auto companies. Now, pharma we thought would be staying away because no country wants to impact something like the price of drugs for its population. But nevertheless, what do you see when it comes to the pharma companies? What's been your assessment?
Yeah, so I think all the four major tariff announcements today does impact India to some extent. Of course, the pharma being the largest component of the tariff, in today's announcement, there's some ambiguity currently whether, the entire value chain is going to get tariffed, or only the final branded formulation is going to get tariffed if it's not made in the US. So this would have implication for the CRDMO, CDMO, CMO companies. If the entire value chain is to be taxed, if the entire CMO, CRDMO facilities are not there in the US, if that is also going to be subject to 100% tax, then there is a wider impact. On the other hand, if the only final branded formulation is to be tariffed, then there's a limited impact. Of course, we also don't know whether specialty or complex generics are to be tariffed or not tariffed. So at this given point in time, I would believe that the large pharma companies, something like the Sun Pharmas of the world, they have some 15-16% revenues, which are basically likely to get impacted because of these tariffs. Or there could be some branded plays for players like Lupin and Cipla and Dr. Reddy's, but that's about it on the headline implication, because Section 232 is also implied currently, and biologics, etc., not falling within today's tariff announcement. It's only the branded portion which is going to get tariffed at 100%. So, we need clarity as to whether the entire API value chain is also going to get tariffed because they go into the branded formulations, or only the final branded formulation is going to get tariffed. So that is one piece. Auto and auto components, heavy trucks, $2.5 billion worth of heavy trucks exported to the US, plus $2 billion worth of auto components. Now they are going to be tariffed at a higher rate. These have some implications. Bathroom vanity fittings, etc. Again, India has some exposure in terms of exports. Some $1-2 billion worth of exports of that component also goes through upholstery, furniture. That is also some. So all in all, you'll have a impact of $5-6 billion on the other components, apart from pharma, which is the biggest piece, $10 billion. Of course, branded is totally out, so we are saved from that front. But generics is totally out, so we are safe from that front. Branded is going to get impacted, yeah. So these would have short-term implications, and one should build in 50% collapse in revenues from what we were getting previously in the short term.
Sorry, 50% collapse in revenues.
That is how you should build in. That is how we should build in our models, right? If let's say 16% of X company's revenues is branded formulations, you assume that 50% of that is not going to come through, and 50% is what you are going to manage with the higher tariffs. So that is how you try to quantify the implications in terms of numbers for some of these companies.
Okay, Manish, what is your sense on what's happening on the positive side, which is demand and domestic demand in India post GST 2.0? We are now, 5 days into Navratras. Are the telltale signs, and I know you do a lot of groundwork, are the telltale signs that the demand has been strong, and is it across categories?
Autos is clearly a flyer. There is no doubt about it. Autos is flying off the shelf. Even anecdotally, previously also, whenever excise duties, when we were in the excise duty regime, they came down. Autos did really well. And I think speaking to retailers, etc., the festive season demand has been a mixed bag across categories, but discretionary somewhat is looking much better than previous Diwali, is what retailers tell us. And consumer durables, automobiles, these are some of the areas where things have started to look up. Not so much in the other category, but yeah, GST positive is basically felt into durables and autos is what we can fathom at this given point in time.
And is it getting restricted to just that, durables and auto, the whole FMCG boost that was expected and the re-rating of your consumer staples? Manish, do you think that that's not really panning out?
So biscuits, etc., the point is that the prices are not coming down, but grammage is going up. So whether that is going to lead to more offtake in terms of the number of packets, etc., not too much of anecdotal evidence out yet, but there is hope that as things stand and as things move forward, this is also going to look up. Plus, we are having some very good monsoons, so FMCG, no direct beneficiary that we have come across at this given point in time. Of course, companies have taken a price cut as per the government's directive, or there has been an increase in grammage. So we'll have to wait and watch and come to specific numbers as things progress in the coming months.
Just one point on IT, and of course Accenture's read-through was looked at very, very closely, some varying views on what it really means for IT stocks. All of them are seeing the hit today. Do you think we're going to see another rough quarter, especially with this overhang of H-1B visas?
Yeah, sentimentally the things are negative for Indian IT per se, and but Accenture numbers were not that bad. I mean, Accenture numbers in terms of upping their hiring, etc., is pretty much at par. Only thing is that this H-1B visa is going to raise costs for Indian IT guys. Something to the extent of 2 to 3%. Plus, there's going to be lowering of multiple. Of course, multiples have already got lowered significantly. But on the tailwind side, you have the currency depreciation, so that is going to aid things. But all in all, this 1 lakh for new applications on the visa front, on-site hiring is likely to go up. There is going to be some dent in margins, but I think all in all, there is deep value in Indian IT companies at these prices.
Thank you so much, Manish, for speaking with us and taking out the time to, wherever you were going, and you've stopped and done that interview with us. We really deeply appreciate it.
Thank you.
I think very, very, blunt outlook on what it means for pharmaceutical companies. For certain companies, there will be a huge collapse, definitely, of the demand of whatever extent is coming from the US. So you're going to have to look at companies specifically and pick those which do not have that much exposure to the United States right now. Domestic plays is where it's going. Atmanirbhar stocks is what we need to list out as well as we go ahead. Now, let's talk about IPOs, because you've had listings this morning. Telecom infrastructure solutions provider Pace Digitech's IPO opens for subscription today. We'll talk about the fresh listings and then their openings as well. The price band for Pace Digitech is 208 to 219. It's a Bengaluru-based company which wants to raise 800 crores through this issue. Varsha is joining in with more details. Varsha, start by telling us what Pace Digitech does.
Yeah, thank you so much for that. It's into a telecom infra industry. Is a multidisciplinary solutions which is primary focus on telecom infra company. Now, this is an entirely fresh issue, and the funds will be used for capex and of course for reducing their debt. Onto the SWOT analysis. If I want to talk about what are the strengths which this company has, so there are long industry tailwinds due to which the company will have a good growth, and company has a good order book, but the tender-based revenue and dependency is what the weakness that this company has. While rising demand for fiber broadband and massive expansion when it comes to energy storage are some of the opportunities that this company will have, and also will help in the growth for the next 2 to 3 years. But high capital intensity and regulatory dependency exists for this company are some of the risks that this company has. So overall, the good thing is that this is an entirely fresh issue and no OFS given, and considering the growth in the telecom industry and the opportunities that this company has, maybe this company will have a good subscription as of in coming 2 to 3 days.
Varsha, stay on with us, because two companies are also looking at their Deet Street debut, Sathvik Green Energy and GK Energy. I think you have the first pre-open rates up. Both have seen a healthy investor demand. In fact, Varsha staying on with us. Anushi also joining, and we're going to talk about all of those listings as well. Varsha, why don't you go first?
Thank you so much for that. So, talking about Sathvik Green Energy, a flat debut, I would say, but this company is this company manufactures solar modules, and the IPO size was around 900 crores, and the overall subscription on the third day was almost 6.57 times. While it manufactures modules in India in terms of operational solar PV module, and it has an operational capacity of almost 3.8 gigawatt, and it's also into EPC as well. Onto the usage of funds, company will utilize the IPO proceeds for payment of their borrowings, and of course they want to set up a 4 gigawatt of solar module capacity, and we all know every solar module company is actually expanding a lot, and Sathvik Energy is one of them. Onto the strength, it has a good quality customer base and among the leading module manufacturing companies in India, but it depends on third-party suppliers for supplier of raw materials. And considering the opportunities that we have, because India plans to achieve a target of 500 gigawatt by 2030, this company will have good growth considering 2 to 3 years. But as we all know, there are a lot of competitors when it comes to module space, and this is one of the huge risks that the company faces, which may impact EBITDA margins and realizations going forward.
Got it. Okay. Thanks for that, Varsha. And now, so that is Satwik Green. What about GK? Because we spoke about this in the morning. GK has had massive subscription, and therefore all eyes will be out on whether it lists well and what to do post-listing, right? Now, Anushi, just fill us in, right? What is this company about? And are there any notes which are talking about what is the kind of valuation that it's come out at and what is the valuation that it can trade at?
Right. So I'll start off with what the company essentially does. We've seen strong subscription numbers on this one. We are seeing about the kind of listing gains it has in the right now. Now, what the company does, it came out with an issue of about 464 crore, which includes a fresh issue of 400 crore or so to be utilized towards the working capital requirements of the business. Do note that the current working capital day stands at 90 days as compared to 51 days earlier in FY23. The company is into EPC services for solar-powered agricultural water pump system. Now, that forms majority of its revenue. It is trying to diversify from this revenue stream as well. In terms of how the revenue growth has shaped up, we've seen about 160% of a plus growth in FY25. In margins also stood at about 18% as compared to 6% in FY23, and this is the net profit of about 133 crore that we are looking at. Valuations, it's valued at around 23 to 25 times, if I'm not mistaken. That's the kind of valuation picture that we are looking at for the company. Given the kind of growth, it would be interesting to see how it would pan out with the kind of order book it has. Current order book about 1,000 odd crore, which is about a 0.93 times of a book-to-bill ratio that we are looking at. Onto the strengths, it has a strong order book in place along with an asset-light business model. However, it has high dependence on government-related schemes, which includes PM Kusum, contributing about 84% of its mix in FY25. Along with that, it also relies on third-party service providers. So that would be a space to watch out for, considering that we have some opportunities as well, while the company is diversifying its source of revenue by installing rooftop solar systems. Along with that, backward integration is also in place for building an in-house solar panel manufacturing unit as well. However, what remains as a threat is any risk in terms of policy or regulatory changes for the renewable energy sector. Along with that, competition from established players is another area that we should be watching out for. But this is the overall perspective on GK Energy that we are seeing as of now.
What are the peers, Anushi, of GK Energy that you should watch out for? GK and maybe Satwik as well?
For GK Energy, the one peer that we have in mind is Shakti Pumps. Now, that is also in the water storage pump systems is what we are looking at. Around similar kind of valuations that we are looking at. So that is one peer that you should be watching out for.
Okay. So Shakti Pumps is the peer in this space. Varsha, anything you want to add in terms of how the space has been increasing? With something I know that you track as well?
Yeah, for Satwik, the peers that you were asking, you have Wari Energies, you have Vikram Solar, which was recently listed. In fact, Vikram Solar is actually expanding its capacity by 4x, to 17 gigawatt, and they're also going into cell manufacturing as a backward integration as well at 12 gigawatt. Even Premier Energies and Websol Energy are some of the peers when it comes to, Satwik Green Energy.
Okay. So, I think nevertheless, however these two list today, the good thing is that the space is just increasing and there is exposure to it for the Indian retailer. You have to see whether the valuations really make sense, because a lot of these are long shots, right? These are going to become realities because there is a very clear policy push. But nevertheless, you'll have to wait and see where these plans of theirs really go. Both Satwik Energy and GK Energy, there you see it. The dual listings in a similar space, very different in their outcomes right now. We talked about GK Energy, which is sort of rolled into the rooftop solar scheme and had huge subscription numbers as well and oversubscribed numbers. 12% up on listing day. Not a massive premium, but not bad. Satwik Green Energy, meanwhile, is not seeing such a great morning and is listing about 1% down. So, having said that, to be fair, it is a tough morning for the markets. We'll take a very short break. We're coming back with our big conversation on Talking Point. We're going to try and make sense of what has been happening across the globe and the impact for Indian markets. And stay tuned for our special conversation with Team Ixigo. All of that after the break.
आज जो कुछ हमारे पास है सब इनकी देन है। एक अगरबत्ती की दुकान से इतना बड़ा बिजनेस खड़ा किया।
प्रणाम दादाजी।
दादाजी, ये तो पुष्पा अगरबत्ती के मालिक हैं, घनश्याम दास। इनके स्टॉक्स में इन्वेस्ट किया था, इसीलिए आज ये सब कुछ है।
जो आगे की सोचते हैं ग्रो करते हैं। डाउनलोड ग्रो फॉर स्टॉक्स, म्यूचुअल फंड्स एंड आईपीओ।
और ये कौन सी कंपनी के मालिक हैं?
ये तो दादाजी हैं।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
One night before we were supposed to get the money in the bank, we get a phone call and the deal was off. We were in the middle of COVID. We were in a situation where we did the math that at zero revenue, we could not survive more than 3 to 4 months.
You're 25, you work for a multinational, you're living in the south of France.
Yes.
And you're not liking it. You want to come back to India and work harder.
We realized that legally it was, not allowed to work more than 35 hours a week. When I asked my boss for a permission to come on a weekend, he got very upset.
तो आप वो Indians हो जो सबका नाम खराब करते हैं. Tell us what the kernel of the idea starts from before you go mass consumer.
People are opening multiple browser windows or tabs to do the same search on 3 OTAs, 2 airlines. So we built this meta search engine that would, crawl or use their APIs to give you where the best deals were, and then we would lead you to them to buy.
You almost finish each other's sentences. So that chemistry is really there. One thing that really annoys you.
Hard to, have a discussion that's not very objective because he's the one who's more data, numbers, and objective driven at times.
Sometimes, I have to control his positivity about certain.
Welcome back. Some recovery in markets since a pretty soft start this morning. Let's pull up the line graph for the Nifty off its lows and just about holding on to the 24,800 mark. Now, this also becomes crucial. There is, of course, this whole tariff attack which is happening. So look out for the Nifty Pharma Index as well. Pharmaceutical stocks seeing the brunt, and that will continue. But look at that chart. Even pharma stocks off their lows as the realization comes in that India largely exports generics rather than branded formulations to the United States. Having said that, Sun Pharma and Biocon might be in focus as well because of the specialty drugs that they put out. I think the bigger question is, where does this go next? There are consistent tariff attacks and new surprises and shockers coming in from the United States right now as far as trade with India and the world is concerned. How do you build a portfolio? How do you preserve your capital in a time like this? That's what I'm going to ask Vikas Khemani as my first question. He's founder and CIO at Carnelian Asset Management. Joins us on the Talking Point this morning. Vikas, great to speak with you and have you on. Thank you so much for your time. When you woke up this morning and you saw all the series of posts, what was the first thought that came to mind?
This is nothing new. I think we have been used to it now for the last couple of months. So it's a first time in any history, at least I have grown up believing that when you see any policy change through the Twitter and with a lot of sort of vagueness in it, right? If you are making a policy change, you are actually supposed to release a proper circular with a lot of details saying that what includes, what doesn't include. So it just creates a very huge tentative environment, uncertain environment. But I think that's what the individual likes. So I guess we have to get used to it, and he has power. But my take on this is that it's not negative for Indian pharma companies because Indian pharma is largely generic, and US cannot afford to put any tariff on generic drugs. It is mainly meant for branded, patented drugs, where India is very, very small. It could be, less than 10% for some of the companies, not even all the companies. So I do believe that, and when the details come out, you will know that probably that may not be also covered. So, and there will be way arounds and all. So I don't think it is negative for India or Indian pharma company per se.
I think what is more negative is their continued onslaught, right? Every day it's something or the other. Last week it was H1B, now it is pharma, and you know that something new is going to keep coming. In that sense, do you think the market is bracing for what comes next and is unable to find its feet?
Not really. I think, see, it's not, I mean, I don't read it as a targeting against India or say, but it is basically, he's been saying this, how he wants to bring back manufacturing to US. And so it is also a lot of things. Why, my own view is that, why you want to do through Twitter is that you want to just address your voter base, that you are, you want to be seemingly taking some actions against, which says that, I'm making America great again. But the far more consequences could be far more deeper, and it actually might not be really what intended consequences are. And in fact, I feel that if they get implemented, US will have a huge inflation. But I'm sure, hence, like in H1B case, visa case, first they just released the issue, and then they came out and say, look, it does not apply to the stock of the H1B visa, only to the new visas and all. And I'm sure there could be some again tweaks around going forward. So point is that I think it's just to be done, in my opinion, being done, in my opinion, to address their own vote base and say that I'm doing something. But fact is that, in India is doing only generic medicines, which I think is by and large fine. I don't think it'll get impacted.
Buy into pharma stocks today as this panic sets in. Is there a contrarian trade there, Vikas?
Absolutely. I mean, I don't see any reason why, you should not buy, depending on your research and view on this. But we are positive on pharma names, and we've been holding, and we have not changed anything, in our portfolio. And, like how we saw in IT, first reaction was negative and then most ITs recovered. So I think, as the first reaction always is negative in markets, and then you will see slow recovery happening.
I'm just trying to understand if you have that same view as far as IT is concerned. Because even when the H1B visa issue came up, the commentary was that a lot of Indian IT companies have already weaned off H1B. They don't have that much dependence anymore, etc., etc. Now, Accenture's results, which came in yesterday, though better than expected, don't seem to give confidence that the macro environment's looking up. How do you see it as an impact or a head start for Indian IT companies ahead of the results?
So see, Indian IT companies, there are two sets of Indian IT companies, and I think that is where I think the large IT companies and the mid-sized IT companies. Large IT companies are going through in a process of, building a lot of capabilities as far as the AI and, related fields are concerned. And as that happens, it might take some time, but also they will save some cost. But if you see order book or order wins of most IT companies has been very, very decent. So I don't think while there's, given their basis, you can't have very large sort of growth coming through any which way. So the right way to look at, in my opinion, IT company, mid-sized IT companies will do well. And every time there's a technology transformation or transition happens, you find new set of companies doing very well. For example, in 2009 or post-2000 global financial crisis, in 2009 to next 10 years, I mean, companies like Persistent, HCL Technology, LTTI, LTTS, Mindtree, they were minnows, and they became, 10 to 15x, 20x, 25x in their journey. So every time in this cycle also, newer, while some existing companies will remain around, but newer companies might, or smaller companies might benefit far more. And hence, those are the companies to look at. Having said that, IT services at a global level, it's only going to grow. It's not going down because of AI-related technologies.
Any of these minnows that you've identified, Vikas?
Would love to not comment on stocks, please.
Okay, no, just in the sense of whether there's enough potential there in the Indian space. The sense seems to be that India has missed out on the AI race completely, and which is the reason that our markets have stayed out of the global party as well. Have you seen any such companies that are there on the radar, or they're not available at all?
See, all these people who were saying, forget that, US ecosystem is very old. In India, we've started building reasonably good startup ecosystem meaningfully in last 10 years only. And I have zero doubt in my mind that India will have, in next 10 years, many, many good companies in the AI space, in the technology space, which will be world leading. I have zero doubt on that. It could be 10 years, 15 years, but A lot of companies are being incubated. Think about it. Who thought Zoho could be a company based out of India and can, cater to the global demand? Now, nobody gave a chance, but they were being created when nobody was paying attention to them. And everybody was only barking on Indian IT services space that is not doing well. So I think, again, one can look at, Indian IT services has served Indian economy very well. We have got $200 billion plus of forex reserve thanks to them and a lot of employment. So every economy, every market, every nation has its own journey and to think. So I don't think I will look at with our past with a lot of pessimism, but I look at with our future with a lot of optimism, saying that the things are changing. There are lots of companies being incubated in startup space in early stage, which will take lead into AI and related fields.
Why do you think the market has not reacted very positively or enthusiastically to the GST cuts?
Now, look, again, a couple of things. I think markets have been consolidating in a range for last 6, 7, 8 months. And I would say that's an opportunity because largely getting clouded by the ongoing, this global and everyday uncertainty and news flow. And according to me, if you see not only GST cut, we have had interest rate cut, we have liquidity infusion, we have had income tax cut, we have had GST cut. So all those things are benefiting Indian economy, despite everybody calling out that earnings will slow down. Earnings have been holding on very well, despite everybody's sort of calling out markets will deep correct. Markets have not corrected. So, in my opinion, when everybody I'm sure on your channel also every day you hear people saying markets will fall, valuations are expensive, and despite that markets are not falling. So given this, it is these cuts, it is these boosters which are helping market even hold the ground. And as I think this environment settles down, I do believe, I am reasonably convinced that markets will take a lead in next 6 to 8 months.
6 to 8 months. Well, at least calendar year 25 seems to be a washout. Hopefully we end the calendar year better.
You never know.
Yeah?
Never try to, you never know, we might have a great Diwali. I mean, markets tend to surprise always, right?
True.
Who thought that market will bottom out in April and rally from there? But it did, right?
Yeah, maybe we'll have a great Diwali. Let's hope for that as we're in the middle of this festive season that things do perk up. Thank you so much, Vikas. Always a pleasure to speak with you, Vikas Khemani there. All right, some of the stories that we've been tracking, and a significant one is what's happening with Tata Motors. Now, this big cyber attack on JLR could see signs of recovery. They have told NDTV Profit that key sections of their digital infrastructure are gradually coming back online. That's possibly the reason that you have a bounce back with Tata Motors today. Danish is bringing us all the latest details from JLR.
Well, things are slowly limping back to normalcy for Tata Sons' own luxury car maker JLR. Well, the company suffered through a cyber attack, which was reported on 2nd of September. And since then, the company has been doing efforts to restore its systems, and twice it has been unlucky. But now, the company showed that from 1st of October, all the systems will be up and running and the production will also restart. Well, JLR told NDTV Profit that it is doing all the efforts to ensure that everything is back to normal soon. They told NDTV Profit that a particular financial system is up and running again, by which the company is now able to clear the backlog of vendors and other stakeholders. Similarly, this particular system is again restarted, and through this the company is also able to sell and register cars. And let me tell you that this was one of the primary reasons how we came to know that there was a cyber attack incident at JLR, as the company was unable to sell cars in the past few weeks. But now, all in all, if we see, sources have told NDTV Profit that from 1st of October, all the situations and all the systems will be up and running at JLR. And even right now, certain systems and certain IT infrastructure has been restarted, and the company is sure that in the coming few weeks, the things will get back to normal and the JLR will be able to sell its cars and manufacture its cars as this was able to do a few weeks ago.
Thank you so much for that, Danish. All right, now for our special segment and the conversation on the disruptors this week. Launched in 2007, Ixigo is one of India's earliest online travel platforms that use technology to change the way we travel. I sat down with founders and IIT graduates Alok Bajpai and Rajneesh Kumar to talk about their story on the disruptors. Listen in to a slice of that conversation. So paint us the picture of what's happening in 2007 when Ixigo is beginning as an idea. What is the thought? What is the concept?
Well, 1 year even before that, right,
we are having these late night conversations, Nish and I, about the fact that, you know, it's probably the best time to go back to India and do something, given that, and we were working in Europe together, so just a little bit of background, both of us went to IIT, we were wingmates in hostel, rooms next to each other, and then got our first job break at the same company, which was Amadeus in Europe, in travel tech, were flatmates there. And then I went to B school, you know, wanted to come back to India post B school because I didn't go because I didn't have the money, so I stayed back.
You still landed up at Amadeus.
So I think it was around that time, and we had watched the Steve Jobs commencement speech, and you know, I'd seen Swades, so all those triggers were there. But I think we really wanted to come back and do something here, given that aviation had started to boom. Online travel was just getting started. There were a few OTAs that had started, but also because we felt that, you know, like if we wanted to use the best parts of our lives to build something great, and that was the best time to start. We were like 20, early 20s. 25, 20, you know, 25 years old at that time.
One second, let me paint this picture. You're 25, you work for a multinational, you're living in the south of France.
Yes.
And you're not liking it. You want to come back to India and work harder.
Yeah, I mean, we, in fact, you know, when we started working there, we realized that legally it was, you know, not allowed to work more than 35 hours a week. Yeah. And that was such a bummer for us. And you know, when I asked my boss for a permission to come on a weekend, he got very upset, and he said that, you know, why do you want to do that? Like, go and enjoy at the beach on the weekend. But we still insisted, and we were eventually able to get a special permission.
You know, आप वो Indians हो जो सबका नाम खराब करते हैं, which is why they protest against immigrants taking jobs. You are the guys who go there and say, I want to come on a weekend and spoil it for everyone else.
Yeah, but we saw, like, you know, what was good about that place was that, you know, we saw that there are people who had that work-life balance that they were living for. And I think everybody has the right to kind of choose what they want. But for us, it was just, you know, too early to kind of get into that phase. Like, we just thought that we probably arrived there like 2 decades earlier than we should have. And it kind of disillusioned us a little bit. But I think, you know, those were some of the reasons. One was this whole thing about doing something new in life, like something that could impact like millions of lives, challenging the status quo that we were living in. And obviously, you know, in the backdrop of an opportunity or an idea that you see that, you know, back there in India, travel was booming. There were like lots of OTAs and new airlines that were kind of forming up. And travel itself was something that we were really passionate about. We used to travel a lot, even when we were in Europe. And so we thought, you know, all of this together was it all kind of was brewing up, right? And it had to happen. So we said, okay, that's it, you know.
So the kernel of the idea starts with a B2B platform. Tell us what the kernel of the idea starts from before you go mass consumer.
Yeah, so actually when we started and we named it Travenues, because travel plus avenues, we were still exploring multiple ideas. But
and the French influence was still there.
And the French influence was still there, so Le Travenues. But we actually zeroed down on an opportunity which today is known as meta search, but essentially involves helping travelers find where the best deals are. And this is the desktop era of the internet. So you're talking 2007, 10 to 12 million internet users in India. People are opening multiple browser windows or tabs to do the same search on 3 OTAs, 2 airlines, you know, and all compare. Of that, and comparing. So we built this meta search engine that would, you know, crawl or use their APIs to give you where the best deals were, and then we would lead you to them to buy. So that was the initial idea when we started. In 2007, we launched that in June. And by the way, we didn't have a lot of capital, so both of us were nearly broke when we started the company. In fact, we were in debt, probably. Yeah, I still had my B school loan to pay off. It still had some family obligations to pay off. And I think in hindsight, you know, it was not a decision that we ran an Excel sheet on and felt you know, good about. Yeah. But we were very passionate about whatever we were doing, and we were giving it our entire sort of heart and soul in building it out. And we saw early growth primarily because of word of mouth, because there was nothing like that. I mean, you would...
So Skyscanner, etc. were not opportunities at that time?
I think at that time, we were the leading meta search in India. We were the first and the leading meta search in India, for many years from there until we actually found our next big growth avenue in 2013.
But between 2000, so when I look back at your history, you have not one but two big crises that could have put your business into extinction.
Well, more than two, I guess. A lot more than two.
So two big ones which come to mind. One is you start right before the GFC, global financial crisis. You do a pivot and then you have COVID come in. So I don't know about the other crisis. We'll learn about it through this interview. But you start off and then the global financial crisis hits. How does that work?
That was a crazy story. So I think we were 24 hours away from signing a term sheet. No, signing actually the definitive agreements and probably wiring the money in the bank, because all the other stuff was done already. And by that time, we were in that phase where you are thinking that, oh, you know what, you've made it big, you've raised a big round, and you are in that growth phase. So we kind of spend a lot of money on marketing, and we were almost on the verge of kind of running out of cash. And then the GFC happened. So one night before we were supposed to get the money in the bank, we get a phone call and the deal was off because Lehman Brothers had collapsed. And we just discussed, and then we said, what do we do now? So next day we went to the office. And to be honest, we had no idea of how to deal with that kind of a crisis, because it was the first time something like this had happened to us. So one of the things that we thought was that the best thing to do in a situation like this would be to be completely transparent with the team and just tell them what's going to happen. So we went to the team and we told, here's the situation. We'll probably run out of money in 2 to 3 months. And so we'll have to let go of at least half of you. And the team really appreciated the fact that they just thought that, we had answers to all the questions, but that's what people always think about founders, but sometimes they don't. And, when they saw us that vulnerable, that's when they kind of, rose up to the occasion, and they came back to us and said that, you know what, you don't have to do that. Give us some time and we'll figure out something.
Wow.
So
how many, what's the size of the team at this point?
About 23 people.
20, yeah, less than 25 people.
23, 24 people. So there's this engineer who was our junior from ITK. So he went back into a room with the rest of the people and then came out 30 minutes later and said that, you know what, we've all decided to take 50% salary cut to survive through this. So you don't have to let go of anybody. We'll go through this together and, we'll survive this.
And I remember we drew the financials on the whiteboard and said, this is what it looks like today. This is our burn. If we bring this number down, if we increase our revenue, we survive and make it on the other side. And the environment in that room was, let's find a way to do it. Not that let's give up and go back home. And I think that moment changed everything for us. And it has become our defining moment in all crises to come, ever.
And we learned a very important lesson, which is that bad news should always travel faster than good news in both directions, whether it is with your employees or with your stakeholders and investors. It just kind of, sets expectations really right. And I think builds a lot of trust. From that point onwards, I think we had this relationship of trust with our people that was much more stronger.
बहू, आज जो कुछ हमारे पास है सब इनकी देन है। एक अगरबत्ती की दुकान से इतना बड़ा बिजनेस खड़ा किया है।
प्रणाम दादाजी।
दादाजी? ये तो पुष्पा अगरपति के मालिक हैं घनश्याम दास। इनके स्टॉक्स में इन्वेस्ट किया था, इसीलिए आज ये सब कुछ है।
जो आगे की सोचते हैं ग्रो करते हैं। डाउनलोड ग्रो फॉर स्टॉक्स, म्यूचुअल फंड्स एंड IPO।
और ये कौन सी कंपनी के मालिक हैं?
ये तो दादाजी हैं।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
One night before we were supposed to get the money in the bank, we get a phone call and the deal was off. We were in the middle of COVID. We were in a situation where we did the math that at zero revenue, we could not survive more than 3 to 4 months.
You're 25, you work for a multinational, you're living in the south of France.
Yes.
And you're not liking it. You want to come back to India and work harder.
We realized that legally it was, not allowed to work more than 35 hours a week. When I asked my boss for a permission to come on a weekend, he got very upset.
तो आप वो Indians हो जो सबका नाम खराब करते हैं. Tell us what the kernel of the idea starts from before you go mass consumer.
People are opening multiple browser windows or tabs to do the same search on 3 OTAs, 2 airlines. So we built this meta search engine that would, crawl or use their APIs to give you where the best deals were, and then we would lead you to them to buy.
You almost finish each other's sentences. So that chemistry is really there. One thing that really annoys you.
Hard to, have a discussion that's not very objective because he's the one who's more data, numbers and objective driven at times. Sometimes, I have to control his positivity about certain things. Hold on, this might not.
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो NDTV सबसे पहले जिक्र में आता है।
मैं आपका बात से
Hi, thanks so much for joining in. Happy Friday to you. This is Ask Profit on NDTV Profit. My name is Alex Matthew, and with me is Mahima Vachajani. Morning, Mahima.
Morning,
and happy
Alex.
Friday to you.
Happy Friday to you as well.
I wonder what the markets think about that, because it's been a little bit of a bleak or a dull sort of a week, and we're heading into the 7th day of declines for the benchmark Nifty 50. And indeed, this is the tone and tenor that we've seen all through the week, and even heading into the last week, right? But we are off the low point of the day intraday. In fact, that is more visible at the broader end of the spectrum. So today you had quite the precipitous drop shortly after the start of trade for the benchmark, and there you see, so the mid-cap index seeing that plunge and then it's recovered quite considerably. It's still down about 0.8%. Small-cap index also down over 1% at this point, but having recovered quite sharply. In fact, for the small-cap index, you have a recovery of about 0.6% from the low point of the day. So let's pull up the market breadth. I would hazard a guess to say that the gap would have narrowed. Oh, okay. So it's actually yes, it has narrowed from the peak, but it's still a pretty wide gap between the advances and the declines. And really that should showcase some of the mood at the end of the week, because there is negative news that has come through, sentimental negative more than anything else, one might argue, in a couple of sectors. So one, Accenture is has posted its results overnight, and that's looked at as an indicator as to how IT is going to pan out. And really, the jury is mixed on this one, because on the one hand, you have its financial services revenue, which has grown about 12%, and that is where most of the IT companies in India play. And so that is a healthy and decent growth. So that could be a positive. On the other end, they have actually reduced their guidance, or their guidance has gotten affected, and that seems to be having a bearing. Of course, one might also argue that that guidance is reflecting the effect of a loss of federal revenue in the United States for Accenture, and that is not a place that IT companies in India play in at all. So we've spoken to a few people so far today, and the view is pretty stark in certain situations. Some people are calling for a reinvention of IT, but really that's not a situation that will play out over the next week or before the earnings season kicks in. So really, that is the pressure. And the other, of course, is the pharmaceutical space.
Yes, absolutely, because US President Donald Trump has come out and said that there will be 100% tariff on some branded and patented pharma products, and that is putting pressure on the Nifty Pharma, down about 1.8%. And broader end of spectrum also, stock-specific moves coming in, where Aarti Drugs, Wockhardt, Kaplan Point, Polymedicure, all of these counters are seeing significant amount of profit booking downtake. The Nifty Pharma completely in the red, and those are the counters that you're seeing. Natco Pharma, Biocon, Laurus Labs, Zydus Life, all in the red, down by about 3% odd. So that's with regards to where the pharma space is concerned. But the other space that we've always been talking about is the renewable energy. And Sattvic Green Energy is the company that is in focus today on the back of its listing, down by about 0.3 odd%, and this is largely because of the market sentiment right now. But to discuss as to what is the way forward for this particular counter, we are joined by Manik Garg, MD of Sattvic Green Energy, and Prashant Mathur, CEO of Sattvic Energy, joining us now. Welcome to both of you, gentlemen, and a very good morning, and thank you so much for joining in. Mr. Garg, I'll take up the first question with you. A lot of companies have been, foraying into this sector, foraying into making of solar modules. Just want to understand as to how is the competition looking like, and going forward, how do you think the demand and supply will pan out and then put pressure on your margins and profitability?
Right. Thank you so much for inviting us to the show, and thank you for your question. So, as far as Sattvic Green Energy is concerned, I think our past has shown the fact that how we have grown, and I think the same momentum is what we believe that we will carry on. And in terms of our solar module capacity, we are at 4.8 gigawatt of annual manufacturing capacity, and with the new expansion plans here, we are going to add another 4 gigawatt of module and 4.8 gigawatt of solar cell manufacturing in FY27. So the overall, if you see the overall renewable energy industry, it is just at the realm of its starting. We see that there are so many new projects that are coming up. India is planning to install upwards of 50 gigawatt of DC solar power projects this year, and the momentum is going to keep on increasing with the increased utilization of electric vehicles, green hydrogen adoption, as well as the solar pumps and the rooftop solar schemes that have been devised by the central government. So we personally at Sattvic Green Energy don't see any demand slump in the near future, also given our strong order book.
What does that order book stand at, if you can give us a number? Mr. Mathur, I'll come to you on this one. And gentlemen, first of all, congratulations for a successful listing. I also do want to understand the customer base that you have, right? Is it primarily domestic, and do you see that changing at all?
Good morning, and thank you very much for your question. And thanks, we had a great listing, and looking forward. So our current order book is 4.6 gigawatt, which translates to close to about 5,500 crores. And it's a rolling order book. So the order book orders get executed and added, and it's a 9 to 12 months order book. Apart from that, we also have spot orders which we execute, and that also is about 30% of our sales. So we have a very strong order book. Primarily, the order book is from the domestic sector. International is 1 or 2% of our sales, so we are absolutely not affected by the international market conditions and the tariff situation going on. So we have a very strong momentum going on in the industry, and we will see it continuing to grow as the country is growing and the energy demand is growing at a much faster pace.
And any one of you can take this. Would you agree that the key aspect to watch for your company is going to be the inputs? Because there is a view, or there is a perception that you are dependent on certain inputs, and that can be a problem area for you to fix down the line. Would you look to increasingly localize that sourcing, and how will that trajectory move?
So as you would have noticed that in last year the industry has moved from monoperk technology to TOPCon technology, and previously monoperk and P-type technology has been prevalent for several years. So we had the ancillaries and the ecosystem built for that technology, but last year this movement happened towards the end, TOPCon, which is a different technology. So the ancillaries are getting built over a period of time, capacities are getting built. So last few months also a lot of ancillaries have also expanded their capacities. So the primary dependency has been on the solar cells, and like we are expanding into backward integrating into solar cell manufacturing, so are other manufacturers as well. So, and we have the wafer ingot, also the policy coming very soon from the government. The draft policy has already been released. So the clear vision from the government is backward integrating and creating a solar supply chain entirely in India. But obviously that cannot happen in a day or in a year. It takes time to build that ecosystem.
So, apologies for cutting you off. I do want to understand that though. On the backward integration, apologies for cutting you off. In the interest of time, I do want to understand. You mentioned wafers and ingots. I'm just wondering what the plan is there. How soon will your company perhaps get into the manufacture of that?
Yeah, so if you would have seen the plans which we talked in our last interview as well, is that we have identified land in Madhya Pradesh where we have plans to set up 10 gigawatt of ingot, wafer and cell manufacturing. That is supposed to be currently at the drawing stage because the policy is not yet clear on when it is coming, but the first date which has been in the draft is in 2028. So, and once this policy comes or there is a clear intent that this policy is on the horizon, we have backward integration already in our plans, and it could come as soon as in 3 years horizon.
So 3-year horizon. Mr. Garg as well as Mr. Mathur, thank you so much for taking the time this morning, and I understand that there's only so much that we can speak about today. We look forward to speaking after your first results that you post, and wish you all the best. All right, let's talk about another listing, and this is in fact GK Energy. It has had a better listing pop at 12% or so. We spoke with the management. In fact, Gopal Kabra, who is the chairman and managing director, spoke to us earlier. Here's what he had to say.
What is the strategy that you're looking at post-listing?
See, we will continue the strategy what we have been doing till now. We implement the decentralized solar system because that is the need of the hour, and it's going to be required for the continuously more decade. And we believe this strategy, what we have, the robust strategy, very specific, good product, proper service and robust product delivery. we will be doing the same strategy what we have been doing it, and if needed, we will definitely improve in the more strategical way what is required.
Mr. Kabra, just want to understand, you've come up with a 464 crore of issue size, and most of it is, fresh issue that we are looking at, which would be utilized towards working capital requirements of the business. Yeah. So just want to understand on that part, what's the kind of improvement that we look in terms of how the financials will shape up going forward?
See, financial is going to be shape up more better way because the order visibility and everything is very fantastic. Right, and with the utilization of working capital, because we have the majority of the money is going for the in company for the working capital. Being asset light, we would require the this working capital for the better growth, and we will be able to give the more positive output from this working capital what we have just raised right now.
So if I just want to get a guidance in terms of FY26 or FY27, we've seen that net working capital days, now that has increased about 90 days or also from 51. So what's the kind of trajectory that we can expect forward? Do you see this reduction in number taking place?
Number would be more or less going to remain on the same side. And if you look towards the absolute number, then my data receivable has been decreased year on year. In spite of we have growth from the 285 to 411 to 1094. So my receivable days has been reduced, and because we want to make the more profit, so we have taken the call for the early payment with the vendor. So that's why you are able to see that net working day to the 90 days.
Right, so that was the management of GK Energy. A good, decent listing is what we can say. 12% of premium listing is what we are seeing right now. An interesting space also to watch out for. The company is basically into EPC services of solar-powered agriculture water pump systems. So peers like Shakti Pump will be where you can look at in terms of where valuations also stand. But moving on to your queries for the day. In fact, we're joined by Sameer Dalal of Natwarlal & Sons Stockbrokers, and also Gaurav Vissa, Senior Vice President at InCred Equities, joining us now. Welcome to both of you and a very good morning to the both of you. I'll take up the first question, which is from Mohit, who's writing us from Ludhiana, asking about TCS. He's got about 50 odd shares, bought at 3166 a piece. Wants to know if he can accumulate more. Time horizon is the next 3 months. Sameer, I'll specifically come to you on this one. As Alex was mentioning earlier in the show today, that mixed cues have come in from the Accenture earnings. What is your reading, first of all, with regards to where Accenture earnings stand? Because that will flow through in these IT companies. And then TCS for the next 3 years, what's the view like?
So the Accenture earnings were pretty much in line, right? When you talk about everything, guidance also 4 to 7%. You see, all IT companies have been growing more or less at this kind of single digits, mid-single digits to low single digits. And until we see a big thrust on spends, which I don't see happening, given the fact that AI is where everyone seems to be wanting to deploy more of their investments to reduce their own operation costs and things like that. Until Indian companies come into the AI fold and start pushing that more aggressively, I think you're going to see tepid growth numbers. I'm not saying the growth is not going to be there, it's just going to be low. These companies are sitting on huge order books, including TCS. They won huge orders over the last year and a half, which will obviously have to be executed, and they will probably start the execution. So you will see numbers coming through, but like I said, low. Now, what happens is, what we've been saying for a while, is low single-digit top-line growth does not justify PE multiples of 25. We need growth to accelerate closer to 11, 12%. And if that can happen, then the stocks can justify this price to earnings growth of 2, PEG of 2, and the stocks can remain at this. But now what's also happened is the stocks have started coming off quite a bit. I think TCS is down from 4,200 high to 2,900. Infosys from 1,900 to, I think it's closer to 1,640 order levels. So you've seen stocks coming off, and the probability is that now they will start slowly bottoming out. So if you have a 3-year horizon, and I honestly do believe that growth will come back eventually, accumulated slowly over the next maybe year. I think you may even see 2,800 or 2,700 on a TCS, or a lower price on Infosys or HCL going to 1,350. I don't rule any of that out. So accumulated slowly over the next year. Be patient, because your returns are going to be back-ended, not front-loaded. So you could probably get a 15% CAGR if you get the right price and at the right time. and stay invested for the 3-year horizon. But in the short term, I think the stocks are going to remain like this, sideways to downwards.
All right. So a related question coming through, I think, from Dheeraj, who's calling us from Hyderabad. He's a lucky guy who gets to call, I think, every day. Somehow he's got the fastest finger first. Dheeraj, morning. What's your question?
Sir, good morning, sir. My query is regarding HCL Tech, sir.
Okay.
I'm holding 150 shares at 1460 rupees, sir.
Okay.
1458 rupees. So I would like to hold it for 1 year time frame, sir.
Okay.
I would like to know Sameer Dalal sir's view on it, so that I should add on dips for furthermore, like upside. How much upside could I expect from this stock? Particular stock, sir, in one particular year, sir.
I got your question. I got your question, Dheeraj. We've just spoken about the IT space, so let me just head back to him and ask him just to extend that view to HCL Tech, and perhaps we can do a quick one on this one, Sameer, since you've already laid the context.
Yeah, so HCL Tech is probably one of the few companies that has been growing at a slightly better clip than most of the other IT. But still, like I said, I still think there is an issue with the operations of Indian IT companies, and that change towards more focus towards the differentiated business model needs to come through. Now, since he has a 1 year view, it's difficult for me to say whether we'll get that 1450 or 1600 or 1500 price in the next year, but you will see volatility. So there will be some positive trigger which will come, stock will probably rally on that. So if it corrects closer, my advice to the callers, if it corrects closer to 1350, add on some. You will get some positive news. The stock will be range bound, so you will get the move up. It's not only going to be a slide down. You can definitely get 1458, which is your purchase price. So on corrections, add on, and if it goes closer to 1500, I would advise you to book your profit.
All right, so that's with regards to where HCL Tech stands. We've got our next question from Bala Chandra, who's writing us and asking about Trent. He has about 1 lakh to invest in Trent for the next 6 months and wants to know if this is the right time to make an entry. Gaurav, very sorry for keeping you waiting. I'll take this up with you. I was just seeing Trent today. Since its inclusion in the Nifty, it's down 43%, and year to date also, it's the top loser on the Nifty 50, down 33%. Do you think these are the current levels to make an entry, and from here on you can expect a bounce back?
Hi, good morning, and thank you for inviting the show. So as far as trend is concerned, on daily and the weekly charts, it is forming lower tops, lower bottom, which is characteristic of a downtrend. And if the horizon is small, then I think, and if you're looking for a positional trading sortie, then I think one should avoid. If you look at the current week's candle, it's forming a Marubozu candle, a weak Marubozu candle, and the volume participation is more on the sell side. So in my opinion, this is not the right time to have a positional trade. If somebody has a 2-year, 3-year horizon, that's a different picture. But on a very immediate basis, or maybe 3 to 6 months, I would avoid.
It is a view on Trent. Okay, we've got our next caller. Vikas is calling us from Pune. Vikas Jain. Vikas, thanks so much for calling us. How can we help you today?
Hi, sir. Good morning.
Good morning.
So I have around 2,000 shares of Regal Resources.
Right.
I got it during the IPO allotment only.
Okay.
I have seen significant amount of gains and then losses on this now. So I wanted to understand, should I keep it, or is there anything fundamental that I'm missing?
Okay. I'm going to try and get your view, and I'm not sure if Sameer is tracking this company. Sameer, are you? And would you have a view on whether to hold on? No. Unfortunately. So, and since Regal is a relatively new listing, I'm guessing that there's not going to be a view, Gaurav, on the charts either.
Correct.
Okay. Vikas, unfortunately, we can't get your view, therefore, on this one. But then, is there any other stock that you would like to know about?
Yeah, in that case, I would like to know about Bajaj Finance.
Okay.
I have it around in my portfolio for about a year and a half now. And I'm having good amount of profits on that. So should I wait and keep it in my portfolio, or should I book the profit?
Okay. Okay. And you've got a long-term view on this one?
Yeah.
Okay. Sameer, what's the view on Bajaj Finance? Because the thesis, of course, is that if consumption picks up, the opportunity for NBFCs exists, and more than anything else, in a falling rate environment, one would expect that with cost of funds lowering for these NBFCs, the margins should improve.
So, we likely to say that margins should improve in a falling rate cycle, but you got to realize that all future loans that they give out will now have to be at the lower rate. So it's not necessary that you get a big spread increase or any of that. I think that is a lot of wishful thinking that the market puts into place. Now, let's talk specifically about Bajaj Finance. Great franchise, great business, growing well. But they become very large in size, right? So I'm not saying because they're large, it's a problem. I'm saying because they're large, growth becomes a slight bit of a issue. To grow at the higher rates of 25-30%, which they've historically grown at, becomes a tougher challenge. So when growth slows down a bit, then the multiple assigned for the company should also come down. Of course, it has come down from the 10 times to the close to 6.5, 7 times, but on price to book. But I still believe that is a bit on the higher side. I think it could very well move closer towards 5 over the next couple of years. So what if you're going to get valuation slight negativity in the rating cycle and growth also slowing down, it becomes difficult for me to say you're going to get multi-bagger returns or the stock is going to be one of the top performers in the space. As much as I like the company and I think it's something one can stay invested in, if I have finite money, which most people have, I would look for some other opportunity where I could probably get more upside. So for me, I personally don't own any Bajaj Finance. I've sold out and bought some other things. I would advise the similar thing, but then it's a fantastic company. If you hold on, I'm sure you can get 10-12% CAGR return over a period of time. But it's a tough call to make if you want to sell out of Bajaj Finance, but I would advise to sell out.
Flashes on the bottom of the screen. This is breaking news, ladies and gentlemen. I would invite you to keep a tab on this on an ongoing basis when you are looking at the channel, because that's where news breaks first. The Supreme Court has junked, in fact, the Bhushan Steel argument, and it's upheld JSW's acquisition of Bhushan Power. It has junked the previous order, rather, or reversing JSW acquisition of Bhushan Power. Of course, what occurred was that there was an order that reversed that acquisition, and this is a pretty significant acquisition that took place several years back. But let me not try and give you the context. In fact, to do that, let me bring in our editor of Banking and Economy. We've got Vishwanath Nair joining in to tell you about what this deal was, what the arguments on both sides were. Vishy, tell us.
Right, Alex. So there was this order that was passed in May of 2025 this year, where there was an observation made that the acquisition of Bhushan Power and Steel was way too delayed, and therefore there were certain process inaccuracies that were pointed out in that order. And the Supreme Court at that point in time had held that the acquisition was to be held null and void. Essentially, Bhushan Power and Steel would then be liquidated under the Insolvency and Bankruptcy Code. That was the original order as of May 2025. Of course, since then, there's been a lot of debate about whether the Supreme Court can come in and reverse a transaction which is 6 years old. Remember that the original acquisition actually happened in 2019, 2020. So there was no way that the Supreme Court could have actually reversed that entire transaction because the acquisition was completed and the operations were ongoing. So today, of course, the bench led by the Chief Justice of India has pointed out that the COC's wisdom in this matter, the Committee of Creditors' wisdom in this matter cannot be interfered with. The delays in the process were not because of the COC's fault or JSW Steel's fault. It was actually a process issue in terms of the timelines that it takes to get certain approvals in order. So to reject this entire acquisition or to reverse this entire transaction would be not possible. And that's what exactly the Supreme Court has held, that this transaction can continue as is. That's a big relief for JSW Steel, which was, of course, under pressure since May, considering the future of this transaction. Remember, for JSW Steel, this is a sizable asset, Bhushan Power and Steel, that they had acquired under insolvency, and that's why this order will come as a major relief for them.
See, the other aspect, of course, and this is certainly a relief for JSW Steel, but there was also investment that was taken up by JSW Steel post the acquisition of those assets, wasn't there? There was capex that was spent to create ability to produce more.
That's right. So, as we know, Bhushan Power and Steel was an insolvent company. It had been under pressure, under financial stress for a fairly long time. It was actually part of the RBI's list of 12 companies that it had highlighted back in June of 2017 for immediate insolvency proceedings. So the fact that there was financial stress was obvious. The production capability of that unit was under some amount of pressure because of these financial liabilities. And JSW Steel, after coming in, of course, the money that they paid for this account would have gone entirely to the bankers who were part of this deal. So for the company, of course, they've spent some money to ensure that the production comes back to normalcy. So these were arguments actually that were made by JSW Steel that in these 5-6 years, we've actually spent a lot of money to ensure that this company remains productive and adds to our overall revenue. And that's why it was an important one. I think, if I'm not wrong, the number was close to 20% of the overall steel production revenue that was coming in from this one unit. So it was a sizable asset for JSW Steel, and therefore this order will help them stabilize that. Plus, also, of course, it also helps put to rest any questions that might be raised about the effectiveness of the Insolvency and Bankruptcy Code.
I want to ask you about that, Vishwanath. In fact, just to set the context here, because this is, if you go back to the introduction of the Insolvency and Bankruptcy Act and the process of insolvency, which wasn't the case for the longest time, and then it came through. This is one of the largest transactions that took place through that mode or through that route. And as we know, in legal proceedings, something like this would have created a legal precedent. So the question would then arise whether that would affect any of the other deals that have so far taken place.
No, you're absolutely right. So there was definitely that question whether this affects the effectiveness or the efficacy of the Insolvency and Bankruptcy Code. So that, obviously, that question has now been put to rest. Essentially, this was also causing some amount of anxiety amongst investors who were looking at other assets under the Insolvency and Bankruptcy Code, which now they can be free of any fear that, 5 years down the line after they've acquired the asset, suddenly the transaction is null and void. So that worry goes away from potential investors, prospective investors. In fact, the bankers had joined JSW Steel in the appeal primarily because they also don't want to lose out on any transactions that they've successfully completed under the IBC.
Samir, if you've been listening to this conversation and you've seen the update, I'm assuming that you can also see the flashes on your screen. It is a significant development, of course, in this case that we've been tracking very closely, but JSW Steel, it is a very positive development, one would argue, because this should put to rest any further challenges. Ultimately, this is the apex court. What is your opinion on the outcome today?
So honestly, it's a very, very important decision, and I'm glad it's come the way it has, because after 5 years of someone taking over a plant, running it, putting in the effort, capex, everything being done to go ahead and reverse it is quite illogical. And like you rightfully, your team was discussing, it sets a very bad precedence, right, for all future takeovers from IBC. I think IBC has probably been one of the best things that have come to India, where assets can be monetized and, stronger hands can take them over and run these operations and make them profitable again. And, recoveries can happen. So it's a very significant, very positive thing. It's sad that the previous judge, whoever ruled against JSW, could pass such a ruling. But thankfully, logic has prevailed.
Aditya Velekar, Senior Research Analyst, Metals at Axis Securities, joining us as well. Aditya, you've obviously read the latest on the screen, perhaps, and you know the context. What does this mean specifically for JSW Steel? Does this change anything from your perspective as a rating on the stock? And what's your view?
Yeah, it removes basically the overhang which was on the stock because of these proceedings. So Bhushan Steel contributes almost 4.5 million to the consolidated production capacity of 35.7 million ton of JSW Steel. And this ruling is a kind of relief for JSW. And this actually relieves the overhang on the stock, and the long pending resolution is a welcome thing. So this is positive for the stock.
For the stock. I just want to know what your call on the stock is, and would this be the top pick in your space, or would you at this point prefer other steel companies?
So it's not under our fundamental coverage. We have a soft coverage on JSW Steel, and JSW Steel is definitely fundamentally a robust company. It's going for an expansion, and currently in the steel pack, we like JSW Steel, Tata Steel, and Jindal Steel and Power in this order, because JSW Steel, because of this resolution, the one key overhang is removed, and then it has a good expansion project slide up ahead. And post this monsoon, we expect that some relief in the steel prices is expected. Some upside is there, because as compared to the Chinese import parity prices, domestic steel prices are trading at a 12% discount. So there is some buffer for steel mills to take some hike. So post monsoon, if the construction activity picks up, there is some buffer for overall sector, steel as a sector, to have some upside. So JSW Steel is well placed in this kind of a scenario.
Yes. Aditya, thanks so much for joining us on short notice and for giving us that perspective. Pleasure speaking with you. All right, so ultimately the bottom line is that this is a significant relief for JSW Steel. It is what they were praying for, and it is what the Supreme Court has delivered. But let's get in Aishwarya Patil, who's at the Supreme Court and who's probably heard that ruling. Aishwarya, what did the judge say when they made this pronouncement?
Well, it was preceded in the CJI's court, and the Chief Justice did mention one thing which is very important, and he said that summing up the submissions of both the parties, he said we did not find any merit in the appeals that were made as far as the liquidation process is concerned, and appeals are therefore dismissed. That was the point when it went in favor, of course, of JSW Steel. Supreme Court did junk its previous order reversing JSW Steel's acquisition of Bhushan Power and Steel. Of course, like you mentioned, as we were discussing, it has upheld JSW's acquisition of Bhushan Power. And so 19,350 crore rupees resolution plan for Bhushan Power prevails. It has also junked some of the lenders' plea seeking a share in the company's EBITDA as well. So that's summarizing what happened as far as the Supreme Court's judgment in this particular case, JSW Steel's acquisition of Bhushan Power and Steel is concerned.
Thanks, Aishwarya, for laying the context. We're joined now by Siddharth Luthra, who's Senior Advocate at the Supreme Court. Mr. Luthra, thanks so much for taking the time. I'm just wondering what you made of the verdict and the fact that it prevents the creation of a legal precedence to challenge other cases that might have gone through the insolvency court.
So I think there are two ways to look at it. Firstly, I think the court is sensitive to the workability of the IBC, and that was very important because there were certain concerns arising out of the previous order. So I think it's, to my mind, it's a positive thing. The court has applied its mind. It's created a workable solution, and therefore, going forward, this will be an important judgment, which and interpretation and application of the court and the commercial, and very relevant for the commercial world.
Sir, you mentioned that there were concerns that were addressed and that have been put to rest with regard to the High Court verdict. And of course, not everybody is entirely familiar with the legal proceedings. For the benefit of my viewers, so that they have all of the information here, can you describe a few of these concerns?
Not the High Court verdict, the earlier Supreme Court verdict.
Okay.
Because you remember there was just the Bela Trivedi's decision.
Yes.
And therefore now this has come. It is unprecedented that this kind of a reconsideration happens. But I think it is positive and a positive signal to people, to the workability of the law. Eventually, the whole purpose behind the IBC is apply the law so that even if companies, like one management cannot make a company work, jobs are preserved, people's rights are preserved, lenders' rights are preserved, and the industry continues to function, which is the desire of any nation. In the traditional regime, which used to be a fire seeker, companies used to go down under you would never see any recovery and people would be left holding paper in their hands. Today, the whole attempt is to make the IBC workable. If you look at the working of the IBC over the last decade or so, there have been repeated decisions, and most of them have been focused at making business possible.
Yes.
This, I believe, is one of them.
This is one of them. Mr. Luthra, thanks so much for joining in, for giving us that perspective. Appreciate that you've taken the time. All right, we have to slip into a very quick break. We've got time on the other side to take more of your questions. We've had to take a sidebar, so to speak, for these legal matters. But remember that we're also waiting for the Supreme Court to weigh in on the Vodafone Idea case related to AGR dues, and we'll be tracking that as well. Don't be surprised if that breaks soon. But we'll be back on the other side to take more of your questions. Do stay tuned.
बहू, आज जो कुछ हमारे पास है सब इनकी देन है। एक अगरबत्ती की दुकान से इतना बड़ा बिजनेस खड़ा किया।
प्रणाम दादाजी।
दादाजी, ये तो पुष्पा अगरबत्ती के मालिक हैं, घनश्याम दास। इनके स्टॉक्स में इन्वेस्ट किया था, इसीलिए आज ये सब कुछ है।
जो आगे की सोचते हैं ग्रो करते हैं। डाउनलोड ग्रो फॉर स्टॉक्स, म्यूचुअल फंड्स एंड IPO।
और ये कौन सी कंपनी के मालिक हैं?
ये तो दादाजी हैं।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
गोल्ड प्लस क्लियर ग्लास, कार हो या नियर, सब कुछ दिखे क्लियर।
One night before we were supposed to get the money in the bank, we get a phone call and the deal was off. We were in the middle of COVID. We were in a situation where we did the math that at zero revenue, we could not survive more than 3 to 4 months.
You're 25, you work for a multinational, you're living in the south of France.
Yes.
And you're not liking it. You want to come back to India and work harder.
We realized that legally it was, not allowed to work more than 35 hours a week. When I asked my boss for a permission to come on a weekend, he got very upset.
तो आप वो Indians हो जो सबका नाम खराब करते हैं. Tell us what the kernel of the idea starts from before you go mass consumer.
People are opening multiple browser windows or tabs to do the same search on 3 OTAs, 2 airlines. So we built this meta search engine that would, crawl or use their APIs to give you where the best deals were, and then we would lead you to them to buy.
You almost finish each other's sentences. So that chemistry is really there. One thing that really annoys you.
Hard to, have a discussion that's not very objective, because he's the one who's more data, numbers and objective driven at times. Sometimes, I have to control his positivity about certain things. Hold on, this might not.
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो NDTV सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी सब विदेश जाते हैं। The best app to use is the NDTV app.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life.
Welcome back. You're watching Ask Profit here at NDTV Profit. For viewers who are just tuning in, you can either call us or WhatsApp us on the numbers that are flashing on your screen right now. On this side of the show, we're also joined by Rajesh Bhosle of Angel One joining us now. Rajesh, hi, a very good morning to you. I'll take up our next caller. Dinkar is calling us from Solapur. Dinkar, hi, a very good morning to you. How can we help you today?
Good morning, madam. Very good morning.
Good morning.
Madam, I have 78 shares of Banco India product.
Okay.
And now it is 820 or something.
Okay.
Can I hold or book the profit?
Okay, Dinkar, I got your query. I'll take this up with Rajesh quickly. Rajesh, Banco Products is the counter. Your view with regards to where charts are concerned?
Good morning. And it's a very strong counter. We have already seen a rally from the levels of 600 to 850. Overall chart structure remains positive and we expect the stock to move towards the 4-digit level. So hold on to it.
Hold on is a view. Good morning to you as well, Rajesh. We've got the next question on Whirlpool of India, and this is Ravi from Karnataka. He's bought at a price of 1,342 and he's wondering whether to hold on to this. It's lower than his buy price, of course. I'll come back to you, Rajesh, on the charts. What's the view?
I would suggest to exit. I mean, this stock has been an underperformer and it's struggling to surpass its 200 DMA, and it's currently placed at its support. But if that is broken, then possibly the stock can head towards 1050 levels. So it's likely to continue its underperformance. So exit would be the my suggestion.
Right, so that's with regards to where Whirlpool stands. We've got our next caller. Nishant is calling us from Mumbai. Nishant, hi, a very good morning to you. How can we help you today?
Yes, I wanted to know about the GK IPO. So I got it. So I was thinking to book 60% of profits in the short term and have 40% for the long term, like 1 year. So in the short term, should I book it today or in the next week, and what can be my targets?
Okay, Nishant, I got your question. I'll take this up with Samir. Samir, not sure if you have a view on this listed company. I mean, it got listed today with a 12% premium. Basically into EPC services for solar-powered agricultural pumps is the space it's operating in. So competes with likes of Shakti Pumps. Any view with regards to GK Energy or the space maybe?
So no view on GK Power whatsoever because I've not studied the company at all during the IPO. There are too many IPOs coming, and honestly, it's becoming difficult to track the actively managed, already listed, and no issues coming. But having said that, I think the solar pump space is something that has got a lot of traction with it. I think the entire pump space per se in India has a lot of traction going forward. But solar obviously will get a leg up because it means that you don't have a recurring cost. So obviously that's a space that can do well, but no view on GK Power also.
So I'm going to try. Rajesh, the name of the counter that we're talking about next is Artson Limited, ARTSON. I must confess, not heard of this company before. It was incorporated way back in 1978, apparently, as Artson Engineering. The market capitalization is 800 crore. And wow, my viewer has bought at a price of 10 rupees and so therefore is making 4 lakhs plus on this. Would you suggest getting out of these levels or holding on?
So Alex, I'm not able to get the symbol. Is it trading somewhere around 51 to 52 levels?
It is at 217 levels from what I can see.
I'm not able to get the symbol itself.
I don't blame you. Small request to the viewers that are tuning in and that want their questions answered. Please, as far as possible, refrain from asking questions about companies with a market capitalization less than 1,000 crore. It becomes incredibly difficult to get you a view. And I don't blame the analysts that join onto this show for not having a view on some of these. Let's take the next one. PNB Housing is the name of the counter. And We've got Prakash who's writing in from Chennai. He has bought at levels of 866 and he's wondering whether to stay till levels of about 1,100. Is that possible on the upside? And of course it's possible. At what point do you expect that to come to pass, Rajesh, in the short term?
So what I would suggest is he can hold on to 970 levels. That is a key level to watch out because in the July we had seen a huge gap down opening. So that gap level is somewhere around 970 and that can act as a resistance. So once it comes around 970, we need to recheck if the current positive momentum is still there. If 970 is hold, then possibly the stock can further head towards 1080. If not, exit around 970 levels.
Okay, we've got our next caller. Dheeraj is calling us from Hyderabad. Dheeraj, hi, very good morning to you. I believe you have a question on Coforge.
Yeah, I bought Coforge shares on Monday at 1670.
Okay.
450 shares. I think IT firms are all going down. Should I hold these or can I need to exit?
Okay. Okay, Dheeraj, I got your question. I'll take this up quickly with Rajesh. Rajesh, your view with regards to the charts where Coforge is concerned?
So if he's a short-term trader, we are expecting further weakness because a lower top, lower bottom and previous support has been broken. So if he's a short-term trader, he can exit because 1500 is what we are expecting on the downside.
We're trying to figure out, Dheeraj, whether you're the same Dheeraj who called at the start of the show. We can't make out. And you asked about HCL Tech. If you managed to do that, well, good for you. We try not to take two queries of the same person. But anyway, Jacob is the name of the counter that we're talking about next. Sushila is writing in from Bellary. Bought at levels of 169. I wonder if you've got a view on this one. Okay, no. Targets are being sought for the short term. I will come back to you on this one. Rajesh, what do you make of it on the charts?
So in the month of August, we had seen a spectacular rally from the levels of 120 to 175, and it was accompanied by huge volumes, and now it is correcting with a low volume. So we are expecting that buying would come on this dip. So somewhere around 135, 136, 200 DMA is placed, and that will act as a strong support. On a bounce back, somewhere around 175, 180 would be an immediate target in the next 6 months.
Okay, all right. So that's with regards to where Jaicorp is concerned. We've got our next caller. Raj is calling us from New Delhi. Raj, hi, a very good morning to you. How can we help you today?
Good morning, Naima. Good morning to Alex and the panelists as well.
Good morning, Raj.
Good morning to all. So I have a life-changing decision that I need to take.
Okay.
I have a massive holding of Reliance shares.
I can see that.
It was the first stock I ever bought.
Okay.
Believe it or not, after all the, bonus and the adjustments and stuff like that, my actual holding price is only about 230 rupees. I'm into almost well above 8-figure holdings in this. It's been the largest holding in my portfolio.
Okay.
So do I need to get out of this because there's literally been no movement as such over the past 1 year? And even if I do, is this the right time to do it?
Okay. Okay, Raj, I got your question, and first of all, congratulations on that patience and of course that 8-figure earnings that you've already made. I'll take this up with Samir quickly. Samir, I mean, he's been a patient holder and that's rewarded him well. But do you think continuing to hold Reliance is the right thing to do right now, or should he make an exit? And if yes, maybe an idea as to what levels should he exit at?
So honestly, I would not be exiting Reliance at this point, given the kind of investments that they're going to be making into the green energy space, which is your solar, which is your green hydrogen, all of those aspects. I think, yes, the stock has gone through an underperformance. And if he's actually been patient, he's probably gone through one more of these similar kind of periods, from, I think it was from 2007 to 2014, where the stock actually gave no returns. And then after, sorry, not 7, it was, I think from 14 to 20 or something like that, there was a period of 7 years where the stock gave no return. So we are going through another period of maybe 6 months, 1 year more of period of investment. But once the investment cycle starts kicking out and spitting out profitability, we think Reliance has good upside on the, good potential on the upside. So my advice to him would be to hold on. But it's also important for someone like him to see what is it as a percentage of his holdings. If it is something as high as like 70, 80% of your holdings, then yes, you should diversify, never have all your eggs in one basket, because something can go horribly wrong in one particular company. It need not be economic driven, it need not be company driven, it could just be sheer bad luck. So if you're very, very over positioned in Reliance, since you're saying it's a very big position of yours, bring it below 50%. If it's not above 50%, I say stay put.
Okay, and that's very important perspective, right? Even if it is a conglomerate the size of Reliance Industries with interests in multiple businesses. Raj, I hope that answers your question, and thanks so much for calling us as always. All right, we've got our next caller. Kannan is calling us from Kerala. Kannan, very good morning to you. How can we help you today?
Yeah, hi. Good morning, Alex.
Good morning. Please go ahead.
So my query is on Nesco Limited.
Okay.
I would like to know if it is the right time to enter this counter.
And the perspective is for the long term?
I intend to hold it for 2 to 3 years.
2 to 3 years, okay. So since it's a question on an entry point, I'm going to ask Rajesh whether he has a view on this one. Rajesh, at what level do you think it's appropriate to start accumulating Nesco?
So yes, this month it has been a phase of correction, but overall, if we see weekly chart, it's in a strong uptrend. Somewhere around 1220 to 1250 is what would be an ideal level, because we are seeing key averages and retracement level. So somewhere around 1220 to 1250 would be the band where he can add.
Okay, it is time now for the rapid fire round, and we missed the first one unfortunately, but we are going to try and make up some ground. The first question in the rapid fire is on Tata Motors. Bought at levels of 701. Muhammad wants to know whether to keep holding. A lot of negative news. Samir, would you hold?
Hold it.
Okay, Natco Pharma is the next one. Govind from Hyderabad is holding 600 odd shares, bought at 1,000 rupees a piece. Wants to know if you can hold for the next 2 to 3 odd years. Your view, Samir?
Yes, you can continue to hold pharma companies. Natco is also good.
Okay, Ravi is holding a 1.5 lakh surplus and wondering whether to buy Tata Steel for a period of 5 to 10 years. Would you do that, Samir?
No, I think that's a cyclical business. If you have a 10-year view, find something better, which is a more one-way move up, and I think that will be a better investment.
Okay, Data Patterns is the next one. We don't have the name of the person, but he's holding at the levels of 2950s. For the next 2 months, should he continue to hold? Rajesh, your view on the charts?
Yes, can hold on to it.
Okay. Jacob from Chennai is asking about Infi. He's bought at levels of 1,550. He's got a short-term view. Should he hold on? Rajesh?
Yes, hold on to it.
Okay, Zinka Logistics, now known as Blackbuck Limited. Naveen Kumar is asking this question. He's bought 50 shares at the levels of 615. Short-term targets, enough data on the charts, Rajesh?
So with the stop loss of 585, hold for the targets of 660.
Okay. Jay Krishnan from Kerala wants to know about Interglobe Aviation from a medium-term time frame, and he wants to know a stop loss, if at all, if you're getting right now. Rajesh, what's the view?
So 5,500 would be the stop loss, and on the high side 6,000 would be the targets.
Okay, Karthik is asking the next question on Ola. He's bought at the levels of 77. Currently facing a loss, wants to know if he can average out. Is this the right thing to do, Rajesh?
So somewhere around 50 he can average it.
Got it. And Suzlon, 10,000 quantity being held by Balaji, who's writing in from Tamil Nadu, holding at 68. Would you hold? Samir?
I would say you can add on some more, bring your average down.
Bring your average down. Gentlemen, thanks so much for joining in. Actually, I mean, if you can stay on, I would love to talk to you, Samir, about Vodafone Idea, because the news has just broken, and that is, again, at the bottom of the screen. I did tell you about a half an hour back that this could occur. This is also a Supreme Court case, and it is a deferment of the plea that Vodafone Idea had made with regard to the AGR dues. And this is something that has been brewing for some time. The stock is down 5% at this point because there was quite a bit of hope that was building in that the Supreme Court would relook at this issue. The plea is now next going to be heard on the 6th of October. So, Samir, I don't know if you were anticipating that anything would take place today. Would you look at this as a significant negative or just par for the course and a wait and watch?
I think it's more of a wait and watch, Alex, to be very frank, because look, these AGR dues issues, if it does go in Vodafone's favor, the survival of Vodafone will become more realistic. Whether they'll be able to make money, deliver good return on equity, return on capital, that is a secondary issue. Right now, we are talking about the survival of this company. given the fact that the government, made a statement that they have 49% holding, and for them, they don't mind if some of these AGR dues get looked at. I think eventually what will happen is it will get looked at, and Vodafone, because government is quite insistent on them surviving and being a three-player market than a duopoly, because in a duopoly, then the pricing gets completely in the hands of these two players who can then change the dynamics. And now to get a new player to enter the telecom space after so many have burned their fingers and left, and the kind of capital requirement that is there, it seems very unlikely it will happen. So it's very important for the government to make sure Vodafone survives, so at least the end customer gets, a little bit of option of selection. Of course, BSNL is there, but it's like a lame dog walking along. But having said that, I think it will probably come in Vodafone's case. But would I invest in Vodafone? Because no, I want to make returns. Vodafone ROE, ROCE is going to be dismal even if they win the AGR case. They need prices to move up a lot more. If I were a smart investor, I'd much rather be in Bharti or in Reliance, who's making money at this point of time. So when the prices go up, they make even more money, right, where Vodafone will just be a little profitable.
Right, got it. And despite of this plea, Vodafone still has to pay around 20,700 odd crores by June 26. But we will ask you, Samir, about Indus Tower also just in a bit. But we also have our reporter Aishwarya Patil joining us live from Delhi, because she's at the Supreme Court, and she has the reason as to why this has been deferred. Aishwarya?
Well, it was a brief interaction. The Solicitor General of India, Tushar Mehta, while there were multiple other cases ongoing in the CJI's courtroom number 1, he requested for more time from the government side in order to put forward their submissions, and 6th of October is the date that he has requested for. So the case has been deferred so far, and that's the update as far as what happened with the courtroom. We'll see and keep following up on October 6th what really happens as far as Vodafone's AGR dues are concerned, and the additional 9,450 crore rupees as far as this particular fresh plea is concerned will be discussed both on the DOT side as well as Vodafone Idea side.
All right, 6th of October is the date to watch. Aishwarya, thanks so much for joining us and giving us that perspective. Samir, as always, thank you so much for joining in and for giving us the perspective that you did, and pleasure having you as always. That brings us to the end of this edition of Ask Profit. It's been an absolute pleasure, despite it being a curtailed show on account of breaking news. Do stay tuned. Know Your Company is up next, and this is NDTV Profit.
आज जो कुछ हमारे पास है सब इनकी देन है। एक अगरबत्ती की दुकान से इतना बड़ा बिजनेस खड़ा किया है।
प्रणाम दादाजी।
दादाजी, ये तो पुष्पा अगरबत्ती के मालिक हैं, घनश्याम दास। इनके स्टॉक्स में इन्वेस्ट किया था, इसीलिए आज ये सब कुछ है।
जो आगे की सोचते हैं, ग्रो करते हैं। डाउनलोड ग्रो फॉर स्टॉक्स, म्यूचुअल फंड्स एंड IPO।
और ये कौन सी कंपनी के मालिक हैं?
ये तो दादाजी हैं।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
One night before we were supposed to get the money in the bank, we get a phone call and the deal was off. We were in the middle of COVID. We were in a situation where we did the math that at zero revenue, we could not survive more than 3 to 4 months.
You're 25, you work for a multinational, you're living in the south of France.
Yes.
And you're not liking it. You want to come back to India and work harder.
We realized that legally it was, not allowed to work more than 35 hours a week. When I asked my boss for a permission to come on a weekend, he
he got very upset.
तो आप वो इंडियंस हो जो सबका नाम खराब करते हैं. Tell us what the kernel of the idea starts from before you go mass consumer.
People are opening multiple browser windows or tabs to do the same search on 3 OTAs, 2 airlines. So we built this meta search engine that would, crawl or use their APIs to give you where the best deals were, and then we would lead you to them to buy.
You almost finish each other's sentences. So that chemistry is really there. One thing that really annoys you.
Hard to, have a discussion that's not very objective because he's the one who's more data, numbers and objective driven at times.
Sometimes, I have to control his positivity about certain things. Hold on, this might not.
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने.
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है.
मैं आपका बात से सहमत हूं. उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa, Guru?
Hello and welcome. You're watching Know Your Company, our special show on the NDTV Profit with me, Somit Sarkar, and my co-anchor Puneet. Well, today the company that we have on KYC is NetWeb Tech. So firstly, let's understand what are the key questions that we would want to know from the analyst and from the management when it comes to NetWeb Tech. Firstly, whether the growth guidance that the management has given, is it sustainable? Now, earlier the management had guided for a growth of around 30 to 35%. So is that growth sustainable even for a longer period of time is something that we would want to know. When it comes to order wins, the company has announced mega order wins in this month, that is in September 2025. So what are the further order wins that we could see when it comes to AI infrastructure is also something that we would want to know from the management and from the analysts. How are they looking at? When it comes to its partnership with NVIDIA, how does this partnership helps the company? Does it help them does this help them secure more larger orders going forward is something that we would want to know from the management. And when it comes to what is the view of the analyst on the current valuations, given the sharp run-up that we have seen in the share prices, are the valuations sustainable at current level is also something that we would want to know from the analyst. And lastly, these two order wins that the company has announced will suffice growth or will suffice strong growth for the company till FY27. But what happens to growth beyond FY28? That is something that we would have to know from the analysts that will be joining today on NetWeb Tech. But first, let's start with Puneet on what does this company actually do?
Well, definitely it's one of the most interesting ones because it doesn't actually have a direct peer, to say the least. It provides high-end computing solutions, which essentially means they do provide supercomputers for various applications in key industries, and we'll get to the industry part in just a bit. It deals in fully integrated design and manufacturing capabilities of these computing solutions, and because of that, the supercomputers have appeared 15 times in the top 500 rankings as well. When you look at the other key aspect, which is the key segment, and they divide that into 5 key operating areas. Computing is one, private cloud. These are the two main ones that we watch out for because that's almost 70% of the company's revenues. The third includes AI systems, and you'll see that the revenue is actually doubled over the last 2 years for the AI system category. It is a new one, to say the least, so we could expect some higher growth in this particular sub-segment. Fourth one, storage, and the fifth one is data centers. Now, data center actually has a huge applications. The company used to manufacture servers earlier as well. But because of the high growth segment in the first two ones that are mentioned on the screen right now, we've seen the contribution of data center actually be in just some low single digits as well. But that's largely the top 5 segments that Netweb Tech operates in. It's important to know which industries they cater to as well, because a lot of industries which require high computers and high super solutions as well are clients of Netweb Tech as well. So if you can look at the industry classification as well, that's the other one. We've seen space and defense be roughly about 28%. IT/TS is the other one, which is the majority of the company's share. Education and research as well, and the other enterprises is the other industry as well. It has a lot of clients, especially from the government side as well, that do cater into these segments that they operate in. But that's largely on this company's industry that they cater to. Very quickly, I just want to highlight the other data for Q1. Revenue from repeat customers is roughly about 72%, and that because they are such high growth customers that you would have repeat orders from these ones. The other ones, 23 new clients that got onboarded across the industries in Q1. Pipeline is over 4,000 crores for the company because of the scope that it offers and no direct competition essentially as of now, at least in the listed space, with an order book of existing about 229 crores. So the difference between the order book to the pipeline is also quite sustainable and quite huge. So it could materialize at least in that space as well. They also had a recent order win of 415 crores. That's to supply Tyron AI GPU accelerated systems, and that we are going to talk about that with the analysts as well as with the management as well, and that's deployment of AI infrastructure as a whole. But that's largely about the company. We've told you about what we actually want to know from the analysts as well. But let's now look at the metrics, Sumit.
Well, yes, the first, there are a total 8 metrics on which we are going to rate this company, that is Netweb. The first one would be income statement, followed by balance sheet, then the cash flow, how the return ratios for Netweb Tech, shareholding pattern, what has changed over the years, street cred means how the stock has performed over the last few time frames, how the valuation standing, what's the street coverage, and what is the outlook going forward for Netweb Tech. So based on these 8 parameters, we are going to rate Netweb Tech in the next 10 minutes. So firstly, when it comes to income statement, if you look at the company's income statement, the growth has been quite strong. 67% is the CAGR growth that we have seen over FY22 to FY25. For 65% similar growth coming into EBIT, and similar growth that we are seeing when it comes to net profit. Net profit CAGR growth has been around 73%, and over the last 3 years that we have seen, margins, if you look at the EBIT margins of the company, that has remained in the range of around 13 to 15%. So not much of a deviation, strong level of margin, strong growth that we have seen in the last 3 years. Now if you look at the first quarter performance, the first quarter of FY26 performance for Netweb Tech, on a sequential basis, yes, it has declined 27%. But then again, this business is largely dependent on how the order wins cycle are. And if you look at YOY basis, yes, again, a strong growth is what Netweb has reported on a YOY basis. 102% growth in revenue. EBIT has increased by 141%. Margins expanded by around 221 basis points to 13.8%. Net profit came in at around 30 crore, which is a jump, which is nearly double of what the company reported last year. So again, a strong growth on YOY basis in the first quarter as well. So thumbs up that we are giving it when it comes to the income statement for Netweb Tech.
Well, balance sheet also likely has seen strength as well in this particular time frame. We've given this a thumbs up because if you see the movement essentially of the book value, just from roughly about 93 crores in FY23, the book value has now inched up to 530 crores in just the last couple of years. So it's definitely a key positive. In this particular time, the company has reduced its borrowing. That's helped contain profits as well. And the cash and bank has also increased to roughly about 222 crores in FY24. We saw a slight dip from those levels to 180 crore in FY25. But the jump essentially from FY23 compared to FY25 is so vast and so huge that it's a clear thumbs up on balance sheet metrics as well. Cash flow, Sumit.
Right. Now, if you look at the cash flow here, yes, the operating cash flow has come down. 27 crore is what we had seen in FY23, which has come down to negative 13 crore. But as a percentage of PAT also, it has reduced. But on a net basis, if you look at, the company has still been generating cash, given the fact that there are multiple other sources for the company to get cash here. If you look at the complete statement here, there are there are cash flows from financing and investing options as operations as well. So on a net basis, yes, the company has been generating cash. So on net cash flow, it has remained largely stable in the last couple of years, around 80-83 crore. However, given the fact that operating cash flow has reduced because of the increased number of receivables, we are giving it a neutral rating as of now.
Now, when you look at the other key metrics, which is return ratios as well, because that is the other important one. While FY23 was a strong year and at about 47% in terms of return of capital employed, the reason we are giving this a neutral rating is largely to know what could be the stable run rate for the company. Is it going to be 28 to 25%, which we've seen the last 2 years? That's going to be one key question. On return on equity as well, when you look at the other metric, was roughly about 45% in FY23, FY21. FY23 saw a huge jump to 68%, but we've largely seen a stable 25 to 29% in terms of return on equity as well. So we've largely given this a neutral rating, being very conservative on our ratings, and that's largely because of lack of stability, if any, over the last 3 to 4 years. It is a high growth company, so we've given this a neutral largely because of that aspect and to know what could be the run rate going forward as well.
Right, and when it comes to shareholding, again a thumbs up that what we have given, because the promoter holding has remained largely stable over the last 1 year. FI holding has come down a bit, but again not much of a decline, just 100 basis points of a decline. DI holding has also declined by around 100 odd basis points, but again public holding has increased by similar number from 13% has increased to 15 odd percent, but promoter holding has remained largely stable. Again 70% plus promoter holding is quite positive when it comes to Indian companies, and hence a thumbs up that we have given for the shareholding part.
When you look at the street cred as well, and you know, there's not too much to complain here, honestly, because just in the last 1 month, the stock's up almost 59%. When you also look at, longer time frames as well, essentially in the last 6 months, it's almost up 135% in terms of stock returns. On a year-to-date basis, we have seen some knee-jerk reactions, but still up 26% and largely outperforming both the Nifty as well as the mid-cap performance. 43% on a yearly basis. So this is no doubt we've given this a thumbs up. Very strong profile in terms of stock returns that the company has given in this particular point of time.
Right, and the outlook, what is the company expecting for FY26 and FY27? Now, firstly, if you look at the street coverage here, there are 3 analysts covering the stock, and all of them have a buy rating. In fact, one of them just upgraded the rating in the recent times post the order win that the company had announced, and the average upside, that is the return potential for the next 1 year, stands at around 17%, which is again a reason for us to give a thumbs up to Netweb Tech.
Well, when you look at the outlook, and I'll also cover the valuation very quickly, because they have given a stable outlook, 35 to 40%, and Somit mentioned that if that is sustainable, we'll quiz the management on that as well. That's the key aspect. Apart from that, they've delivered 40% CAGR since listing as well in terms of revenue profile. EBITDA margin is largely maintained at 14%. So that'll be the other thing to watch out for if they are able to maintain their growth. The management has guided for that, but with the new orders in the India AI mission as well, that's going to be the other growth area for the company. When you look at the valuation aspect as well, very quickly, it's not cheap by any means or imaginations. On a price to earning basis, it's trading at 62 times, but that's also for FY27 basis. It's almost trading at 100 times in FY26 basis, and that's why in terms of the current aspect of PE, it is expensive to say the least. Even when you look at the EV EBITDA metric as well, that's largely expensive on that as well. So when you look at the overall rating as well, we'll pull that up very quickly as well, and Somit will take us through all of them right now.
Well, income statement is a thumbs up, balance sheet is a thumbs up again, cash flow and return ratio is quite neutral. So at least 2 out of 4 in the first page. Second one, again, shareholding thumbs up, street cred thumbs up, valuation is down, and street coverage is a thumbs up. So 3 and 2 around it should be 5, and okay, 2 neutral is 1, so it's around 6 out of 8 is what the rating that we have given to Netweb based on this. Now let's get into our analyst on the show, Renu Bed, Senior Vice President Research with IIFL Capital. Ma'am, firstly to start off with, yes, the company has reported quite a strong growth that we have seen of late, but do you expect this growth rate to be sustainable even beyond FY28, because the recent order wins will lead to strong growth at least till FY27, but what beyond that?
Yeah, hi. the kind of orders that we have seen for the company, especially under National AI Mission, most of these are short cycle executable orders. And while these orders will be completed by the first half of 27, the further new orders should be recurring. So if you look, the total corpus under National AI Mission has been about close to 11,000 crores. And NetWeb is pretty much confident that they should be able to garner at least 50% share, which implies 5,000 crores plus of revenue opportunity. So the current order 2 wins that they have announced cumulate to close to 2,100 crores. And just to that extent, we still believe that these are just 40% of the revenues that they are targeting. And the rest revenue momentum from new order wins should continue through FY 27-28. In fact, after these 2 orders in second half also, there should be a couple of more order wins, which will drive better visibility for fiscal 27. So in fact, in our revenue forecast, we have taken close to 1,300 crores of revenues from these NAIM orders in fiscal 26 and close to 2,300 crores in fiscal 27, including 1,500 crores worth of new order wins, which will be executed then. While the revenue numbers will taper down from 28-29, nonetheless, it will help better penetration of NetWeb solution in India's AI infrastructure there.
Ms. Baid, very good morning to you. Thanks so much for joining in. It's Puneet this side. We've seen you also cover the EMS space very actively, so the high growth is not a concern. But largely, when you look at, in terms of revenue profile, you did mention, what would these new orders do for margins for the company?
Well, since these orders are not just for hardware, but for the entire solution, along with the Tyron software that they offer along on the platform. So to that extent, these are double-digit margin orders. One can contemplate that, yes, compared to the base run rate revenues, where they were earning almost 14% kind of margins, these, given the size and scale, would be at least a few 100 basis points lower. So we still expect that these projects should be between 10 to 11% margins for the company. So on a blended basis, it will not have a significant dilutive impact on the overall margin profile of the company. So we are forecasting about 50 to 80 basis point lower margin than what the company had guided for the base run rate business, which was 13.5 to 14% at the end of last quarter.
Right. I wanted to understand one thing. I believe by the end of the first quarter, their capacity utilization was around 65 odd %. So post this couple of order wins, do you expect that utilization levels will increase and they might have to do some more capex on their front or some more hiring at their end?
So yes, they were operating at 65%, but that was on a single shift basis. SMT lines typically can run 24/7, so easily they can scale up to double shift and if required to third shift. Broadly, there might be some incremental capex of maybe 5-10 crores to debottleneck, add up some more assembly capacities for the servers, etc. But I would say on the capacity front, they are relatively better placed. And that's the reason why they have been able to take these orders with these kind of delivery timelines. So both not just on the SMT line, but also on the other manufacturing activities related to the assembly of the server, they are today well prepared. In fact, the server activities on the assembly side was fully commissioned at the end of 25 itself. So to that extent, they are well prepared to execute this kind of growth rate.
So just to conclude conversation, I just wanted to understand. So over FY26 to FY28, what is the kind of growth that you're expecting on revenue, EBITDA, net profit front?
Overall, if you look in terms of numbers, clearly we are looking at 65% CAGR growth in revenues. Profit CAGR has been 40% plus. But if I look only in terms of AI-driven revenues under the AI mission, so those revenue numbers would be growing almost in terms of absolute numbers. They will add incremental 5,200 crores to the top line. And the base run rate in the AI segment will still be growing at 55% CAGR. So yes, there is a big pop-up, which is driven by these national AI mission orders. But yet overall, in terms of their growth profile, we don't see any headwinds. So from a profit number, which was expected this year to be close to 2.5 billion, we expect the company to really double PAT by 28 to close to 5 billion rupees. So clearly, PAT doubling in next 2 years from this year's expectations, and revenue also expected to quadruple thereon.
Right. Well, thank you for joining us and giving us your perspective on the stock that is NetWeb Tech. Strong view coming in from IIFL Capital. Now, we also spoke to the management of NetWeb Tech to understand how their growth plans or growth plans look like going forward. Let's listen into that conversation. AI segment used to be around 7% of your revenue a couple of years back, which has now increased to around 29% in the first quarter. Where do you see the revenue contribution coming in from this segment, say 2 years down the line, sir?
As I mentioned that, so our AI portion of our revenue continuing to be healthy, and it is 25 to 30%, and all the missions pertaining to AI mission infrastructure capabilities are being reported and accounted separately from the revenue segment that you generally see what we submit to BSE and NSE. So entire AI mission related revenue accounting and governance will be done separately. So I think for every such project pertaining to the AI built up is going to be seen as a separate account and separately reported to the market.
Okay, post this order win, what will be your capacity utilization at, I believe in the first quarter it was around 65% level?
Yeah, so when you talk about the capacity that we are building, right? As you know that we have our in-house motherboard manufacturing, server manufacturing, and all. So we will be delivering these orders in due course of time. Depending on our funnel or even the pipeline conversion, basically happens into 6 to 18 months. That is the timeline that is there. So as and when these newer orders that are coming up, we will be fulfilled in due course of time.
Okay, and with this new order wins, will your revenue growth will be much more in FY26, FY27 than what you had guided earlier?
Yeah, so we will obviously, so with these larger orders coming in, obviously it is natural that our revenue growth is going to be much faster compared to what has been there in place, and we anticipate some more other orders which are there in the pipeline will also mature during the course of time. Yes, obviously this will translate to a better revenue as we move forward.
Right, sir. Just wanted to understand the tie-up that you have with NVIDIA. How does that help the company? Does that add more credibility and helps in securing orders faster?
So we have been working with all of our ecosystem partners from a very strategic perspective, whether it is NVIDIA, from the GPU server perspective, or AMD or Intel. Now, having said that, our relationship with NVIDIA is deep-rooted, while NetWeb is one of the 6 global manufacturers of GPU servers based out of India. And we are the only one in India. So we do have the technology relationship with them. We get to understand their, the systems and the softwares that are required to leverage the underlying platform better. And that relationship really helps us to delivering outstanding capability much faster and time to market as they are launching their new generation solutions. And that is the way NetWeb and NVIDIA works in tandem to help build these kind of solutions. By the time they launch their newer GPUs or newer software stack that is available on the NetWeb built GPU servers as well. And that basically really helps. That technology association really helps us making these solutions, bringing to the market faster. And that also convinces our customer about our joint value proposition and how that translates to their business success.
Well, that was the management of NetWeb. You also got the analyst view in this particular episode, so you got the twin benefit as well. But thanks so much for tuning in to KYC. Lots more action on the other side. Stay tuned to NDTV Profit.
आज जो कुछ हमारे पास है सब इनकी देन है। एक अगरबत्ती की दुकान से इतना बड़ा बिजनेस खड़ा किया।
प्रणाम दादाजी।
दादाजी, ये तो पुष्पा अगरबत्ती के मालिक हैं, घनश्याम दास। इनके स्टॉक्स में इन्वेस्ट किया था, इसीलिए आज ये सब कुछ है।
जो आगे की सोचते हैं ग्रो करते हैं। डाउनलोड ग्रो फॉर स्टॉक्स, म्यूचुअल फंड्स एंड IPO।
और ये कौन सी कंपनी के मालिक हैं?
ये तो दादाजी हैं।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
One night before we were supposed to get the money in the bank, we get a phone call and the deal was off. We were in the middle of COVID. We were in a situation where we did the math that at zero revenue, we could not survive more than 3 to 4 months.
You're 25, you work for a multinational, you're living in the south of France.
Yes.
And you're not liking it. You want to come back to India and work harder.
We realized that legally it was, not allowed to work more than 35 hours a week. When I asked my boss for a permission to come on a weekend, he got very upset.
तो आप वो Indians हो जो सबका नाम खराब करते हैं. Tell us what the kernel of the idea starts from before you go mass consumer.
People are opening multiple browser windows or tabs to do the same search on 3 OTAs, 2 airlines. So we built this meta search engine that would, crawl or use their APIs to give you where the best deals were, and then we would lead you to them to buy.
You almost finish each other's sentences. So that chemistry is really there. One thing that really annoys you.
Hard to, have a discussion that's not very objective because he's the one who's more data, numbers and objective driven at times.
Sometimes, I have to control his positivity about certain things. Hold on, this might not.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है NDTV के साथ वो बहुत बहुत पुराना है।
और रहमान सोनू निगम के लिए जोरदार तालियां।
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो NDTV सबसे पहले जिक्र में आता है।
मैं आपका बात से
Fred, on the Lal Street, Nifty trades well below 25,000. Sensex trades over 400 points. All sectors in the red. Pharma, metal and IT lead losses. Meanwhile, the Supreme Court rules in the favor of JSW Steel's takeover of Bhushan Steel quashes objections raised by Bhushan Power's erstwhile promoter Sanjay Singhal. And the country's apex court is going to be hearing Vodafone Idea's plea challenging AGR dues on October 6th. Now, company contends Department of Telecom's AGR demand plea, calling them duplicate claims. is the IT pack that is under pressure after Accenture slashes FY26 revenue guidance to 2 to 5%. Q4 revenue beats estimates at $17.6 billion, with growth led by managed services. And Trump imposes 100% tariffs on branded or patented pharma products. Tariffs to kick in from October 1st. Generic pharma exemption positive for select players. Good afternoon. You're watching Markets at 12 with me, Shreyansi Singh. First things first, let's take a look at what the markets are doing at this point in time, and it's not looking like a good day in trade. As far as the Nifty and the Sensex are concerned, even the sectoral picture is looking quite tilted in the favor of red. In fact, there's just one sector that is holding on to a tinge of green: realty at this point in time. Pharma, IT, metal, defense, PSU Bank, all of these down. At this point in time, we do have Vodafone Idea that is down about 6.5%. Wockhardt, Loris Labs, Vari Energies, as well as Newland Labs and Poly Medicure, some of your top losers at this point in time. But let's take a closer look at Vodafone Idea. In fact, let's start with the top story of this hour. The Supreme Court has deferred Vodafone Idea's AGR plea hearing to October 6th. We do have Danish who's standing by live to tell us more about this one. Danish.
You rightly said the top court has deferred Vodafone Idea's plea challenging DOT's additional demand of 9,450 AGR dues. This has come at that point in time. Even last week, we saw this same matter being postponed for a week. But today's hearing, SG Tushar Mehta, which was representing the Indian government, he clearly said that they don't have any issues with the recalculation that Vodafone Idea is demanding right now, and they're not against the plea. But since DOT, which is the Department of Telecommunications, that they need little bit more time to look at the calculations recalculated, and hence this hearing has been deferred till October 6th. But let me take back to you, this is a big matter, and initially this was challenging Supreme Court's 2019 judgment in which the government had come out with certain demands for different all the different telecom companies, and Vodafone Idea, which we know that the financial condition is not good right now, and hence they were staring at another 9,450 crores AGR demand. So all in all, if we see, there is no relief from Supreme Court for Vodafone Idea yet, but this matter has been postponed till next week.
Other than the postponement is something that we're looking at. In fact, let's delve a little deeper into this one, Mahima. Of course, there's a lot of things that we need to be looking at when it comes to this story.
Absolutely. And in fact, let's speak to Balaji Subramaniam, who's the Vice President of Research IIFL Securities, joining us now. Mr. Subramanian, just want to understand this, deferment of case. Is this par for course, or this is just a near-term thing? How are you reading this particular deferment of case with regards to where the stock performance is concerned?
Good day. Thanks for having me on the show. I think what is happening is that the original AGR dues, I am keeping the additional 9,450 crore demand aside. The original AGR dues were in moratorium, and that moratorium has expired, and Vodafone Idea has to make payments of close to 16,500 crores starting from 31st March of 2026. So that is where we are, and in order to going by their financial position, it is not going to be possible for them to make this payment. So the clock is ticking towards any potential relief measure that the government can come out with. Now, since the Supreme Court is involved and there has been a lot of history in terms of this litigation, I think what the government wants to do is they want some kind of an assurance from the Supreme Court, or some kind of a written statement from the Supreme Court that there is that the government gets some wiggle room where the Supreme Court says that we are hands off on this, and now let the government and the industry work on any potential relief measure that can come, and that could take the form of either an extension of the moratorium or an extension of the payment timeline itself, because as per the original verdict, all the AGR dues have to be paid up by March 2031, The third relief measure could be in terms of some recalculation of the dues themselves, so that the NPV goes down. But of course, each of this requires some degree of softer stance from the Supreme Court, and I think that is what the government is awaiting clarity. Because if the Supreme Court doesn't give an explicit approval towards making some modifications to the original AGR judgment, then it could be deemed as contempt of court from the government side. So I think that clarity is what one is waiting for, and since the court hearing is getting postponed, and we are gradually moving towards that deadline where Vodafone Idea has to pay up, I think that is why the markets are a little jittery when it comes to the stock.
Right. Mr. Subramanian, just want to understand one thing from you. We've been talking about this, that the government is trying to, not have, just a duopoly in this telecom space, and wants to really work towards this Vodafone Idea case. If at all the verdict is in favor of Vodafone Idea, do you think it will be the much required relief for the counter, and from there on, do you think some relief would be there for the counter fundamentally?
I think the hearing on this particular case itself will not change anything. Correct. Because this pertains to an additional demand of 9450 crores, which is over and above whatever is there as of now. So even if a positive outcome comes out, it is at best neutral, because the liability and the future payments don't go up. While in the case of an adverse verdict, it's a negative, because that means that the liability goes up by another 9,500 crores. But if while hearing and in the order, if the Supreme Court clearly states that the government is free to take any measures from its side to ensure that the sector doesn't become a duopoly, then I think the government's hands are freed, and then, as I said, they could look at some of these measures that I just spoke about. And once those measures are in place, some of them will also give enough comfort to the banks to lend to the company, and that is how I would expect any potential, relief to play out. So I think the Supreme Court, if it comes out with a softer stance in the order, then it will kind of pave the way for the government to come out with something more substantial.
All right, and there we have it. Thank you so much, Mr. Subramaniam, for helping us out with that outlook as well, in terms of what to watch out for when it comes to the Apex Court's hearing as well. So that's Vodafone Idea. That's the one in focus, but let's also move on and take a look at what else is in the spotlight. A sweeping wave of tariffs is something that you're looking at that is shaking up pharma, furniture, auto industries, plus a blockbuster TikTok deal as well, adding to the drama from 100% duties on branded drugs to 50% on kitchen cabinets. The impact is sector-wide, but let's take a closer look. In fact, Somit is joining in with that entire update there.
Well, yes, multiple announcements that have come in from the US President Trump overnight. Firstly, on the pharma sector, he said 100% tariff on any branded or patented pharma product. Unless a company is building a plant in US to manufacture products, then if they're not doing that, then there will be tariffs. And two stocks that basically have larger exposure when it comes to these branded and patented products. Firstly, it's Biocon and Sun Pharma. However, analysts believe that impact for Biocon could be on the lower side, given the fact that they have just commissioned a new plant in the US market. So there won't be much of an impact when it comes to Biocon. That is what the analysts believe. But then Sun Pharma, there will be a big impact that is expected by analysts. Now, the second announcement was on the furniture segment, where he said that he will be imposing 50% tariff on all kitchen cabinets, bathroom vanities and associated products as well. And he also said that 30% tariff will be imposed on upholstered furniture. So three stocks that we need to keep an eye out for here is Stovecraft, Stanley Lifestyle and Carousel. But do remember, these three companies do not have a direct exposure. They export their goods to IKEA, which might have an exposure to the US market, but these companies directly do not do any exports or do not sell their products in the US market. So keep an eye out for Carousel, Stovecraft and Stanley Lifestyle, no direct exposure, but there is exposure via IKEA. And lastly, when it comes to the auto sector, he said that they will be imposing around 25% tariff from 1st of October on heavy and big trucks that are made in other parts of the world. Now, obviously, there are no OEMs in India which directly export heavy or big trucks to the US market, but there are the secondary impact of this could come in on the auto ancillary companies, because in fact all the auto ancillary companies in India have some or the either exposure to any global company. Now, Street was expecting a negative reaction to come in when it comes to Bharat Forge and RK Forging, but do remember that Bharat Forge and RK Forging again have no direct exposure to anything. They in fact export their goods to US for trucks that are actually made in US, so there won't be much of an impact coming in for RK Forging and Bharat Forge as well. And the last announcement that was related to TikTok, Trump has signed an order declaring TikTok sale ready, and it values the company at around $14 billion US. Trump says that China has said to go ahead with this deal. Deal is valued at around $14 billion, and Trump says that Michael Dell, Rupert Murdoch are among the investors. Apart from that, Oracle Silver Lake will also be among the owners of around 50% share in TikTok US.
Well, absolutely. Thank you so much, Somit, for helping us out with all of those updates. So it's been a busy morning, and you do have a whole host of those stocks that are going to be in focus and are already some of them buzzing away in trade as well. But let's also take a closer look at the impact, try and pencil that in. In fact, we do have Abhay Agarwal, who's the MD at Piper Serica Advisors, joining us this afternoon. Mr. Agarwal, thank you so much for joining us, and a very good afternoon to you.
Yeah, good afternoon. Thank you for having me on the show.
Well, absolutely. First things first, I want to understand what is your first take when it comes to the sweeping wave of tariffs. You do have a bunch of these announcements. What are you making of it in terms of the first cut at this point?
I think two things. First of all, this was not unexpected because the Trump administration has been talking about higher tariffs, even 200% on pharma imports into the US. So I think it has happened now. Secondly, it is not targeted at India particularly. It is a wider reach. So I think the focus clearly is on branded, high-priced formulations, medicines which are imported into US from countries in Europe, in Japan, in China. I think India is fairly insulated. I don't think with our kind of exports, which are largely generic and some APIs, we need to worry about these tariffs impacting a lot of Indian companies. In fact, on the flip side, I would say that this is a great incentive for some of our large pharma companies that have so far focused on generic exports to look at getting into the formulation space in the US, though it is a tough journey, and look at even manufacturing in US, which is what the US actually wants. And these companies are well-funded, high cash flow generation companies. So it will be easier for them to do that. So I think though it may look like a crisis in the short term, it is actually a great opportunity for Indian companies, while the other large companies in the world are trying to deal with this problem. For the Indian pharma companies, it actually opens up a great opportunity space.
Right, Abhay. Afternoon, Hiral on this side. Always a pleasure to speak to you. You're saying this is an opportunity when it comes to Indian pharma players, but the kind of reaction markets are giving today on the back of tariffs is unprecedented then, because we've broken that 24,800 mark on Nifty as well. Your pharma stocks are under pressure. What would you then advise investors to do in moments like these? Because everyone is looking at trade talks, negotiations to happen, and then something to come in favor of India. And this is becoming a major overhang right now.
Yeah. No, you're absolutely right, Hiral, that it is more of the sentiment right now that is driving some of these reactions in the market. And I will not fault the shorter term investors doing what they're doing right now, because there is a lot of uncertainty. We know that things may get worse on the tariff side because the posturing and the messaging from the US government has been very clear across the board. So the problem with the markets right now is that nobody knows how bad will it get before it gets better. And fearing that, I think investors are looking to taking off chips from the table right now. Now, my advice to investors would be that to be very careful, because what happens is that in a highly news sensitive market, any kind of positive news that comes in, especially unexpected positive news, reverses flows also that quickly. So I don't think right now is the time looking purely at technical factors when fundamentals are still strong for investors to start taking chips off the table or start selling some of the blue chip stocks, pharma companies, which are really growth companies over the next 4 or 5 years. So I would say that, though it may seem paradoxical, contrarian, but these are the markets where there is some bit of panic, low participation, that opportunities emerge for longer term investors. So I think rather than getting underweight in the market, looking at what's going on in this correction, maybe a good time to start nibbling at some of the stocks that you always wanted to buy but found too expensive earlier.
Okay, so Abhay, what would that big shift look like currently, and which pockets would you advise investors to look at with the correction which is underway?
So one of the spaces that we have been overweight on for last 3 years, Hiral, has been the whole EMS space. And in our model portfolio, we have companies, and these are not buy recommendations, but companies like Sirma, SGS, Keynes, Amber, Dixon, because these are the companies that are benefiting from this whole deglobalization. So at the same time, while Indian exporters are struggling with tariffs, India, and you heard the Prime Minister say it a couple of times in the last month or so, that we need to build our own dependence on our own electronic industry, especially. So manufacturing electronics domestically for our own use and for wider uses like defense, aerospace becomes a very big imperative. And I think these are the companies that are right in the midst of it. So the whole Atmanirbhar Bharat theme through these EMS players, I think, is an easy one to go after. The second one would be domestic consumption companies. And I'm not talking only about the FMCG companies, but more about the companies that focus on discretionary consumption, whether it is home building, auto, travel. I think this is a space that is building up pretty nicely. And the third space, though, today is not probably the right day to talk about it, but pharma is something that we continue to like, because this is a space where we're seeing companies innovate, launch new products, access the wider global markets. They have learned a lot over the last 5 years. So I think there are opportunities that are there, in these spaces for investors to look at.
Abhay, one quick question. You've been positive on the pharma CDMO space as well since quite some time. Few of the companies that do see an impact, if I just have to look at a list, is Jubilant Pharmova, Zydus, Alchem and Piramal Pharma. I know you will not talk stocks, but are you expecting any negative impact? Because few of these companies are already catering to innovators. Few of the companies are in the process of setting up or look at business in this space. What would you advise investors to do?
No, I think any company in India that is doing CDMO business is a guaranteed bright future, because that shift to India for CDMO will continue. Only thing that Indian companies will need to put up the capex before, because CDMO is a business where you have to put up the money before you start making money. So as long as our companies, and especially Divi's lab has shown that, it has shown, and Laurus also, that how you can build a very strong CDMO business which does not have the tariff impact, because these are services that you're offering offshore now, and you don't need H1B visas for that. So this is actually quite a bright spot of CDMO services, that you're sitting in India delivering services, you're not selling products. So hopefully you will not be impacted negatively by tariffs. Not only that, you may actually benefit from what is going on. So I think the names that you took, and there are many more that are getting into this space, building a space. I think CDMO is going to be a great growth engine for India for the next 5 years at least.
Well, absolutely. So that's a good note to end on. CDMO is going to be a big driver of growth for India as well. Thank you so much, Mr. Agarwal, for joining us this afternoon on the show. But tell you what, let's move on. And let's move on to another important piece of news that's in focus. The Supreme Court, in fact, has upheld JSW Steel's resolution plan for Bhushan Power and Steel, quashing objections from ex-promoter Sanjay Singhal as well and some creditors. But before we go across to Dushyant Dave, who's a senior advocate, my colleague Vishy in fact joins us with all of those important details there. Vishy.
So the Supreme Court has actually upheld the JSW acquisition of Bhushan Power and Steel. Essentially what it has done is it has overturned that an order that the Supreme Court had passed back in May of 2025. Essentially at that time, the Supreme Court had held that there were serious process inaccuracies in the way JSW Steel had acquired Bhushan Power and Steel under the Insolvency and Bankruptcy Code, and that these process inaccuracies were too big to ignore for the Supreme Court. So in May of 2025, the Supreme Court had actually said that the acquisition would need to be reversed and Bhushan Power and Steel would need to be liquidated. Today, of course, the Supreme Court has heard the review petition by JSW Steel as well as some other parties, including the Committee of Creditors, which had argued that the order was bad in law because some of the pointers that were made in the Supreme Court order originally in May were not actually accurate, and that the reversal of this transaction was not possible. So now, of course, the Supreme Court has held that that order will now be junked and JSW Steel's acquisition of Bhushan Power and Steel will continue as is. If you remember, back in 2019 is when the Committee of Creditors had accepted an offer by JSW Steel, a little less than 20,000 crore to acquire Bhushan Power and Steel. Later, it took till 2021 before the plan could actually be implemented and JSW Steel could acquire this company. The Supreme Court in its previous order had said that this was too long a period to implement the resolution plan and therefore it needs to be reversed. Today, of course, the Supreme Court is saying that these delays were caused primarily because of a lot of legal objections and legal challenges that were raised by the erstwhile promoter of Bhushan Power and Steel, Sanjay Singhal, the CBI and the Enforcement Directorate, and that JSW Steel or the Committee of Creditors cannot be blamed for the delay that that had taken place before the plan was, of course, implemented. Alongside that, the Supreme Court has also held that JSW Steel has actually infused equity into Bhushan Power and Steel as part of the resolution process. The compulsorily convertible debentures that were issued by JSW Steel have been held up as equity instruments, and that issuance of these instruments indicates that JSW Steel has actually infused equity into the company to protect it. What we also know from the order that was passed by the Supreme Court earlier today is that the objections that were raised by Sanjay Singhal have been quashed entirely. Objections that were raised by creditors as well. You know, the financial creditors of Bhushan Power and Steel had said that they need to be given a share of the EBITDA of Bhushan Power and Steel after the resolution process was completed. The Supreme Court has held that that cannot be possible. So all in all, an end to a pretty sordid saga. Over the last few months, JSW Steel was in a lot of pressure. Now, of course, JSW Steel looking a lot more relieved. That cannot be possible. So all in all, an end to a pretty sordid saga. Over the last few months, JSW Steel was in a lot of pressure. Now, of course, JSW Steel looking a lot more relieved.
JSW Steel looking a lot more relieved. Thank you so much for that, Vishy. So the objections by Bhushan Power's former promoter Sanjay Singhal, Dushyant Dave, senior advocate, and is dismissed. The objections by Bhushan Power's former promoter Sanjay Singhal, Dushyant Dave, senior advocate and former Supreme Court Bar Association president, joins in. Mr. Dave, welcome to the show and a pleasure to speak to you at NDTV. Your initial comments on the back of the court dismissing the objections by Bhushan Power's former promoter Sanjay Singhal, and this coming in as a relief as well.
I think the Supreme Court has done well to really recall the earlier judgment which was given, setting aside, the resolution plan and ordering liquidation. I think that was a completely wrong judgment in my respectful view. And I don't think Supreme Court really understood the gravity of the liquidation process under the IBC when it delivered that judgment. First, we must understand one thing, that this kind of, bogus challenges at the instance of the erstwhile promoters who have not paid their dues, running into thousands of crores to public banks and other creditors, should never be entertained like this. Secondly, the court must also appreciate that, this process has to be as quick as possible. The idea being to not only revive and regenerate the assets, but also ensure as much as possible the monies of the secured creditors as also the employment of the workers is maintained. Now, this in India, unfortunately, although there is a very sound law and there are many judgments of the Supreme Court guiding as to how this process should take place, but it is notoriously slow, it is notoriously ineffective, and it is notoriously unjust. Now, therefore, for the Supreme Court to have really upset the judgment of the NCLT and NCLAT approving the resolution plan, which was already implemented and for almost 3 years, I think was shocking. And I think the reversal of that judgment, recall of that judgment, review of that judgment by Supreme Court today by the bench presided by Chief Justice Gawai is absolutely a welcome move. It's a very correct approach, and it will go a long way in really encouraging the process under the IBC.
Well, absolutely, this is a very important update coming in as far as this particular judgment is concerned. I also wanted to understand if there's anything that stands out to you in terms of the timeline. Of course, you've talked about what your take is when it comes to the judgment as well, but is there anything that stands out to you in terms of the timeline of the case as well?
See, we all know that the statute provides a very strict timeline, but it is not being followed, and NCLT is notoriously inefficient. I mean, it's really shocking the way NCLT functions, and neither the government nor the banks nor the other stakeholders are really, interested in improving the process of the NCLT. NCLAT, as a result, is saddled with large number of appeals which are filed on a drop of a hat by vested interests, and therefore the whole process gets very seriously delayed. I think we must understand that in countries like Europe and America, the process of revival of these companies is very, very quick, and the assets are seized by the creditors as quickly as possible, and they are sold to the best buyer in the market, so that the assets are utilized, productivity is maintained, and the jobs are maintained, and as much money as possible is retrieved by the creditors, especially the secured creditors. That approach is missing, unfortunately, in India. And neither NCLT nor NCLAT has really grasped this kind of a situation, that these are commercial transactions. There is a commercial approach. It's a business-like approach. That is something which is missing, which we really need to stress upon this, because there are thousands of applications pending before NCLAT and NCLT. Now, I mean, it's ultimately it's a loss to the nation, because these are productive assets if they can be revived. So I think this judgment, perhaps, I hope Chief Justice will go a little out of the way and make observations about the functioning, or rather non-functioning, of the NCLT.
Absolutely. No, absolutely, Mr. Dave, and that's a very interesting point that you've mentioned in terms of the approach being different when it comes to select few cases, and that is something that needs to also be looked at. Thank you so much for joining us this afternoon on the show as well on this note. But tell you what, with that, we're completely out of time on this edition of Markets at 12. Thank you so much for tuning in. You don't go anywhere, because Profit Buzzers takes all of the action forward.
बहू, आज जो कुछ हमारे पास है सब इनकी देन है। एक अगरबत्ती की दुकान से इतना बड़ा बिजनेस खड़ा किया है।
प्रणाम दादाजी।
दादाजी, ये तो पुष्पा अगरबत्ती के मालिक हैं, घनश्याम दास। इनके स्टॉक्स में इन्वेस्ट किया था, इसीलिए आज ये सब कुछ है।
जो आगे की सोचते हैं, ग्रो करते हैं। डाउनलोड ग्रो फॉर स्टॉक्स, म्यूचुअल फंड्स एंड IPO।
और ये कौन सी कंपनी के मालिक हैं?
ये तो दादाजी हैं।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
गोल्ड ग्लास, क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
One night before we were supposed to get the money in the bank, we get a phone call and the deal was off. We were in the middle of COVID. We were in a situation where we did the math that at zero revenue, we could not survive more than 3 to 4 months.
You're 25, you work for a multinational, you're living in the south of France.
Yes.
And you're not liking it. You want to come back to India and work harder.
We realized that legally it was, not allowed to work more than 35 hours a week. When I asked my boss for a permission to come on a weekend, he got very upset.
आप वो Indians हो जो सबका नाम खराब करते हैं. Tell us what the kernel of the idea starts from before you go mass consumer.
People are opening multiple browser windows or tabs to do the same search on 3 OTAs, 2 airlines. So we built this meta search engine that would, crawl or use their APIs to give you where the best deals were, and then we would lead you to them to buy.
You almost finish each other's sentences. So that chemistry is really there. One thing that really annoys you.
Hard to, have a discussion that's not very objective because he's the one who's more data, numbers and objective driven at times.
Sometimes, I have to control his positivity about certain things. Hold on, this might not.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है.
और रहमान
सोनू निगम के लिए जोरदार तालियां.
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने.
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है.
मैं आपका बात से सहमत हूं. उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should
Markets have been under pressure, and it's the Trump impact that we are looking at. Welcome to Profit Buzzers. This is Hiral Dadia. Nifty 50 trading near the day's lowest levels. We're actually below that 24,800 mark as we speak. Let's pull up Bank Nifty on the screens as well. And then we look at the sectoral heat map because it's pharma and IT. Both of these which are export-oriented sectors which are putting pressure. The only sector in the green is real estate, which was one of the top losing sectors yesterday. That is seeing some bit of a respite today, but your entire screen is a sea of red. Pharma, healthcare, IT, metals also seeing profit booking in today's session. The PSU Bank Index down a trade, consumer durables, defense, all of them under pressure. Let's quickly look at the heat map in terms of Nifty 50 to see the individual stocks as well and see where the pressure is coming on. If we can just get the Nifty 50 heat map, L&T is the top sectoral gainer in today's session. Sun Pharma losing out in trade today. Tata Consumer iShares is an interesting one to watch out for. ITC and a Reliance Industries, which is trading in the green. Let's look at the broader markets as well. If you look at, the mid cap 150 and the small cap 250, both of them at the day's lowest levels as well. Mid cap 150 actually seeing cuts of around 1.2%. Small cap, the cuts are deeper with cuts of around 1.8% coming in there. So that's what the markets are looking like right now. But one stock that is in focus, Paras Defense and Space Technologies. They have caught an order on the back of which we're joined by the management as well. A 34 crore international order from Elbit Security Systems Israel. And this is for the supply of optic fibers, electro-optics. Amit Mahajan joins in. Amit, welcome to the show and a pleasure to speak to you. If you could help us understand details in terms of this order. I know a small order, but how does this aid in terms of business and strategy?
Firstly, good afternoon, Hiral. It's always a pleasure talking to you. Thank you for having me on this show and all the best wishes for the upcoming festive season. As you can see, I'm in Indian clothes, so it's all a positive sign. And so this order comes in during the festive season. It is only positive. Why? It is not small by any means. This is a good order coming in from international borders. And that is an opportunity which will grow from here. This solidifies our order book, which is closing in very much close to 1,000 crores now. And I think moving forward, we are expecting a good trend from international borders. Started looking at Indian markets, Indian manufacturers in a very, very more confident manner than earlier before.
Okay. So taking this into consideration, a couple of orders that have come in for a Hindustan Aeronautics as well yesterday. I'm sure, that's for a different product and everything, but what is the sense that you're picking up when you talk with the Defense Ministry right now? What's the trajectory expected to look like for a company like yours?
So if you see the 15-year roadmap that the Ministry of Defense has laid out, you see that their impetus is on platforms and new technologies such as drones and anti-drones. Now, when we are looking at a very, very broad military preparedness and a wide range of products that a company like Paras has, we stand to gain from almost every line item that is mentioned with quantities by the Ministry of Defense. Now, this gives an industry like us, which is purely a manufacturing industry, purely for defense and space, it gives us a clear visibility as to how we should plan our infrastructure, how we should plan our resources to meet the requirements and the projections that laid out by the Ministry of Defense. When I'm saying this is for domestic market. Surprises like this, or surprises, I would say, opportunities like this coming in from the export market. This is something which is the shift which is happening today. The Indian technologies are, you can say, to an extent field proven. And hence the whole world has started looking at Indian manufacturers for defense applications. And what you are seeing is a small part of that psyche coming in from the global players.
Okay. Amit, we've spoken about the order. What is the execution period? I understand, I think it goes up till November 2026. So what is the margin profile of an order like this?
I don't want to give you exact margins for this particular order, but the most profitable business of our company has always been optics and optronic systems. So this very well lies into that segment. And Elbit has been procuring these kind of deliveries from Paras for very many years. They have been our, you can say, most reliable export partner if I may call them. So we've been enjoying a special supply honor from them, and we are very, very glad to serve Elbit with the best prices, with the best quality.
So what's the kind of opportunity size that you're sitting on international and government modernization initiatives from here on?
The largest opportunity still is domestic, and currently we are sub 10% when it comes to our exports. But the way the export market is looking at Indian suppliers, we are expecting that we will touch the double-digit mark very, very soon. Hopefully next year we will go cross the double-digit mark, and subsequent years we want to grow higher on our double digits, make it a more significant part of our business, the export market, I'm saying.
Okay. And, when you talk about the future outlook as well from here on, does this order actually open doors for potential follow-on contracts or broader collaboration with Elbit Security or any other Israeli defense companies?
Absolutely. So the defense companies are started putting in more confidence, like I've been mentioning. With Elbit now, the order size has started increasing. There are a couple of, or more than a couple joint ventures that we are having and are in pipeline. All of these opportunities will not only help us serve the domestic market, but at the same time, it brings in opportunities for a buyback, for catering to their international clients, where we are offering world-class quality at the same time, a little more cost-effective than what they would do in their own homeland. So these opportunities, these kind of orders, the joint ventures that we have and the joint ventures that we have in pipeline, all of these will be an opportunity for us to grow our export market.
Okay. Thank you so much, Amit, for speaking to us. Always a pleasure to get details from you. So that's the management of Paras Defense on the back of the order win. The stock, though, trading near the day's lowest levels as we speak, with cuts of 0.3% coming in there. But moving on, let's start with the top story of the day. The Supreme Court has deferred Vodafone Idea AGR plea hearing to the 6th of October. My colleague Danish joins us to tell us more. Danish, the plea has been moved to the 6th of October, I beg your pardon. The stock under pressure, what are you picking up?
You rightly said the top court has deferred Vodafone Idea's plea challenging DOT's additional demand of 9,450 AGR dues. This has come in that point in time. Even last week, we saw this same matter being postponed for a week. But in today's hearing, SG Tushar Mehta, which was representing the Indian government, he clearly said that they don't have any issues with the recalculation that Vodafone Idea is demanding right now, and they're not against the plea. But since DOT, which is the Department of Telecommunications, that they need a little bit more time to look at the calculations recalculated, and hence this hearing has been deferred till October 6th. But let me take back to you, this is a big matter, and initially this was challenging Supreme Court's 2019 judgment in which the government had come out with certain demands for different all the different telecom companies, and Vodafone Idea, which we know that the financial condition is not good right now, and hence they were stating at another 9,450 crores AGR demand. So all in all, if we see, there is no relief from Supreme Court for Vodafone Idea yet, but this matter has been postponed till next week.
Matter has been postponed. In fact, that stock is in focus as well. Thank you so much, Danish, for joining in. Let's get in Nirav Ashraf, Latin Manharlal Securities. Nirav, welcome to the show and a pleasure to speak to you. Your quick comment in terms of Vodafone, the AGR case has been delayed to the 6th of October. What would you advise investors and traders to do?
Good afternoon and thank you for the invite. I think it's a negative as far as the stock is concerned, and we've seen a request coming in for a plea which has been filed by Vodafone for the recalculation of the AGR dues, and I think this was a crucial hearing because the Supreme Court has entertained this plea, so they will be considering this plea, but they need more time to study the calculations, etc. So I think the next hearing is scheduled for October 6th. So I think for the time being, it's a negative as far as the stock is concerned, and it's a negative for Voda Idea as well as for Indus Towers as well. we still maintain the view that from a fundamental perspective, I think Bharti Airtel is a far better bet at this point in time.
Okay, so a Bharti Airtel is a far better bet as compared to Indus Tower or a Vodafone. That's the word coming in. Nirav, the other one is JSW. Now, you know, the Bhushan Steel case now has gone in their favor. What would you advise investors to do with that one?
I think this at best is a relief rally as far as JSW is concerned, and I think this matter has been going on for long. It's been dragging on for long. So I think at best we can expect the stock to stabilize from the current levels and move up further in the time to come.
So that's JSW Steel. But US has gone ahead and slapped 100% tariffs on branded pharma imports from the 1st of October. Now, this could be a big blow to India, as US is the largest market for Indian drug makers. Sun Pharma is one of the companies that gets impacted. Varsha joins in with all the details. Varsha, you know, the initial conversations that we were having was that probably the impact will not be very big, but there is a knee-jerk reaction that the markets are looking at. Maybe the recovery does come in, but what is the fundamental impact you're seeing?
Yeah, thank you so much for that. You know, as you rightly said, the 100% tariff has been imposed on patented or branded products and not on the generics one. Even the tariffs will be exempted if the companies already have a manufacturing facility in US, or they are building up the manufacturing facility in US. Now the good thing over here is there is no tariffs on generics, and that's a positive thing because India is a hub when it comes to export of generics. But why generics companies are also under pressure? Because there's a fear among investors that maybe tomorrow Trump can come and impose tariff on generics. So one of the reasons whole pharma sector is under pressure. But talking about the negative impact of this tariff imposition on Indian companies, let's start with Sun Pharma. Export specialty drugs like Illumia forms almost 19% to the overall revenue. Well, next is Biocon. If you see, the insulin, a majority of the products of Biocon has been manufactured in India, although Biocon has gone ahead and opened a manufacturing facility in US, but that is for generics and not for specialty. And even Syngene, that is the subsidiary of Biocon, has also gone ahead and opened up a facility in US. So Biocon is actually going ahead and setting up the manufacturing in US, but majority of their products are still manufactured in India, and hence that may be impacted. Moving on, Aurobindo, if you see, their oncology products is made in India. One of the sites in US is under under observation, that is received form 483, and if that approval will come, then the tariff would be exempted when it comes to Aurobindo. Moving on, let's talk about the CDMO companies. CDMO companies will be impacted, those who cater to innovator companies. Now, let's see what are the positive impact on Indian companies, starting with Jubilant Pharmova, because of the US CDMO fill finish lines will be positively impacted. Then you have Zydus Life Sciences, which has gone ahead and bought 2 biological units in the US, and have entered biological CDMO space as well. Then Alchem Labs is also setting up a small CDMO unit in the US, hence a positive impact. Piramal Pharma, if you see, they've got multiple US CDMO sites, hence positioned to benefit. So there are, generics companies will be benefited, but there are some companies who will be negatively impacted and some companies will be positively impacted because of these tariffs.
Thank you, Varsha, for that. Nirav, your opinion on this?
Well, I think when generic companies are definitely exempt from this, but one has to keep in mind certain factors, that the margins in the generic drugs are not on the higher side. So we generally tend to have EBITDA margins in the range of 12 to 14% and net profit margins in the range of 5 to 6%. So not much to gain over there. So even if the tariff is levied, then it can be a body blow as far as the generic companies are concerned. In the case of branded drugs or the prescription drugs, I think there's a huge amount of investment which goes into R&D, into advertisement, marketing, etc. And these are developed markets. So the quality of the margins is very thick. So I think, having said that, the levy of the 100% tariff is definitely a negative as far as the Indian pharma sector is concerned.
Neera, for that. In fact, two other sectors that get impacted is furniture and auto industries. From 50% duty on kitchen cabinets to 25% tariffs on heavy trucks, the impact is sector-wide. Mahima is telling us what this would mean for both of these. Mahima, over to you.
Right, so Hiral, the impact on both of these sectors would not be direct, it will be an indirect impact. I'll start with furniture first, where they'll be imposing a 50% duty on kitchen, bath and related items from 1st of October, specifically in terms of kitchen cabinets as well as bathroom vanities. And additionally, they'll be charging a 30% tariff on upholstered furniture. So these are the two tariff rates that have come out on the back of furniture products. Well, this will have a indirect impact or maybe some impact on companies like Stovecroft, Stanley and Carousel. Carousel will have a direct impact because they do have some exposure to importing of US, but the companies don't exactly make these items, but they do sell some of these furnitures or some of these items to something like an IKEA or a few items which can be considered as associated products. And this will of course not have a direct impact, but might see some indirect impact, and we are seeing that kind of pressure in the stocks as well today. The next one is auto, where as Hiral mentioned, they'll be imposing 25% tariff on all heavy big trucks is what they've said, and made in other parts of the world. Well, again here no particular listed company directly exports heavy trucks to the US, but in terms of we talked about this, no OEMs will directly export trucks to the US, but indirect impact may be on auto ancillaries. So something like an RK Forging or Bharat Forge, you can keep an eye out for, because these two companies sell their parts to companies manufacturing trucks in the US. So might see some impact on these counters being auto ants. So these are the two sectors which will not have a direct impact of the Trump tariffs, but might have an indirect impact.
Thank you so much for that. Neerav, when you're talking about the auto ancillary space, Bharat Forge or RK Forgings, the other auto companies, ancillary companies that could be supplying parts to companies or OEMs in the US, what would you advise investors to do with these names? And secondly, the other furniture companies as well, which are not direct sellers, but they supply to companies that sell there. What would your view be?
Well, I think on the furniture side, as you pointed out, Carousel could be impacted, but rest, I think the small, medium enterprises could be impacted to a certain extent on account of exposure to the US market. As far as auto ancillaries are concerned, I think no direct impact as such, but of course the forging companies already, it is there in the price at this point of time. And as far as auto ancillaries are concerned, most of them are putting up a strong front at this point of time. We are seeing a lot of auto ancillary stocks in the positive at this point of time. We have Gabriel, Banco Products, Endurance Technologies, most of these stocks are up in trade at this point of time. So I think a very brave front has been put forward by the auto ancillary companies.
Okay, that's with AutoAng. Thank you, Neerav, for that. Stay with us. In fact, another stock that we need to discuss right now is Awari Energies. In fact, that stock opened under pressure today, and this is on the back of an important manufacturing base will continue. No, I think I'm just going to take the wrong lines there. There was a US probe when it comes to Awari Energies, and what they've said is that India's solar panel maker is under a US probe. The customs suspect evasion of anti-dumping and countervailing duties by the company, and temporary restrictions have been put in place. On the back of which, the stock is down 6.5%. The company has just come up with a clarification. In fact, Varsha is joining me in the studio to tell us more about it. Varsha, what does the clarification exactly say, and what is this probe right now?
So yes, so as you rightly said, the probe was that the complaint was that Awari has gone ahead and took solar cells from China and but sold them in the US, naming it as an Indian brand, and because of this the US has already put some temporary restrictions on Awari. Now, just for a benefit of viewers, Awari makes solar panels and solar modules rather. If found guilty, Worry may not be able to, easily export all these solar modules to US, considering US is an important market for Worry, constituting about 17 to 20% of turnover to the overall. Now, what they've said is that company is going to cooperate on in ongoing investigations, as US is their largest market, and they're gonna go ahead and cooperate when it comes to the US.
Tell me one thing, Varsha, over here. They're saying that, US becomes an important manufacturing base for them, and they will continue to cooperate with the US government as well on the back of the probe. Two things. They've already made acquisitions in the US right now to start manufacturing in the US. And two, they're looking to build that manufacturing base as well. So is there a possibility that if they are found guilty, even the deal that they have in terms of the acquisitions or the base that they are building in the US to supply to the US market, that comes under doldrums?
Yes, that is a possibility, because if they found if they're gonna found guilty, then US would not be going ahead and doing the agreement with the Worry, and that would actually affect Worry a lot, because as I really said, that 20% of their business comes from US, and they're going big when it comes to US market. So yes, that would really impact them.
Interesting. I think the future prospects become and get into trouble, because they're expanding from 1.6 gigawatt module manufacturing unit in Texas. It is being expanded to almost 3.2 gigawatt. Nirav, what would you advise investors to do? Do you think this is just a near-term headwind and this kind of a cut should actually be used as an opportunity to buy the stock? Or would you say these are big troubles that could be brewing for a Worry?
Well, generally, there is a provision for a country of origin in the case of imports. So I think this would be a grave allegation of sorts, because it's been a case of mislabeling and misrepresentation of Chinese products as Indian-made products. So I think the implications could be slightly on the higher side. So I think it's better to wait and watch how things develop. It's better to avoid the stock at this point of time.
Avoid a Worry at the current juncture. That's the word coming in. But thank you, Neera, for that. Stay with us. We'll quickly slip into a short break. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
बहू, आज जो कुछ हमारे पास है सब इनकी देन है। एक अगरबत्ती की दुकान से इतना बड़ा बिजनेस खड़ा किया।
प्रणाम दादाजी।
दादाजी, ये तो पुष्पा अगरबत्ती के मालिक हैं, घनश्याम दास। इनके स्टॉक्स में इन्वेस्ट किया था, इसीलिए आज ये सब कुछ है।
जो आगे की सोचते हैं ग्रो करते हैं। डाउनलोड ग्रो फॉर स्टॉक्स, म्यूचुअल फंड्स एंड IPO।
और ये कौन सी कंपनी के मालिक हैं?
ये तो दादाजी हैं।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
One night before we were supposed to get the money in the bank, we get a phone call and the deal was off. We were in the middle of COVID. We were in a situation where we did the math that at zero revenue, we could not survive more than 3 to 4 months.
You're 25, you work for a multinational, you're living in the south of France.
Yes.
And you're not liking it. You want to come back to India and work harder.
We realized that legally it was, not allowed to work more than 35 hours a week. When I asked my boss for a permission to come on a weekend, he he got very upset.
आप वो इंडियंस हो जो सबका नाम खराब करते हैं. Tell us what the kernel of the idea starts from before you go mass consumer.
People are opening multiple browser windows or tabs to do the same search on 3 OTAs, 2 airlines. So we built this meta search engine that would, crawl or use their APIs to give you where the best deals were, and then we would lead you to them to buy.
To almost finish each other's sentences. So that chemistry is really there. One thing that really annoys you.
Hard to, have a discussion that's not very objective, because he's the one who's more data, numbers and objective driven at times. Sometimes, I have to control his positivity about certain things. Hold on, this might not.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है.
और रहमान
सोनू निगम के लिए जोरदार तालियां.
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं.
Hello and welcome to NDTV Profit. It's the GST bonanza that we're talking about right now. Maruti Suzuki, spectacular run-up that we've seen in terms of the bookings that have come in the festive season starting the first day of Navratra. To talk to us about this, Partho Banerjee, Senior Executive Officer, Marketing and Sales at Maruti, joins in. Partho, welcome to the show and always a pleasure to speak to you. The first commentary that we heard from a Maruti in terms of the festive season booking was spectacular. In fact, at the NDTV Profit Conclave itself, Maruti did indicate that from a negative 6%, we're looking at a 10%, which is nearly a 16%, swing. Where do you stand right now? Because I'm sure it's ballooned further.
I think after the start of the GST 2.0 reform from 22nd of September, we are seeing a very good response. In our showrooms, on average, we are getting close to 80,000 inquiries daily. And we have almost now retailed 80,000 vehicles in the first 4 days of the Navratra. So that's a very good sign. And what we are seeing is the response in the small cars, typically the vehicles which are in the 18% GST slab, the response is further, I would say, better than the vehicles which are there in the 40% GST.
Okay. So, Partho, what's the kind of conversion rate that you're seeing right now? Because 80,000 inquiries per day, what's that translation looking like in terms of bookings?
We are getting almost close to 18,000 bookings every day. So earlier we used to get 10,000. Now it is close to 18,000 bookings every day. That's the type of response we're getting.
And has that momentum continued from day one to day as well?
In fact, it is getting further and further better, I would say.
Okay.
As the people are coming to know about this new strategic pricing of the small cars, we are seeing in the tier 2, tier 3 cities, our booking growth is now almost 100%. So we are very confident that as this message further trickles down, the response is further going to improve.
Okay. So Partho, is it right to say it's the tier 2, tier 3 where you're seeing this kind of excitement in terms of bookings also that is coming in the small car segment, number one? And point number two that I want to talk to you about is when you look at the other aspect, the non-small car segment, What is that trend looking like?
See, if I give a perspective in terms of how the top 100 cities and the beyond 100 cities are doing, in small cars, big cities are also doing well. The top 100 cities, there the growth is to the tune of 35%. But if we go to the beyond 100 cities, there the growth is to the tune of 100%. You need to understand one thing, that there was a huge set of two-wheeler customers who are there. They would like to upgrade to a four-wheeler. And in order to do that, they were waiting for someone to come up and take this initiative of offering them a product at an affordable price. So thanks to our Honorable Prime Minister and Finance Minister for taking this initiative. And on the top of it, our Maruti management has taken a call that we need to increase the motorization in India. Because the car park, and if we see the penetration of car, it's just 34 per thousand.
Okay. So Partho, are you seeing that a lot of your two-wheeler players or buyers are the ones who are actually getting into the four-wheeler segment when you talk about the small car prices that have gone down?
So one thing you need to understand, that in the last 4 days, if we are getting so many inquiries and bookings coming, that means there were a set of people who wanted to own a car, but unfortunately it was beyond their reach. Now, once we have been able to strategically position the car, these all customers are coming to us to buy the car. And in order to make that car more affordable, we are going to launch an innovative finance product that just by paying 1,999 rupees per month, you can own an entry-level car. We're very soon going to launch that also.
Okay, so, you know, from that 18,000 per day kind of a booking number with a scheme like this, Partho, what is the plan of Maruti? What do you plan to reach in terms of bookings per day?
Our endeavor is to serve our customers. So we want the customers who are coming to us and booking their car to deliver the vehicle as soon as possible.
Interesting. Okay, now what is the kind of impact, Partho, that you're going to see when it comes to utilization and deliveries? Because the key aspect over here is the capacity that you have, the quantum that you're going to manufacture, and by when will the delivery start?
So our production team, supply chain team, they are working equally hard. And our endeavor is to serve the customers as quickly as possible. But yes, through your channel, I would like to request all your viewers, this is a golden opportunity to own a car. It's a once in a lifetime offer. The customers who want to own a four-wheeler, please book your car, because we will like to serve you as soon as possible. But if you book it late, then maybe you have to wait for a little longer time.
But Partho, what's going to be the current waiting period according to you? Because I know there was inventory already, but the build-up that you're seeing right now, what's that average waiting period that a consumer is going to see?
See, right now we are able to serve the customers who are booking the cars because the dealers are having the inventory. But very soon we will be having a waiting period in some of the variants.
Okay, and what will that look like?
Right now, we are trying to serve the customers. Maybe we have the vehicles in our factory also. So the transit time is going to add to it. So there could be a 1 week sort of a waiting period which may happen because the vehicles we are transporting from factory to our dealerships.
Okay. If you're talking about the larger segment, that's the SUVs and the MUVs, what's the trend that you're picking up on that aspect? Are you seeing an increase that's coming in there as well? I'm sure it's less than the small car segment. And what's the impact you're going to see on business?
See, overall, across all the segments, there is a good traction. But as I told you before, the vehicles which are in the 18% GST category, there the response is much, much better than the vehicles which are in the 40% GST category. Because fundamentally, the price reduction which has happened in the 18% category is 8.5%. Whereas in the case of 40% category, our case Maruti, the price drop has been to the tune of 3.5%.
Okay. So what's the highest selling model, Partho, right now?
Right now, we are just trying to serve our customers every day. In fact, the bookings are coming across all the models and smaller cars, be it the Swift, Bronx, Baleno, Wagoner, Alto, traction is equally good.
No, correct. But if you have to tell me the top model right now basis the demand that you're hearing from your dealers, which one would that be?
Harshal, one day it happens to be Wagoner, next day it happens to be Swift, third day it happens to be Baleno.
Okay. So that's the movement and demand that you're seeing.
Too early for me to pick up one model and say that. So that's why I'm saying right now all cylinders are firing.
Absolutely. Okay. Do you think this GST 2.0 is going to get Maruti back to its market share category where it used to sit on? The lost market share will come back on the back of this, at least for a Maruti. Let's not talk about the others, but where you were to where you become right now.
I think it's too early to do the forecasting, but we strongly feel that this will really help the customers to own a car. And in India, the car penetration is just at 34 per thousand. So this will help increase the motorization in Indian auto industry.
Well, that was the management of Maruti Suzuki giving us some key numbers there. The one which really caught my eye was 18,000 bookings a day for that kind of a response because you've lost almost 21 days of sales, so it's definitely going to be something to watch out for the monthly numbers, to say the least, as well. But let's stick with the auto pack as well, because Tata Motors was in focus yesterday as well, and we did put out that story of the production getting impacted for Jaguar and Land Rover in the global market, especially in UK. This came after a cyber attack, halted production since August 31st as well. JLR is now seeing some signs of recovery as well. Key sections of its digital infrastructure are gradually coming back online, and a comprehensive recovery program is also in full swing. My colleague Danish brings us the latest developments.
Well, things are slowly limping back to normalcy for Tata Sons' own luxury car maker JLR. Well, the company suffered through a cyber attack which was reported on 2nd of September, and since then the company has been doing efforts to restore its systems, and twice it has been unlucky. But now the company showed that from 1st of October, all the systems will be up and running and the production will also restart. Well, JLR told NDTV Profit that it is doing all the efforts to ensure that everything is back to normal soon. They told NDTV Profit that a particular financial system is up and running again, by which the company is now able to clear the backlog of vendors and other stakeholders. Similarly, this particular system is again restarted, and through this the company is also able to sell and register cars. And let me tell you that this was one of the primary reasons how we came to know that there was a cyber attack incident at JLR, as the company was unable to sell cars in the past few weeks. But now, all in all, if we see, sources have told NDTV Profit that from 1st of October, all the situations and all the systems will be up and running at JLR. And even right now, certain systems and certain IT infrastructure has been restarted, and the company is sure that in the coming few weeks, the things will get back to normal, and the JLR will be able to sell its cars and manufacture its cars as this was able to do a few weeks ago.
Well, thanks so much for that, Danish. But, we still have Neerav Asher of Latin Manara Securities, as well as Akshay Bhagwat of JM Financial as well. Gentlemen, thanks so much for staying on as well. Neerav, let me come to you. We just discussed the auto pack last week as well. Given the strong bookings of Maruti, they gave out the number of about 18,000 bookings a day in this particular time frame, these 9 days. Does that give you more confidence, and what are your top picks in this space?
Yes, definitely. It gives a lot of confidence. It's been a kind of rebirth for the small car segment, and it's made a strong comeback. Hopefully, this should sustain going forward. And even Hyundai has come out with strong numbers. We had good numbers being reported by Tata Motors also. And I think today there was an interesting article on Car Trade also, that how there has been a unprecedented traffic on their engines, which they have not seen hitherto. So I think car wale, bike wale, they've seen basically a jump of around 74% in the inquiries. So I think this also shows the kind of enthusiasm which is there in the auto sector. So I think it augurs extremely well for the sector.
We're also being joined by Akshay Bhagwat as well. Akshay, thanks so much for joining in, giving us time here today. On the charts, do you see some more positive rally for all of these auto names, and is there any which could have the highest upside from these levels as well?
Good afternoon to all. Yes, absolutely. I think if you look at the rough patch which the indices have been and the way the momentum is still intact in majority of the names in the auto space, it's clear that the prices or the money from the short-term trading perspective is clearly chasing the auto.
Okay, I think we have some audio issues. We'll be fixing that and bringing you the insight once again. But before that, another stock that is on our radar is L&T. The stock is up more than 3% in trade today. Company has formally announced its exit from Hyderabad Metro Rail Phase 1. Anushi joins us with all the details as well as their rationale for the exit.
Thank you, Mahima. Well, this was something which was anticipated for the company, considering that the debt picture from this particular project was increasing. Along with this, if you're looking at what's the current update now here, L&T has marked its formal exit from the Hyderabad Metro Rail Phase 1 project. With this, now the state government will take over the project, which would include about taking up a debt picture of around 13,000 crore. And also with this exit, L&T will get their equity investment of around 2,000 crore from the state government itself. Now, what led to this particular decision? Now, if you look at L&T's net loss from this particular project only widened to 626 crore. This is as of the FY25 figure that we are looking at. So that did impact its EPS as well. Along with that, even the debts were rising from this particular thing, from this particular project. So for this, JM Financial came out with an interesting note wherein they're saying that these losses made up to about 4% of overall PAT for FY25. Along with this exit from this particular asset will lead to about 4% of an EPS accretion going forward. So that is an interesting note that we are watching out for. Further also, if you look at the return ratios, also they are expected to see about improvement by 60 to 70 bips. This is the return on equity metric that I'm talking about. Along with these benefits in view, now the company will also be able to meet its FY26 targets as well. So this is the overall picture that's happened for L&T and why it's in focus today.
Okay, Anushi, thank you so much for giving us those details. Akshay, go ahead and complete what you were talking about the auto space and then your view with regards to L&T.
Yeah.
Okay, I think we are still facing that technical issue. So I'll quickly take this up with Nirav then. Nirav, your view with regards to where L&T stands, this recent development of course, and with regards to where fundamentals are concerned.
Fundamentals are quite strong, very strong order book, strong execution. And regarding the metro project, I think we typically tend to have public-private partnership model, which has not worked very well for the sector as a metro sector particularly. And I think there are ridership issues, there are issues with regards to the tariff hikes, etc. So I think in a way this has worked to the benefit of Larsen & Toubro, because they will be handing over the asset to the state government, who would be in a better position to handle this particular asset.
Got the view, Nirav, but let's quickly pull up the Nifty IT very quickly, because in the morning we did see some sell-off on those names, and that's continued actually in the day as well. It's down 600 points on the index. Some stocks like Oracle, Coforge and Tech Mahindra are the top losers, and that's largely on the back of what the Accenture results that came in yesterday as well. Let's quickly pull up Infosys as well, because I can't spot it in this list right now. Infosys as well as let's look at what TCS is doing. Those two stocks also in focus as well. Infosys down 1.5%. TCS is also down exactly 1.5% as well. And that's largely, as I mentioned, on the back of Accenture results. While the results were largely in line with what the estimates were, and there was some beat essentially in terms of no further pressure, at least for the IT companies in India. Let's get in my colleague Jasmeet to get us what did actually the brokerages say about Accenture's impact on Indian IT going forward. Jasmeet.
Well, right, as rightly said, basically Accenture results are read as a crossover for overall Indian IT. So let's quickly understand what our broker is penciling in as a crossover read from the Accenture results particularly. While we have Macquarie's note, what they say is Accenture performed very well in terms of financial services. And so given that a lot of Indian IT sector is focused on financial services, that turns out to be a positive. On the other hand, we also have TCS, which basically focuses more on the financial services. Then they also look at the booking rate for the Accenture. They see that the booking shows a massive growth for managed services, which are doing better compared to consulting. And they also note that they think that clients are still focusing on the cost takeout deal. That's why the macroeconomic is still remain particularly stable compared to last year. While we also have Nomura's note, what they see is the Accenture's FY26 revenue growth guidance has a negative implication of 1 to 1.5% given on the back of US federal government orders. Given Indian exposure to that is less, so that impact will be overall lesser on Indian IT. While they also said that the revenue growth momentum continues to be strong for financial service as discussed. While they also note there have been no noticeable change in the overall macro environment. That's the reason why we see a dip in the Indian IT overall today. We also have Investec. Now what they notice, Accenture prints suggesting there's nothing negative for overall Indian IT from this particular quarterly results. They also note results and commentary only highlight the excellent situation given for Accenture. So this is what the overall brokers notes penciling in for Indian IT.
Well, thanks so much for that, Jasmeet. Neerav, let me come to you. What did you actually make of the commentary as well as in terms of numbers that came out for Accenture? And do you think that largely there couldn't be any more further deterioration in the macro? Because, the one surprising number was that the financial services segment grew by 12% on a YOY basis in constant currency. What do you make of all of this?
Well, I think nothing adversely wrong with Accenture's numbers, but I think the pain point for the Indian IT sector seems to be that that growth has deteriorated. So I think revenue growth is a must. Only then we will see the betterment in the margins going forward. So I think with discretionary spending having reduced substantially, I think Indian IT companies are bracing for a lot of challenges ahead.
Okay, all right. So that's the view with regards to where KPIT Tech and the other IT names are concerned. But on to our brokerage call for the day. Nomura has initiated a buy on Titan. They expect the company's growth to outpace the industry is what they are penciling in. In fact, they've also said that the demand to remain steady and staple, this is what they're expecting in the staple discretionary category. Organized players to continue to grow 1.5 times faster than the industry at mid-teens is what they are saying. They're also saying headwinds largely behind sales growth and margins reset to new normal levels is something that they're expecting for something like a Titan. We'll have to see as to how jewelry pans out here, because jewelry and studded jewelry is where the margins are actually getting impacted by. Q2 likely to be weaker but provides good entry point. We expect a recovery from H2. We've seen that kind of pressure in fact continue in Titan already since the past couple of days. A strong structure story intact, better placed versus domestic peers on a risk weighted basis is what making them in fact bullish on Titan. In fact, Nomura has said that the structure story remains intact, and that is why they are bullish on Titan. Neerav, I'll come to you on this one. In the jewelry space, Titan is the only counter that you're looking at. Any other counter that you are finding attractive?
Well, the most stable one is Titan, and I would expect very good inventory gains going forward, because there's been a substantial increase in the price of gold. So I think that could play out to Titan's favor.
Got the view, Neerav. But Neerav, we leave it at that. Thanks so much for coming in and giving us time across a bunch of stocks and sectors as well. We look forward to our next conversation. But viewers, with that, that's all the time we have on this edition of Profit Buzzers. Stay tuned to NDTV Profit for more.
आज जो कुछ हमारे पास है सब इनकी देन है। एक अगरबत्ती की दुकान से इतना बड़ा बिजनेस खड़ा किया।
प्रणाम दादाजी।
दादाजी, ये तो पुष्पा अगरबत्ती के मालिक हैं घनश्याम दास। इनके स्टॉक्स में इन्वेस्ट किया था, इसीलिए आज ये सब कुछ है।
जो आगे की सोचते हैं ग्रो करते हैं। डाउनलोड ग्रो फॉर स्टॉक्स, म्यूचुअल फंड्स एंड IPO।
और ये कौन सी कंपनी के मालिक हैं?
ये तो दादाजी हैं।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
One night before we were supposed to get the money in the bank, we get a phone call and the deal was off. We were in the middle of COVID. We were in a situation where we did the math that at zero revenue, we could not survive more than 3 to 4 months.
You're 25, you work for a multinational, you're living in the south of France.
Yes.
And you're not liking it. You want to come back to India and work harder.
We realized that legally it was, not allowed to work more than 35 hours a week. When I asked my boss for a permission to come on a weekend, he got very upset.
तो आप वो Indians हो जो सबका नाम खराब करते हैं. Tell us what the kernel of the idea starts from before you go mass consumer.
People are opening multiple browser windows or tabs to do the same search on 3 OTAs, 2 airlines. So we built this meta search engine that would, crawl or use their APIs to give you where the best deals were, and then we would lead you to them to buy.
To almost finish each other's sentences. So that chemistry is really there. One thing that really annoys you.
Hard to, have a discussion that's not very objective because he's the one who's more data, numbers and objective driven at times.
Sometimes, I have to control his positivity about certain things. Hold on, this might not.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है NDTV के साथ वो बहुत बहुत पुराना है।
अरे और रहमान
सोनू निगम के लिए जोरदार तालियां।
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो NDTV सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं the best app to use is the NDTV app.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI for the long term?
Buy, sell or hold.
The answers you need
straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Hello and welcome. You're watching Small Cap Buzzers on NDTV Profit with me, Somit Sarkar, and my co-anchor Anushi. Well, Anushi, not a good day for markets. This is the sixth consecutive session where we are seeing a decline that is coming in for the Nifty. In fact, in the last 6 trading sessions, we have declined as much as 700 points. Even the Nifty Bank Index is down as much as 500 points, while the Nifty IT Index, that has declined more than 650 points in trade today.
Well, absolutely, Samit, and it's a mix that we're looking in terms of what's happened with the macro scenario. We've seen a couple of tweets coming from Donald Trump, which has led to this kind of impact that we are seeing across sectors. This includes the likes of pharma as well as IT as well. Now, let's talk about what's happening with Nifty 50 currently, trading near its day's low, 0.6% down. In fact, Nifty Bank also that we are seeing at not much of an excitement over there. In fact, all the sectoral indices that we are seeing are trading in red, with Nifty Pharma and Nifty IT seeing the majority of these cuts that we are looking at. In fact, if you look at FMCG, if you look at pharma, that's down about 2%, with Nifty Healthcare also being down about 2%. In terms of the point contribution table also, if you are looking at what's leading to this kind of track, now here we are seeing, M&M, Infosys, ICICI Bank under pressure, but what's doing relatively well is something like a L&T, and this is on the back of, the company exiting the metro rail project that we are looking at of phase 1 is what we are seeing. So some bit of a positive impact coming for this particular counter. ITC, Reliance Industries, other two counters in green. But in terms of what's happening with the broader markets now, in broader markets also not much of an excitement there as well. Nifty Midcap 150 down about 1.6%, in fact, and even small cap 250 we are seeing cuts of over 2%. Quickly pulling up what's happening with BSE 500 to get a sense of individual stocks. Now, in red, we are looking at RT Drugs, Laurus Labs seeing cuts of over 7%. Even Vodafone Idea has been in news today, 6% of a downtick for that as well. But what's working out is something like a L&T. We just spoke about it. Hitachi Energy, Jupiter Wagons are other couple of stocks which are trading in green today. So, Samit, that's the overall picture that we are seeing for markets today.
Well, let's go across to our first discussion today, and it will be on Carousel. Now, this stock is down. In fact, we spoke to the management yesterday. The management seemed quite optimistic on their growth plans, but the latest commentary that has come in from the US President Trump has led to this downfall in the stock. Let's get in Puneet, who can give us more details on why the stock is down today.
Well, definitely. Thank you for that. So, Carousel, for the uninitiated, does manufacture a lot of quartz sinks as well as steel sinks, and now has ventured into kitchen appliances as well. Now, the key notification that's come in, as part of a new set of tariffs, it is coming that, there has been a 50% duty now impacting furniture essentially that will be on, kitchen, bath as well as related items from 1st of October. Now, while, there is going to be additional 30% tariffs as well which will be on upholstery furniture as well. And while a lot of these companies do have exposure to these markets, they would be having that indirectly via IKEA as well. So there could be the exact component of direct sales to US won't be available as of now, but there will be an indirect impact because of their supply to IKEA as well, and that is going to be something to watch out for. The management, as you rightly said, was with us yesterday in this show itself, and they mentioned about their growth prospect in the kitchen appliances space. They are looking to enter a lot of new categories with that. What's also interesting is they filed an exchange filing yesterday as well, mentioning that they don't need to actually raise any kind of further capital. The last QIP should suffice to do any kind of ventures going forward as well in the kitchen appliances segment. So there are multiple news flows, and this will be needing a lot more clarification, as similar to other which notification and news flow that comes out of the Trump administration. But today the stock's down 5%, largely on the back of this news flow.
Right. Thank you, Puneet, for giving us those information. Vineet, coming to you, we spoke to the management yesterday. They gave a very strong outlook. They also said that despite the tariff, they won't see much of an impact that could come in on the business. But this new announcement that has come in from Trump, in fact, the company doesn't even have a direct exposure to the US market. But still, the market has punished Carousel at this moment. How are you looking at this counter? Would you advise your clients to go ahead and buy this stock given the fall that we have seen?
No, we are not advising clients to venture into the markets, export markets as of now. Because right now we are seeing revenue pressure coming from various tariffs which have been initiated. It's also impacting profitability. While Carousel has been spared, but their future plans of getting into kitchen appliances will hit incoming capex, and that is what the market is now factoring in. Additionally, we are going to see some dollar declines also happen as we go out to the credit event. US has a very, very high trade, you have very high debt, and that debt has to come off. And the only way that it can come off is by, inflating it away. So I think that we're going to see some sizable, deceleration of export volumes, and that is going to impact the profitability as well.
Okay, well, that's the outlook that we are seeing for Carousel Limited in focus today. We spoke to the management as well, so do catch that conversation as well. But another stock in focus today is Quality Power. Now, what's happened with this stock is, it has had a recent order wins in focus. Along with that, they've had some agreements as well. But, to talk to us about the company and the strategy forward, we are joined in by Mr. Pandya, the Joint Managing Director of the company. Hello and welcome, Mr. Pandya, and welcome to the show. First of all, I just want to ask about the recent, agreements that you had. This includes the likes of you signing a pact for the TND India as well. Along with that, you have a couple of order wins in focus as well. Just give us a brief outlook in terms of the recent announcements in focus.
Very good afternoon, ma'am. I believe the agreement with Hyosung was historic because the GIS ecosystem is growing quite well in this country. Because of the rapid urbanization, the demand is growing exponentially. The problem is not the demand. The problem is that we are not able to produce land enough to be able to accommodate those many substations, which means with the given land, we need to be able to deliver substations which are 2 or 3 times much larger. So that is where the gas insulated substation technology comes in. There are few global players who are supplying these kind of substations from their factories in India, but largely their supply chains are coming from either Europe or Southeast Asia. With Nehru, we started our partnership with one of our very leading multinational, Hyosung, TND. Hyosung Group is about a $17 billion company, so I believe it's a very great partner for us in these development of instrument transformers. But I believe this is a foot in the door. We see that we can develop far more number of components through our subsidiary Sukrut, even our composites division. I believe as and when we start developing, we would start commercializing the technologies.
Okay, Mr. Pandya, just want to understand, with these recent order flows also that we are taking picture, I'm talking about the 11.5 crore of order for supply of reactors that we are looking at. Along with that, you've got a fact system related order of 75 crore as well. Where does the current order book stand at? Because in the first quarter, we saw about a 775 crore of a backlog. So just want to get your take on the current order book.
The current order book is healthy. I think it's north of the number that we have guided. We still have a lot more orders coming in. We have already guided the market that the larger HVDC orders are expected in Q2 of this year. H2 of this year. And we are also seeing a lot more of the STATCOM projects coming up globally, which means we will have some news to tell in the market in the next few quarters. Apart from it, all our subsidiaries are doing quite well. Mehru is at an all-time high, not only from an R&D perspective, also from the innovation and technology perspective. Even the orders for the 75 crores worth of fax was taken by our subsidiary NDOX for a steel factory in Sweden.
So just want to get this in picture, like what's the kind of execution that you're looking at? Let's just take the current order book, which is there about 775 crore. How much of it would be executed this year? And as you mentioned that, second half is the space that we are looking for HVDC orders. Now, these are some big ticket orders that we are looking at. So considering that, what's the kind of inflow projection you have for this particular year and even for FY27, if you could give us a guidance on that?
The public guidance that we have given in the earnings call is about another 500 crores more of order from the last guidance call. Apart from it, we are also creating technologies like the GIS is a new ecosystem. I believe there are between 300 to 400 crores of import substitution that can happen, and we are one of the few players or one of the first players to get into the ecosystem. So as we create more technologies and we get into niche markets where we are talking about import substitution, we will have not only growth on the top line, but also on the bottom line margin improvements.
Right, sir. Given the strong order inflow guidance, just wanted to understand from you, how are you expecting or how are you seeing your FY26, FY27 revenue and EBITDA to grow?
For FY26, we have already guided between 700 and 800 crores, high teens or close to 20% margin. We believe we are on track to achieve that. Because we being a primary manufacturer, most of our orders are between 12 and 18 months. That's the kind of execution cycle we are looking at.
And with
most new orders are at good margins and stable margins.
Okay, so if you're looking at the current margins, that was about 17% this time. If you can just reiterate the kind of margin outlook that you have for FY26. Along with that, just want to understand, more about the Mehru Electricals, the recent acquisition that you have in place. What's the kind of order book that you have from this particular segment?
The Mehru is a high voltage instrument transformer player. They have in excess of 40% market share in this country, a primary vendor to almost all the energy transition and transmission projects. What we are trying to do with Mehru is introduce them to the global customers and also expand their capacities in the traditional markets, A, and B, we are also looking at integrating them with a newer technology space wherever the opportunity allows us, something like GIS. They've had a 47% increase in margins post acquisitions in one quarter. Our current product lines, which is a coil product line, as of last quarter is delivering about 34% PBT. Our fax product line is giving us between 25 and 26% PBT. It's with Mehru, that's around 10%. The guidance to improve them is about 15% by the end of the year, which will ensure that our total blended margins increase. What we are excited at this moment is not only the integration, is what kind of technologies we go in, because these are innovation that we are getting in, which will actually start delivering in 2 or 3 years from today.
Right, sir. Just wanted a quick update from you on the capital expenditure plans that you have announced so far. What has been the progress and any more in pipeline that you have?
I wouldn't speculate at this moment, but the intention is there to grow aggressively. We are slightly ahead of schedule as per my last call on the large project that we are getting in, and we are trying to go in faster considering the order book that is piling up. With regards to other technologies, we will take it up one by one. Once we are able to commercialize a few technologies, we would start looking at more capex, but being a very high asset turnover ratio, normally in excess of 6 or 7, I think we would also use internal accruals to pay it off. We have enough cash being generated on the books.
Okay, so just a follow-up on that. So Sangli plant, you are expecting completion by second quarter of FY27. For Cochin plant expansion, you're projecting completion by November of this fiscal year itself. So is that on track? And just want to understand, with this capex coming in from FY27, we'll see most of these, adding to the revenue part of it. How would utilizations be looking like? If you can give us more details on that.
So these are just factories where you are creating massive capacities, but also the supply chain is what we are working on. We are also putting a magnet wire factory, a very large scale magnet wire factory. The machines are ordered. which will bring us into the magnet wire technology that will be able to feed this plant. Not only that, once we are able to feed our own plants, we would also looking at selling it outside to the outside market. So as a technology ecosystem, we are sitting in excess of about 15 to 18 technologies at product lines, which we are going slow to the market. We internally use this technology to able to scale up the business before we jump in outside. So we are focused at this moment on the supply side of the things to be able to ensure that the capacity of the larger plants is brought to full capacity as fast as possible.
Fair enough. And coming to
The
my
Cochin factory should be inaugurated in time. We have just also got a Pune facility now recently post the Sukrut acquisition. So even the Pune is where we are looking at some great orders and great moves coming forward in the next few quarters.
Can you just speak more about this new acquisition in place? What's the kind of growth that you are seeing from this particular area? What's the kind of avenues that you plan to expand in?
Sukrut was a very old legacy company, more than 6 decades old, one of the very few transformer component manufacturers globally, taken over by a German multinational, and we picked it up from the German multinational along with Yash High Voltage, another listed company. These guys have about 2 or 3 peers in the Indian market and about a dozen peers in the world market. Some of the breakthrough technologies, a great factory with a German heritage. We look forward to taking these products to the US market and the European market, apart from increasing the market share in India.
Okay, and my final question to you is about the export opportunity ahead. What's the kind of mix that you anticipate from here, and which are the markets which would lead to this kind of growth going forward?
We still have a decent intake coming in from the US. I believe in most of the high voltage equipment space, US does not have capacities or technologies to manufacture. We have been getting orders from Europe, Middle East, Southeast Asia. So the entire transmission ecosystem across the world looks bullish. But the Indian market is where we are dominant, being the single largest and the only player in most segments. We believe that we should be able to contain the export to domestic at 55-45 ratio.
Okay, well, thank you so much, Mr. Pandian, for joining and sharing that outlook on the company. But with that, let me go across to Vineet for his view on quality power. You heard the commentary, the management remains bullish in terms of where the FY26 or even the medium-term perspective is considered. What's your view?
No, I think it's a very good company. They're making all the right investments, scaling up capacity big time. And the company should do well going ahead. Only thing is, in the short run, the stock has moved too far, too fast. And there could be some corrections on the angle. So you can look to buy the stock on declines.
Right. A key commentary coming in from the Laurus Lab management. They are saying, in fact, it is specifically to NDTV Profit, and they're saying that less than 5% of the revenue is shipped to US, and they believe that any tariff burden that comes in will be passed on to clients. So negligible impact is what they are seeing, and they don't expect any significant impact to come in from this additional tariff. Vineet, coming to you on this thing, Laurus Lab was down around 7% in trade, but this commentary that has come in from the management seems quite positive. In fact, they are saying that there won't be any impact of this additional tariff. Do you concur with that view?
We are quite positive on Laurus Labs. I think it's one of the few, chains within CDMO which has set up global scale manufacturing capacities. They really invested in their R&D, capabilities, and the market is rewarded. One thing we have to understand is, at 900 plus, the valuations are very heady high, and with the bear market ensuing, we are seeing a little bit of profit booking coming on the back of the tariffs that have been announced. At lower levels, around 750, 775. I think Laurus will become a very, very good entry point, for us, second leg of launch. I think this is one of the stocks that should be bought. But as I said, no hurry right now. Just track the stock around 750, 775 levels.
Okay, so that's a clarification coming from Laurus Labs with stock down about 6%. Now, another stock in focus is RACL Gear Tech, and it's up over 12% in trade. In fact, let's get across to Puneet for more details on this one.
Well, thank you for that. So it's definitely seen a positive momentum today. Stocks also up almost 28% on a year-to-date basis. And when you look deeper, there is, that benefit of being in the auto space at this particular point of time. largely benefited from the GST rate cuts amongst others. So when you look at the stock, it's also, volumes are almost up 22 times its 30-day average, and this is the best intraday gain for the stock since July of 2025. When you look at, about the company, they're largely manufacturing as well as exporting a lot of the automotive gears as well as, components, and they have roughly about 2 manufacturing plants. One is in UP and the other one is in Noida. When you look at the company's, key products which they do, transmission, gears as well as shafts is definitely one of them. Apart from that, sub-assemblies as well as precision machine parts amongst others is what the company, manufactures as of now. When you look at, what's also interesting is almost 60% of the company's revenue comes from the exports business, and that largely is expected to continue in the current context as well. But they've entered into a new technical agreement very recently as well with ARC Engineering GmbH, and this will provide end-to-end solutions for manufacturing newer precision components that the company is entering into. Finally, what you need to know about this company is also the guidance that they've given. They've given a capex of roughly about 50 crores for this year is what is planned, and over the next 3 years is expected to go up to roughly about 100 to 150 crores as well. Management is expected to aspire to maintain a 20 to 25% growth range, so that'll be the other monitorable as well. But definitely a lot of focus on these smaller ancillary plays, and entry into newer products is driving the positive momentum on a stock like RACL Geartech.
Okay, thank you for that, Puneet. So, Vineet, coming to you on this particular counter, what's your view?
We don't track this counter, so difficult to give any kind of view on that.
Moving on, the next stock that remains in focus today is Aurum PropTech. The company has been gaining after they announced some issue of debt papers of around 200 crore. Let's get in Jasmeet with more details.
Well, right, thank you for that. Let's quickly understand the stock performance over a span. Now, if you look at the stock today, it's nearly 60% up, and over the month, it remains flat. And if you look at the YTD performance, the stock is down nearly 32%. Well, a bit about the company. Company operates in the software development for properties basically. They create a software tech. It's called PropTech for companies. Now, if you look at the recent news, company has raised 200 odd crores. Well, this comes in while the company plans on acquiring a company by the name of PropTiger. Well, PropTiger is a company operating in the PropTech space, and the street believes this to be a positive addition to the overall company's portfolio. If you look at the valuation and the turnover for the PropTech, it stands at 85 odd crores for FY 24 and 25, and the company is buying it for a valuation of 1x with current money paid for the valuation stands at 86 odd crores. Now, if you look at the key financials of the company, for FY 25, company's revenue stands at 264 odd crores, while compared to 214 crores in FY 24, which is the revenue is growing. On the other hand, if you look at the losses, the company had a loss of 66 odd crores in the previous year, and this year company had a loss of 41 crores. The company has 3 main segments, majorly rental acquiring the biggest one at 70%, which has a total revenue of 47 odd crores. But if you look at the money that the segmental margins from the rental segment, it stands at a loss of 4 odd crores, while the only segment is making profit for the company is the capital segment, which earns 1.68 crore and is making a profit roughly around the same. Now, as per company's growth guidance, without this particular acquisition stands at, the company expects to have a compounded growth of 38% over next 3 years, while they also expect this new addition to add on to the growth going forward, while the company also plans to have a break-even by FY 27. So this is something to watch out for.
Right. Vineet, any view on Aurum PropTech? Have you tracked this counter?
Yeah. So I think it's making some selective investments in the PropTech space, and their strategy seems to be to grow through acquisitions and kind of build a better suite of products. So we think that over a period of time the stock has corrected a bit, and right now also we think that the stock is kind of reasonably valued, and so we don't expect any great shakes of a move from current levels.
So that's the view for Aurum PropTech. Now, another stock in focus is All Cargo Gati, and this is on the back of the demerger that we are seeing it taking place. Jasmeet, what's happening over here? Give us context in terms of what's happening with the stock.
Sure, well, thank you for that. Let's quickly understand what does the company do first and then understand the guidance that the management has given yesterday in the Investors' Day from the given merger. Now, well, the company operates in the expressway delivery services and they also operate through various sources such as surface, air and other transport services. Now, if you look at the operational metric, 99% of the pin codes have been covered by the company, while on the other hand, company also has 600 offices all over India. Now, if you look at the demerger process, which is still in process, now they expect that demerger will happen by Q2 by FY26 and post this demerger, management also given the guidance going forward. Now, what they look at the overall guidance post the demerger is they expect the revenue to have a compounded growth of 10% by FY28 and by FY30 they expect it to grow by 12%. Well, in terms of margins, they expect the EBITDA to, currently EBITDA is 204 crores and they expect it to grow at a compounded level of 20% by FY28 and also grow by 21% by FY30. So this is what the overall new guidance is saying by the management once the company has the merger in place.
Right. Next stock that remains in focus today, and the last one, in fact, on our show today that we'll be discussing. What is the stock, Anushi? Vansh, we were supposed to get Vansh on that counter, right?
Well, it's about car trade tech that we're talking about.
But I guess the stock had started off on a strong note, but has given up most of its gain.
Yeah, in fact, if you just pull out the stock price for this one, we've seen about 8% of gains or so far, but that has since come down. It's flattish in trade right now. Just a bit about the company. They are a multi-platform provider offering discovery, remarketing, and value-added services. They operate through Carwale, Cartrade, Bikewale solutions that we are seeing now. In a couple of sessions, we've seen notes coming out for this particular counter. So that has remained. In fact, Elara came out with a note wherein they've initiated coverage with a target price of 3,590. This is an interesting one that we are seeing taking place. In fact, if you look at the first quarter, they had seen about a 27% of an uptick in terms of where the revenue is concerned. So, that's the overall scenario that we are seeing for car trade tech in focus. Off the day's highs that we are looking at about 0.2% of an uptick. But, that's all the time that we had on this edition of Small Cap Buzzers. Thanks to Vineet as well for joining in and sharing that perspective on various of counters that we have discussed. But that brings us to the end of this edition. Stay tuned for India Market Close coming up next.
बहू, आज जो कुछ हमारे पास है सब इनकी देन है। एक अगरबत्ती की दुकान से इतना बड़ा बिजनेस खड़ा किया।
प्रणाम दादाजी।
दादाजी, ये तो पुष्पा अगरबत्ती के मालिक हैं, घनश्याम दास। इनके स्टॉक्स में इन्वेस्ट किया था, इसीलिए आज ये सब कुछ है।
जो आगे की सोचते हैं ग्रो करते हैं। डाउनलोड ग्रो फॉर स्टॉक्स, म्यूचुअल फंड्स एंड IPO।
और ये कौन सी कंपनी के मालिक हैं?
ये तो दादाजी हैं।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
One night before we were supposed to get the money in the bank, we get a phone call and the deal was off. We were in the middle of COVID. We were in a situation where we did the math that at zero revenue, we could not survive more than 3 to 4 months.
You're 25, you work for a multinational, you're living in the south of France.
Yes.
And you're not liking it. You want to come back to India and work harder.
We realized that legally it was, not allowed to work more than 35 hours a week. When I asked my boss for a permission to come on a weekend, he got very upset.
तो आप वो Indians हो जो सबका नाम खराब करते हैं. Tell us what the kernel of the idea starts from before you go mass consumer.
People are opening multiple browser windows or tabs to do the same search on 3 OTAs, 2 airlines. So we built this meta search engine that would, crawl or use their APIs to give you where the best deals were, and then we would lead you to them to buy.
To almost finish each other's sentences. So that chemistry is really there. One thing that really annoys you.
Hard to, have a discussion that's not very objective because he's the one who's more data, numbers and objective driven at times.
Sometimes, I have to control his positivity about certain things. Hold on, this might not.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है और
रहमान सोनू निगम के लिए जोरदार तालियां
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं The best app to use is the NDTV app.
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards
Hello and welcome to India Market Close, and it has not turned out to be a great day of trade. It has not turned out to be a great week of trade, and frankly it is something that we caution all through this week and there's a simple method to this madness, viewers, if you think of it. The whole uptick in the market started because there was a believed thawing of the relationship between India and US. It may well still happen, very likely might happen. But for now, the telltale signs are to the contrary, starting with what's happening to IT services now to our H-1B visas to now the pharmaceutical exports and more. So as a result of which you're seeing this kind of downtick. It is really deep and it's painful because the positioning, at least until Monday evening or Monday afternoon, was on the long side. And therefore a lot of people have now in this last day last 4 days have actually lost money, which is actually not a good sign. I think having bullish positions yet again immediately would be a bit difficult. Mid caps and small caps too could be actually under the red and deep gashes as well out there too, for sure. So 1.77% for the mid cap index, small caps too seeing that pain 2%. A lot of positions would have gotten cut forcibly, I would suspect. Bring up the heat map and I'll talk about the large caps and then get on to Hiral for the small caps as well. Look at that, save for L&T, maybe Tata Motors, Maruti, Eicher. So a bit of that auto flavor which is benefiting out of the domestic consumption. Everything under the red. M&M 3.5% lower. I don't think they make trucks, but be that as it may, 3.5% lower. IndusInd Bank features in the list, pharmaceuticals and IT. Actually, essentially, if you look at it, it's across the board. You see the selling. There's an NBFC name there. There is an Asian Paints and the consumption name there. There is tech names. There is Sun Pharma. There is IndusInd Bank. So it's pretty widespread, this kind of pain that we have in the market. So unfortunately, Hiral, while this looks painful, the broader run of the spectrum seems even more impacted.
Absolutely, Neeraj. I mean, the impact is really big, and sixth consecutive session where you're seeing the losses that have extended. Now, is it Trump that has only spooked the markets, or a lot of things in and around are impacting as well? We have Mr. Dilip Bhatt, founder at Pedigree Advisory, joining it. Dilip Bhai, good afternoon and welcome to the show, and a pleasure to speak to you. What is happening with regards to the markets? We've slipped below that 24,700 mark. The Trump tariffs that have come in across pharma, you're talking about auto anch that could be impacted as well, few of the furniture sectors that could be impacted. The sense was in the beginning of the day that it might not be as large as expected. Do you think this is just a sentimental dampener right now for the markets, and probably someone should use this opportunity to start buying?
Good afternoon. I think whatever US administration had to say on most of the sectors regarding tariffs is now abundantly clear. So it remains to be seen that whether any sectors they are going to target in terms of raising the tariff. And I think that directly has a very pronounced impact on the Indian markets, and adequately supported by the FIs selling. So the question here is whether FIs who have been selling unabated since last maybe 6-7 months, do they know something more than what we know as in general? And it is also very clear that in spite and despite the local buying, the retail as well as the institutions buying in the Indian equities, without the FI support, it is very difficult to imagine a revival or a healthy bull market. So I would say that amidst all the pessimism which is going around, I think what we have conveniently forgotten is that the kind of the benefits that GST has spelled out post 22nd September, I think all those things are people seem to be very oblivious at the moment. And all the benefits and the multiplier impact that it can give on the economy, all that seems to be relegated to the background at the moment. So I think maybe this pessimism offers some hope for a momentum to raise going forward. And we all know that somewhere these kind of extreme steps taken by the US administration may not really actually pan out. It will be much more softer and it will be diluted to a great extent is what we all also very strongly see. And possibly these two factors the pessimism and maybe a resolution on the tariff front will give us a good moment for rally. So maybe on a short-term basis, this fall can be used as an opportunity to buy on a short-term basis. But long-term, the valuations really need to be on your side, which is not what it is at the moment.
Okay, Dilip Bhai, just wondering, is short-term bounce, hope trade notwithstanding, good afternoon, this is Neeraj here, of course, would you believe that until the US-India thaw is clearly evident, the markets may be range-bound with a downward bias?
Neeraj, good afternoon. Always a pleasure talking to you.
Likewise, sir.
I think very clearly, Neeraj, yes, I think all Indians, I mean not all, most of us Indians are hoping desperately within our hearts that somewhere this gets resolved favorably and the bonhomie between the two leaders, the US leader and the Indian leader, gets revived. So that is what the desperate hope is. So I think, yes, we certainly feel that that resolution is very, very key, and that, in our opinion, should happen sooner than later, maybe over next 1 month or so. So I would feel that, yes, that seems to be at the root and at the bottom of the entire downside that we are seeing at the moment.
You mentioned about valuations which are not in our favor as well, probably right now. Let's take a hypothetical situation where this bonhomie between the two leaders really does not fit in well for a longer period of time. Would you then advise investors to actually start nibbling on your domestic oriented sectors? And if so, which would they be? Because you also said that markets are not really looking at the GST benefits. So will the GST beneficiary sectors be the ones which could be good ideas?
Hiral, yes, I think if there is a very meaningful correction in some of these, because as what I said earlier, that valuations are not supportive, and a lot of hope trade really happened maybe initially at the time of the budget when the tax concessions were given, and now with the GST impact. But surely both put together can have a good positive compounding impact and the multiplier impact on the economy in the long run, and which is what is required at the moment. So I think what you say is right, that maybe one would look at the domestic sector. But the whole thing is, if the resolution does not happen, then you will not know which impact, what impact it will have in which sector. For example, if if the exports get impacted because of the US tariff, and there's a lot of unemployment as a result and disruption in the trade, the impact can be on the consumption too. So we do not know what will happen where. So it's a difficult call to take in the absence of a resolution. All the premise, all the assumptions of a bull ride is that the resolution will happen. If it does not happen, then I think a lot of sectors will get impacted directly and indirectly. So I wouldn't take that part. But yes, the domestic sectors within that entire arena seems to be the preferred bet.
Okay, so your domestic sectors could be the preferred bet from here on. Thank you, Dilip bhai, so much for joining us on the show. In fact, let's also get in Aditya Agarwala, Head of Research and Investments at Invest for Edu. Aditya, the trend is absolutely downwards. We've broken crucial support levels already. 24,700 broken in trade today as well. And pressure coming in not only on the banking space, but you're seeing pressure in terms of pharmaceuticals, in terms of IT. If this is supposed to continue and that we are below the 24,700 mark, what should the strategy be on Nifty and Bank Nifty?
Good afternoon, Hiral. Thanks for having the show. If you clearly look at the trend, it's down, yes. But if I extend this to a weekly or a monthly time frame, you will notice that over a larger time frame, markets are still locked in a range. On the downside, you have 24,350. On the upside, you have 25,500. So if you take a look at markets, they just move from lower end of the range to the upper end of the range. And once they reach somewhere around those levels, they again see selling pressure. And this 7 days of consecutive selling that we're witnessing, similar kind of an up move also we had witnessed. It's just that when markets sell off, the intensity of sell off is slightly to the larger magnitude as compared to the up moves that we see, which creates some bit of panic in the market. But overall, if you take a look at the market's structure on a weekly or a monthly time frame, you will notice that markets are still locked in a narrow band. And that narrow band is from 24,350 to about 25,500, which I mentioned. So yes, as of now, my sense is market could slide further lower from these levels and can test levels of 24,500 to about 24,350 on the downside. This could be a slow and gradual decline because we've already seen back-to-back 2 sessions of big declines on the Nifty. The Bank Nifty too shows a similar kind of a structure as well. On the downside, you have a support kicking in somewhere around 54,200, 54,100. On the upside, clearly now 55,000 will act as a major hurdle. And what started off as sectors which could get impacted due to these tariffs is now trickling into the entire gamut of sectors. So you see across all sectors are trading into red, be it the NBFC space, the banking space.
I think we've just lost Aditya's audio. We'll come back to him as well. But clearly what he's indicating as well, it's the sectors which are export-oriented are now taking it on their chin as well right now. But one sector that we're talking about today is the pharmaceutical space. The earlier indication was that probably things will not react to that extent. But the kind of hit that the sector is taking today, there is an indirect impact on a couple of CDMO companies that could see a positive impact as well. And that's the reason why we're taking pharma as the sector of the day on the back of the 100% tariffs that have been slapped on branded pharma imports from October 1st. Varsha is with us to tell us more. Varsha, over to you.
Well, thank you so much for that. So yes, 100% tariff on branded and patented products and not on generics. And tariff will not apply for the companies who already have presence at a manufacturing facility in US or their facilities under construction in US. So it's a relief for generics, because generics, if you see, contributes almost 90% of US volumes. But still, if you see, a lot of generics players are under pressure because investors concerned that maybe tomorrow Trump will come and impose a tariff on generics. But as of today, no tariffs on generics, and that's the reason Dr. Reddy's or Cipla or Lupin won't be impacted much. Now let's talk about the negative impacts on negative impact on Indian pharma companies, starting with Sun Pharma. Now this will be impacted because of their specialty portfolio, which contributes almost 19% to the overall revenue. Talking about Biocon, now most of the Biocon products are actually manufactured in India. Even Biocon has gone ahead and opened a manufacturing facility in US, but that is for generics. And Biocon subsidiary, that is Syngene, has also opened up a manufacturing facility in US. But Biocon would be slightly impacted because most of the products are manufactured in India. Then you have Aurobindo, wherein their oncology drugs are made in India, and one of their facility in US is under 483 under 483 observations, and that's one that if the approval won't come, Aurobindo will be impacted, at least in the short term. Talking about Indian CDMO players will be impacted concerning on the outsourcing capabilities, and one of the reasons why you're seeing Laurus Lab or DV's labs are under pressure. Well, some of the companies which will have a positive impact, starting with Jubilant Pharmova, wherein because of the US CDMO fill finish lines in US will actually have a positive trigger for the company. Moving on, Zydus Life Sciences have gone ahead and bought 2 biological units in the US and has entered biological CDMO space as well, hence positive impact. Then you have Alchem Labs, wherein they're going to set up a small CDMO unit in the US. And lastly, if you see Primal Pharma, multiple US facilities, CDMO sites, and hence company will benefit. So overall, if you see some companies which will have positive impact, but many companies which will have negative impact as well, and CDMO companies may have will have negative impact on the back of outsourcing incapabilities if going ahead.
Yeah. So, but overarchingly, I think Varsha, thank you so much for that. And overarchingly, I think what Varsha is saying that there is lack of clarity in certain things, but they don't submit many positives from such a move. Adish Patil, CFO and CEO of Aarti Drugs, joins us right now on the show to talk about this very aspect. And Adish, thank you so much for taking the time and speaking to us. These are, these are difficult times. Reporting on it is also difficult. I'm sure going through it as a business must be difficult. What is your prima facie reading, or what does an order of this nature do for Indian exporters, pharma exporters, that is?
Yeah. So as far as the formulations are concerned, definitely the patented and the premium drugs would be impacted quite a lot. What I heard, I don't know whether it is true or not, that for few of the European countries, EU nations, it might be still restricted to 15% based on the individual deals done by those countries with the US. So in that case, if those European companies are already active in US, their market share will increase quite a lot, is what we feel. As of today, for companies like us, which are majorly into APIs, there is no tariff on APIs as such. And even if there is in future, so if the API is exported to Europe and from there if the formulation goes to US, then it will still be circumvented for people like us. But then yes, this is very challenging times, and I hope that soon something stable comes out.
Some companies or some peers that we spoke to of yours said that it's a moving situation and it's not certain if the tariffs will be across the value chain or it's only at the end product, right? And correct me if I'm wrong. So if that is the case, it is not certain if APIs, which are a part of the value chain and not the end product, might also not be subject to tariffs.
Yeah, very true. But as of now, they have left out APIs anyways. In this is what I read.
Okay.
And probably there might be some formula like 50% value addition or 60% value addition. If that qualifies, then the country of origin can be determined as Europe. There are some laws where they have to determine whether the country of origin is still Europe or is it indirectly coming from India itself. And API plays a very small quantum in formulation, that in terms of value. So hopefully if that is the case, then it might get circumvented, but who knows?
Adish, afternoon, Hiral this side. So, as you mentioned, absolutely right that the announcement does not really talk about the tariff action of API or ingredient manufacturing, fill finish products and device manufacturing. Now, taking the complexity of this global supply chain into consideration, the tariff announcement seems incomplete. Do you think large branded, patented pharma companies can still be able to avoid tariffs by announcing either a capex or a M&A or a partnership in the US?
Yeah, so that there is a quite a big loophole. Like even if you announce a capex or show that your capex is going on in US, you can still circumvent this tariff situation. I don't know how much time they will give for that CB period, means 2 years, 3 years. And till that time, if something changes, then probably means it's very uncertain, frankly speaking, to take decisions based on what is happening currently.
Moving away from the tariff aspect now, if you have to talk about Aarti Drugs as well, you just gave in your investor presentation where you've indicated that you've completed a capex of around 600 odd crores. That's nearly complete. That will boost your capacity, that will boost your margins from here on. With everything said and done, what's the kind of revenue addition that you're expecting in terms of FY26 and 27 on the back of these increased capacity and the capex?
Yeah, so FY26, we don't expect much because still the export scenario is quite challenging for us, and we are also scaling up the greenfield projects which we have just commercialized in this year. Both the greenfield projects, the Saika one and the Tarapur one, have been commercialized. The Tarapur one is the salicylic acid. The total potential of revenues from that plant could be around 200 to 250 crores. In coming years, it might take little time. Anti-dumping, we are also expecting anti-dumping duty in that particular product because we have observed dumping of that particular product by Chinese manufacturers since we entered the market. So it's a very good candidate for anti-dumping duty. Then talking about the Saika project, we just successfully commercialized that plant. It is mainly for backward integration, but overall, the potential of revenues is anywhere between 200 to 300 crores from that plant. It is still scalable. We still have some plot left to put derivative products for that chemistry, but majorly it will be backward integration for one of our very big anti-diabetic product portfolio.
Okay. Apart from this, what's the revenue potential that you're seeing on the back of these two units?
Yeah. So without considering these two units, we have a revenue potential of roughly around 2,800 to 3,000 crores, including the formulation business. And with these two greenfield projects coming online, it can go anywhere, in the zone of 3,500 crores. And plus the oncology block for formulations, which we have put last year, the utilization will start after 2 and 3 years, in the second and third year. So that can also have a revenue potential of roughly around 400 to 500 crores additional to that. So in longer term, let's say in five years period, something between the range of 3,500 to 4,000 crores is what we see the revenue potential of the company.
Okay. Adish, I'm just sorry, but as a final question, just taking it back to the bigger worry for the markets right now. As you said, you guys are not impacted, but the stocks are still down 7-8%, right? And there's a pall of uncertainty around what could happen. So my simple question is this: if indeed even Indian exports of APIs or other products get tariffed, if you will, what is the kind of earnings hit that could come in? It's hypothesis, right? I need not need to be exact, but some sense, some color.
Right. So as of now, our US sale is almost zero as of today. So, but in future, we are banking on the oncology segment in the third and fourth year. Those oncology products will go to US, and they probably will be termed as premium drugs, so might face that 100% tariff. As far as the API business is concerned, what we feel, if EU companies started exporting to US, then selling it to European industry, we can still circumvent is what we feel. And most of our product portfolio is in generics. If you see all the APIs which we manufacture, they are all essential drugs, and they are already cheap drugs. And I don't think that US administration would want to increase the cost of the low end drugs for their public. For the patented drugs, where already the prices are very premium, it's okay. But for the underprivileged one, it will be very, there will be harsh backlash from those people if they increase the prices of the generic drugs. So what we feel that our product portfolio will be least impacted. And as of now, it is not impacted at all. But even if it does, it will be least impacted, is what I feel.
We will leave it at that. Thank you so much. And we do hope that what you said and what your initial feedback is turns out to be true. The markets can do without one key sector being impacted by tariffs. But thanks for joining in today. Okay, that's Aarti Drugs. Saying that as of now there isn't a case for a worry based on their research, but never know. For now, the market seems to be in a mood of punishing first and asking questions later. Aditya Agarwala, a word on pharma, if we haven't spoken about it earlier, even if we have, which is the stock that is looking the weakest in that lot. Couple that up, of course, with your stock specific ideas for the afternoon.
Afternoon, Neeraj. So a few of them do look weak, definitely, and some of them are looking strong. So let's start with the weaker ones first. Laurus Labs and Biocon. These are the two stocks which look the weakest on the pharma. Let's talk about Laurus Labs first. I think after the sharp run-up that the stock had witnessed, now it's showing a bit of weakness, and today we are witnessing that setting pressure on decent volumes as well. So it can slide all the way down to 800 and sub 800, 790 levels as well. So one should watch out for Laurus Labs. If you already have in your portfolio, keep strict stop losses of 820 on the downside. If that is broken, then chances are it can slide another 30 rupees lower to 730, 790 kind of a level. And then, of course, Biocon is something which is looking the weakest at this point of time because of the sharp selling pressure that we're witnessing in the stock. Broken down from its 200 DMA as well. On the downside, stock can test levels of 310, 300 as well. So there's a sharp downside that I see in Biocon. And Lupin, to a certain extent, is also looking little weak as far as weakness is concerned, can slide all the way down to 1870, 1900 as well. One of the stocks which has actually bounced back from the lows and looks like can have some upside is Dr. Reddy's is one which is looking slightly better off as compared to these rest of the names. And if it holds on to its 200 DMA, which is around 1240 odd levels, chances are Dr. Reddy can test levels of 1340, 1350 on the upside. And Sun Pharma, which was supposed to be one of the weakest stock post this tariff implication, has actually bounced back from the lows and formed a double bottom kind of a zone around 1540 odd levels. So that can be kept as a stop loss, strict stop loss on Sun Pharma, and a long addition in Sun Pharma can be looked at for a target of 1700, 1750. So two stocks on the downside and two stocks on the upside can be a good pair trade on the pharma side. Now talking about my own stock recommendations, I've got a buy and a sell. So buy is on Samman Capital. This is one stock which is actually bucking the trend and looking strong on the charts, is forming a narrow consolidation base, and from here on I think the stock will build on to its gains in the coming trading sessions. So for a target of 155, I'll be a buyer in Samman Capital with a stop loss at 128 on the downside. IT clearly is looking very weak, Neeraj, at this point of time, and especially the mid-cap IT names. Within that, I think Persistent System is the weakest and can be sold at current levels for a target of 4800 on the downside with a stop loss at 5100 on the upside.
Okay, an IT name and a short call there. That's interesting. Thanks a lot for that, Aditya. What we'll do is we'll take a quick break. Stay tuned to NDTV Profit though. We on the other side of the break, we'll bring you the top 3 stocks to watch, some analysis of what could be going wrong with the markets currently, what is being heard in the dealing rooms, and more. Stay tuned.
One night before we were supposed to get the money in the bank, we get a phone call and the deal was off. We were in the middle of COVID. We were in a situation where we did the math that at zero revenue, we could not survive more than 3 to 4 months.
You're 25, you work for a multinational, you're living in the south of France,
Yes.
and you're not liking it. You want to come back to India and work harder.
We realized that legally it was, not allowed to work more than 35 hours a week. When I asked my boss for a permission to come on a weekend, he got very upset.
तो आप वो Indians हो जो सबका नाम खराब करते हैं. Tell us what the kernel of the idea starts from before you go mass consumer.
People are opening multiple browser windows or tabs to do the same search on 3 OTAs, 2 airlines. So we built this meta search engine that would, crawl or use their APIs to give you where the best deals were, and then we would lead you to them to buy.
You almost finish each other's sentences. So that chemistry is really there. One thing that really annoys you.
Hard to, have a discussion that's not very objective because he's the one who's more data, numbers and objective driven at times.
Sometimes, I have to control his positivity about certain things. Hold on, this might not.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है.
और रहमान
सोनू निगम के लिए जोरदार तालियां.
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी होगी.
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है.
मैं आपका बात से सहमत हूं. उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Markets have really cracked this week, and as we look at the lowest point of the day today and below 24,700 or thereabouts, the question that comes to mind is what is worrying the markets? Well, I think the reasons are well known, just laying them out for you point wise. One, the easing of the India-US relationship is uncertain for now. We are all making the attempt for that to happen, and I think about 2 weeks ago, the belief was that because of the exchange of statements between the two leaders, that there was a resolution coming. It hopefully is coming for both the countries' sake, but for now that uncertainty has crept in, which is why the markets have pivoted back to that zone wherein you don't quite know what will happen next. Valuations, we are no longer as expensive as we were, but we are certainly not cheap as yet. And I think the argument on valuations can be done in both ways. There are some sectors which will see earnings hits, and therefore the FY26 EPS is not necessarily certain to be growing at 12%. It could well be single digits or low single digits as well, which is a bit of a worry. So you got to keep that in mind. The markets currently are in a mood to punish first and analyze later. It is no longer a market wherein you will take time, analyze, and if there is a problem, you go out and sell. Markets are saying, let's sell first. If there is no problem, we'll buy it at lower levels. And I believe that is what is happening with pharmaceuticals today. And I think so many trading losses because the bent until Monday was on the long side that traders may not be able to take large trading positions due to the sudden losses this week. So don't expect a swift recovery because of this surprise turn of events that have happened in the last 3 or 4 days. There are antidotes. I mean, the HSBC view on India, wherein they have turned overweight, is giving out that antidote, right? That the government policy is becoming positive for equities, which is actually a good sign. And they've given various reasons for the same, and that the FI positioning is very, very weak on India. But for now, we do know that the worries outweigh the positives on FI ownership as well as better valuations. So until the resolutions are reached on the worries, we might well have a market which is biased towards the downside.
Absolutely, Neeraj. Thanks for that. So clearly this becomes the major overhang that we should be watching out for in terms of the trade negotiations between India and US. But the moment that comes through, that entire puzzle that Neeraj was explaining towards the end as well, probably gets solved, and that's when you would see that buying interest that could be coming back. But let's get in Kunal Shah of Mirai Asset, Sher Khan, and Sudeep Bandyopadhyay of IndiTrade Capital coming in. Kunal, let me come to you first. With regards to where the levels go, we've broken, the major support levels as well in today's session. Where from here on, and what should that strategy be?
Firstly, good afternoon to everyone and happy Navratri to everyone. Firstly, what we have seen in the Nifty indices, 24,400 to 25,450, 480. This was the entire rally what we saw in the recent times. And if this rally had to sustain, we had to stop at the 61.8% retracement of this rally, which was at 24,800. Clearly, once we broke that mark, the 20-day moving average was also breached, and that again negated the entire up move. So now again the up move has been negated. Now from a buy on dip market, this has become a sell on rise market. We have already seen 6 days of fall, so probably now most of the indicators are in the oversold zone. So you might expect some technical bounces coming in, but still that 24,400 is where I'm expecting Nifty to go, even from the current levels as well. So the short-term trend continues to be on the negative side. Any pullback in the indices would be a good opportunity to initiate on the short side. And we can expect Nifty to test the support zone of 24,400, 24,500 on the lower end. So the charts are looking weak. Where is the pressure coming from? IT. IT has broken the swing low. And that is where we were seeing that when Nasdaq was making an all-time high backed by the AI stocks, our Nifty own IT index was making clear-cut new lows. And that is where the pain point was. And IT has still further downside left with the new levels coming around the mark of 31,500, 32,000 for the indices. So I think that will put pressure on Nifty as well, and you can expect further lower levels on the Nifty index. So that's weak. Coming to the Bank Nifty. So Bank Nifty in today's trading session has breached the 20 DMA. So again, Bank Nifty has strong resistance at 56,000. Now we were already trading in a downtrend. We had a strong pullback, but 56,000 was not taken out. If that would have been the case, we would have seen as a trend reversal for Bank Nifty. So the trend again continues to be on the negative side, and Bank Nifty again could test the lower levels as well. So Bank Nifty, the two big boys, HDFC and ICICI, had already given up 3 to 4 days back when both the stocks had breached that short-term moving averages of 20 DMA. In fact, ICICI Bank even broke the swing low. So clearly, weakness persists over here from IT, from banking, and that would lead to the selling pressure on the downside. So no need to be a contra at the current levels. You might have some pullbacks coming in because we are in the oversold zone, but again, utilize that pullback as a selling opportunity. Bank Nifty is again heading lower towards the mark of 53,500, 400 mark, and that is the immediate support. And once we close below that, then even you will see further downside level coming in the Bank Nifty indices. So I think it's a worry of cautious at the current levels till the time Nifty doesn't surpass 25,200, 300 mark on the upside, which is where the reversal would come in. This entire downfall would be negated. And for Bank Nifty, till the time we don't surpass 56,000 on the upside, the market could be on the downside and could test the lower levels as well.
What about the ideas for the afternoon, Kunal?
See, I think two stocks. First on the sell side is capital goods, and here I'm focusing on Siemens. So Siemens, if you had seen on the technical chart, recently the stock had given us a breakout from a small consolidation, and there was no follow-up post that. Now the breakout low has also been taken out in today's trading session, in the previous trading session, and now we have reached the short-term moving averages as well. So that is looking extremely weak on the chart, and you can expect further selling pressure in Siemens towards the mark of 2940, 2960 on the lower end. So Siemens is a sell for me with a stop of 3160 on the higher end. You can expect targets of 2,940 to 2,900 on the downside. So that's the first on the sell side. Second stock, what I pick up on the buy side is again L&T. Clear-cut breakout what we have seen in the stock over here. And again, these were the multiple resistance zone for the stock around the mark of 3720, 3700 zone. Today we have taken out that levels with volumes, and we are sustaining above that even in a weak market, clearly indicating a strong trend for L&T going forward. Relative strength is clearly visible. Once the market settle down, goes into a sideways mode, we will see L&T continuing its move on the upside. So L&T is a buy for me with a stop of 3640, looking for targets of 3900 to even the all-time high levels of 4000 could kick in.
Okay, so that's with regards to the top picks, but let's just quickly address the commentary that is coming in from the Ministry of Commerce and Industry. They've issued a statement on the visit of the Indian delegation to the United States of America between the 22nd to the 24th of September, and they've said that the minister had meetings with the ambassador of United States trade representative as well as Sergio, the US ambassador designate to India. Apart from the meetings with the US government representatives on the bilateral trade matters, the delegation had discussions with key US-based businesses and investors on promoting trade and investment between India and the United States. In fact, the delegation had a constructive meeting with the US government on various aspects of the deal. Both sides have exchanged views on the possible contours of the deal, and it was decided to continue the engagements with a view to achieve early conclusion of a mutually beneficial trade agreement. In fact, the meetings with businesses and investors evoked positive response, and the business leaders reposed confidence in the Indian growth story and expressed their desire to intensify their business activities in India. I think there is some bit of positivity again, Neeraj, that's coming in terms of the statement. 2 points here. The meeting not only with the government but even with businesses and investors, that has gone well. And two, they've said that they are looking at a possible contours of the deal where they will continue the engagement. They are wanting to achieve an early conclusion with a mutually beneficial trade arrangement. So yes, the conversations are going on. You're not seeing any distress in any of the commentary yet. Whether this aids markets or not is what we have to see.
Yeah, and Hiral, normally if the last 4 days hadn't happened, if this would have come last Friday, I think the markets would have ended in the green last Friday itself, because you take that optimism. But I just think until the clarity probably comes in, it'll stay this way. But Hiral is right. This is positive. I wonder if Sudeep Bandyopadhyay thinks about it that way. He's joining in on the show with his vast experience on the fundamentals. Sudeep, thanks so much for joining in. And a great time to have you, right, Sudeep? Because there's so much happening. Make sense of it for us. We've seen the carrot and the stick approach at perfect display here from the US.
It's more of a stick, Neeraj. I don't think where the carrot is coming. We are hoping for the carrot to come in somewhere. At this stage, it's only stick. That's what I can see. And I think we have to be prepared for this kind of volatility during the current administration's time. So markets and all of us needs to be prepared for this. I think that's one lesson we all are learning the hard way. FIIs, foreign institutional investors, I'm sure they're confused and they are also a little bit of getting into a risk-averse mode. They are kind of selling in India, and that selling is not stopping. That's not good news for India. Of course, we have the resilience in terms of domestic flows and things like that. But in spite of that, I think this selling is affecting Indian markets. They are putting money in IPOs, but I think net they have been selling and selling in a big way. So we have to kind of digest that and continue. The pronouncements which are coming, yesterday we did see on the pharma, while the primary impact may not be that much, there can be secondary and tertiary impacts, assuming they go through with this. So I'm a little worried about the CDMO players because there can be some tertiary impacts on them. So I think we have to be nimble-footed, we have to be careful, and we have to be a bit cautious in taking exposure to companies and sectors which are exposed to US markets.
Just with regards to sectors that are exposed to the US market is what Sudeep has to say. But let's quickly look at some of the stocks that are buzzing in trade today. From Arites to a Supreme Petro, BHEL, REC. Vansh joins us with all the details. Vansh, what do you have for us?
Yes, so let me start off with REITs. Now the company has received an LOA worth rupees 153 odd crores. Now the order is from the South Africa Stelis Logistics, and the order is to supply diesel electric locomotives. And if I talk about the order book, now the order book as of Q1 FY26 stands at about 8,800 odd crores. Second on the list is REC. Now the Department of Investment and Public Asset Management has not agreed to the proposal of formation of a JV between REC and BHEL. Now the proposition of the JV was announced in March 2024, and it aimed at jointly developing utility scale renewable energy projects across India. And the third one on my list is Supreme Petrochemical. Now the company has commenced operations of its two new lines at Amdoshi facility. Now the two new lines are capable of producing 20,000 tons of compounded ABS. Now if I talk about ABS, it is a very important chemical which is a chemical compound in plastics and manufacturing industry as well. And the compounded ABS have applications in automotives, electronics and structural applications as well. So these are some of the stocks that are buzzing on these developments.
Okay, thank you so much for that, Vansh. In fact, Kunal, let me come to you on these names. These are the newsmakers of the day. Yes, stocks have cooled off on the back of the market correction that's happening right now. Does anything interest you where you're seeing strength on the charts?
I think SPL, Supreme Petro, looks interesting on the chart perspective. It is on the technical front, it is verged on the falling trendline breakout, and we have already seen volume-based buying in the stock from the lower levels. The recent rejection zone of 840 has been surpassed, and that will act as a support for the stock on the downside of 840. So any dips towards the support would be a good buying opportunity. The immediate hurdle for the stock on the upside is around the mark of 900. Once that is taken out, you can expect the stock to go towards 940, 960.
Okay, so that's with regards to Supreme Petro that we're talking about right now. In fact, let me go to Sudeep as well in terms of few of the other sectors which are buzzing in trade. We spoke about pharmaceuticals, in the first half of the show. IT as a sector also has been weak, and this is concerns that do stem in from the past, where we are talking about, guidance cuts. In fact, you have Accenture, which already reported numbers where the street is not really very happy on that aspect. Sudeep, your advice to viewers with regards to what to do with IT as a sector?
Well, we have been cautious on IT, Hiral, for quite some time, and we believe that, with the AI coming in, the US corporates, large corporations will probably insist on use of AI for simplification of tasks. That directly and indirectly affects Indian IT companies because their margins will come under pressure. None of them have their own AI tools, and they will use third-party tools to deliver efficiency and at a margin which will be lower. And this trend will continue in the foreseeable future. in view of the above, even before H1B issue came up and the entire cost escalation issue related to H1B hit us, we were cautious and we maintain our cautious view. I think H1B, they still can manage, but this AI-related disruption will be difficult to manage from the margin point of view for most of the Indian IT companies. Now, particularly the large cap IT companies, one needs to be careful. I mean, they're efficient companies, they're good companies, but the margin pressure is going to be real. The other factor which we are considering carefully is some of the mid-cap IT companies. Look, I think there are segments of the market which is growing disproportionately better. Let's say travel and tourism. World over is booming. So let's focus on travel and tourism related IT companies. So RateGain Technologies, and we can Coforge. We can keep naming some of these companies. And I think there is a potential for these companies to continue to do well over a long period of time. Similarly, there is a transition happening in automobiles from ICE to EV. Now, this transition requires a lot of technological support, and some of Indian mid-cap IT companies are very much involved in this transition and providing that technology support for the automobile industry. Let's say Tata Technologies, Persistent, and many others. So let's focus on these niche companies catering to segments which are booming.
Sudeep, just a follow-up here though. A rising tide will carry all boats along with it. Similarly, a falling tide, no matter how strong the boat is, will bring that boat lower, right? So could it happen that if the IT sector valuations themselves are coming off lower, then even the good niche opportunities will not really have gains? Because let's face it, some of the names that you mentioned are not trading cheap. Persistent trades at expensive valuations.
No, I agree with you, Neeraj. There will be a negative impact when there is negative news flow on the industry. But still, I think the opportunities do exist because the rate of growth in these segments will be significantly higher compared to other IT, general IT service providing companies. So that's my point. Yes, you have to be cognizant of the valuation at which you are buying, and you need to be careful. But look at the opportunity, under which this particular company is operating, and if the opportunity size is significant, maybe worthwhile taking exposure from medium to long-term perspective.
Okay, fair call. I think we've already heard on the technical side, on the tech space, that those stocks are looking wobbly. Maybe we'll take Kunal's view on the stock on which we are doing the bull versus bear segment, and that's Larsen & Toubro. In a day like this, or on a day like this, its stock is up more than 2% off the highs of the day, but still trading well. Anushi Johnson with both the bull and the bear argument. Anushi.
Well, thanks for that, Neeraj. So, the bull case scenario is particularly strong today for L&T. Now, what's happened is that the company has formally put it out that they've exited the Hyderabad Metro Rail Phase 1 project. Now, a couple of reasons as to what has led to this exit. But, with this exit, now the state government has taken up this project in particular. And this is with a debt amount of around 13,000 crore that we are looking at. Now, with this exit, the state government also, has given L&T an equity investment of around 2,000 crore or so. This was L&T's equity investment share that we are looking at. But what led to this decision? In fact, what we are seeing is that the net loss from this project had widened to about 629 crore. This is as of the FY25 number that we are looking at, which represents about 4% of their overall PAT for 2025. So it was leading to that particular drag. So with this now going away, analysts are seeing it in a better light. In fact, this along with now higher debt also coming off for the picture is a positive that we are seeing. So in fact, there was an interesting note also from GM Financial wherein they're seeing about a 4% of a EPS accretion since this project is no longer in picture. But however, on the bear case scenario, I just want to talk a little bit about the macro side of things that are panning out. Now, in the recent news, we've seen GST rationalization, most of these rate cuts taking in place, which would have some kind of an impact in terms of where the government capex is for this particular year. So with the government capex slowing down, the main question arises, what would lead to the order intake, for the for a company like L&T for FY26 or 27. So do keep this bear case scenario in mind as well. Coming to the next bull case scenario, if we are seeing, now if you look at the order inflows that have continued to remain robust for L&T. In fact, the order inflows were about 94,450 crore, up 33% in the first quarter itself. The company boasts an order book exceeding 6 lakh crore. So there's no doubt about, what's the kind of projection in terms of what's happening with the order growth, especially from the international side of business that we are looking at. However, what remains on the bear case scenario is the order execution, especially for large pipelines projects that we are looking at, which has led to some bit of that EBITDA margin compression before. So that's the bear case. Quickly moving on to the last point, it's about the management reiterating the FY26 guidance. This is in terms of revenue, EBITDA, as well as orders that we are seeing. So that remains on a positive. However, Q1 EBITDA and margins did miss estimates in the first quarter. So upcoming quarter's performance remains the key here. So this is the overall bull and bear case scenario that we are seeing for L&T.
Yep, the bull scenario looks positive for now. It's just that the market overhang keeps gains curtailed. Thanks for that work, Anushi. Kunal, standing up on a day like this, what would you do with the Larsen & Toubro?
I think definitely we have a positive view on the stock. So we expect the stock to again surpass its all-time high levels. As I mentioned, that it is one of the pick what we see in the very short-term perspective. And 3,700, which was the resistance zone for the stock, where there were multiple rejection. 4 times the stock has rejected on this technical front, one in January 2025, then June again 25, and again it was rejected in October 25. So now again we are seeing this momentum coming back into the space, and we can see this up move coming in towards 3,900, 4,000 is what we are expecting the stock to go in the next 1 month.
Okay, so 4,000, and I think Neeraj, a move like that on L&T with good volumes coming after very long, and I think there was a JM Financial note as well that Anushi was indicating a 4% EPS impact on the positive side, which is pretty strong.
Yeah, it is very strong, holding out for now, and multiple cues out there, right? Multiple reasons for Larsen to do well, maybe. The question only is, does the market allow a strong name like Larsen to hold out, and will it just be that? Sudeep, is it an investable option right now, Larsen, or as your overarching view was that the markets may be under a bit of a cloud and therefore be very selective?
Absolutely, Neeraj. In fact, I have been positive on Larsen for a very long time. And, I've been mentioning this, that the Telangana Hyderabad Metro was a millstone around its neck, because every quarter, every financial year, you would have seen the hit coming to the P&L on account of this. Now, this getting out of the way, I think things will improve significantly. Otherwise, everything is working in favor of Larsen & Toubro. Massive order book, continuous order inflow, significant gain in West Asia. And, remember, international projects are with higher margin. So the margin profile of the entire company itself is changing. They've got rid of a lot of unrelated assets. Working capital management has become much better. So definitely Larsen, from a long-term perspective, deserve a much better valuation. Today's up move is because of that exit from the Telangana Metro Rail project. And that's good for the company. But otherwise, also fundamentally, it does look good from a long-term perspective.
Okay, so that's with regards to L&T. But moving on, the segment that everyone waits for, we have the chatter from the dealing room. Somit Sarkar joins us to tell us what's happening today and what is it that he's hearing. Somit, what are you finding out today? What's the chatter in the dealing room looking like with the markets trading at the day's low?
Well, not much of an action that we are seeing in dealing room in trade today, given the sharp fall that we have seen in markets. Not many stocks are being actually bought into. Firstly, a few stocks, however, what I've managed to gather firstly is Chennai Petro. Dealers indicate that there are buy flows on large HNI desks. Dealers are also indicating that there's an uptick in the gross refining margin, which was subdued for quite a while. So this has turned around, and GRMs are now trading around $4.5 per barrel from what we had seen previously. So this uptick has led to some buying interest when it comes to to Chennai Petro. For Bharat Forge, dealers are indicating that there are some buy flows at lower levels. Dealers are expecting some more passive flows to come in later in the trade today or in Monday as well. When it comes to Bajaj Finance, there are sell flows on DI desk. Dealers also indicate that the Q2 update could be a bit weakish for the company, and hence they are seeing this sell flows coming in. And lastly, when it comes to AB Capital, there are buy flows on FI desk at lower levels. When it comes to AB Capital, that stock dealers believe is cheaply valued and could see a turnaround going forward. So keep an eye out for AB Capital as well.
Okay, so that's Chennai Petro, Bharat Forge. That's an interesting one because buy flows coming in at lower levels, and there could be some passive flows that could come in on a Bharat Forge as well. Bajaj Finance, in fact, that stock is very interesting because the expectation is a weak Q2 update that could be coming in. In fact, let me take this question with Sudeep. Sudeep, Chatter is saying that Bajaj Finance, there are sell flows coming in on the DII desk, and the indication is of a weak second quarter. You track this space also pretty closely. How would you look at a Bajaj Finance? Anything that you would want to add?
Well, not at this stage. I think pretty much the news which is coming out, or the speculation around the fact that the quarterly numbers will be weak. I think the credit demand was a bit weak. We know the GST cut announcement and implementation, there was a gap. So consumption demand slowed down during that period remarkably. Also, this was a monsoon month. So again, consumption demand was slow, which does affect Bajaj Finance credit demand directly. Apart from this, I think the asset quality challenges have reduced, but they are still there. So overall, we are expecting not a very exciting set of numbers from Bajaj Finance, and their business update will probably kind of show that.
So that's something we should watch out for as well. But thank you, Sudeep, so much for joining us on the show. We'll quickly slip into a short break. On the other side, we'll get you the top story of the day, where the Supreme Court has deferred Vodafone Idea AGR plea hearing to the 6th of October. My colleague Danish will join us to tell us more. Please stay tuned.
One night before we were supposed to get the money in the bank, we get a phone call and the deal was off. We were in the middle of COVID. We were in a situation where we did the math that at zero revenue, we could not survive more than 3 to 4 months.
You're 25, you work for a multinational, you're living in the south of France.
Yes.
And you're not liking it. You want to come back to India and work harder.
We realized that legally it was, not allowed to work more than 35 hours a week. When I asked my boss for a permission to come on a weekend, he got very upset.
तो आप वो Indians हो जो सबका नाम खराब करते हैं. Tell us what the kernel of the idea starts from before you go mass consumer.
People are opening multiple browser windows or tabs to do the same search on 3 OTAs, 2 airlines. So we built this meta search engine that would, crawl or use their APIs to give you where the best deals were, and then we would lead you to them to buy.
Almost finish each other's sentences. So that chemistry is really there. One thing that really annoys you.
Hard to, have a discussion that's not very objective, because he's the one who's more data, numbers and objective driven at times.
Sometimes, I have to control his positivity about certain things. Hold on, this might not.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
जान रहे दिल ये तो जान
tenere tu. मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है और
रहमान
सोनू निगम के लिए जोरदार तालियां.
Welcome back. You're watching India Market Close on NDTV Profit. Markets continue their downward pressure. Let's just quickly pull up India Wix because that has seen a good amount of spike in today's session. Cuts of 1% continue, but a 7% up move. And then that last 1 hour of trade is where that has happened. We've remained in that range of 10.7. Currently, we are at levels of around 11.51 on India Wix. That is clearly telling you that there is that nervousness and that volatility in the markets that is expected to continue as well. Another story that we should be tracking today, Navratra, which has revved up India's auto market from two-wheelers to passenger cars. Festive demand is breaking records. In fact, the trend which is interesting right now is your two-wheeler players are actually looking at the entry level passenger vehicle segment, and that's what I heard from the Maruti management when I spoke to them as well. But let's understand what the dealer checks are indicating. I have my colleague Puneet with us to tell us more. Puneet, over to you.
Well, thank you for that. It's definitely a very, very interesting period right now in terms of growth. And we're looking at Eicher Motors first because dealer checks are indicating 2x growth in the first 3 days of the festive period, and that augurs well for the company. They've also maintained a 30 to 35 day inventory as of now and is very well prepared to meet the demand as well. When you look at the other key aspects, the sub 2 lakh rupee pricing market is also breaking psychological barriers essentially for the consumers, where Eicher Motors was always seen as a premium. So it's now, because of the GST rate cut, the 350cc and below bikes have now come below 2 lakh rupees, and that is a key benefit as well to the consumers. Apart from the 12 to 24,000 direct discount, the dealers are indicating that a lot of consumers who would largely be absent earlier are now walking into showrooms and inquiring about the products as well. Phillip Capital also said that they're actually seeing inquiries up over 22% in this particular time frame, while the telephonic inquiries have also gone up as well, including the web ones as well. Finally, they're seeing top models like Classic and Meteor also being a key booster, and the conversion rates is also very quick because it's gone from 50% earlier to 65% now. So all factors positive for Eicher Motors. The other one's Hero MotoCorp. They're noting a 45% year-on-year growth essentially in the first 3 to 4 days of Navratra. That's also buoyed by the GST rate cut. The other aspect is that a lot of consumers are also starting to get aware of the GST rate cuts, because a lot of consumers for Hero MotoCorp are in the rural tier 3 and tier 4 cities as well. And once they're starting to walk in, word of mouth is helping this as well. Finally, in terms of Tata Motors as well, commercial vehicle segment, that has seen GST rate cut of 28 to 18%. While the benefit for CV makers is slightly lesser, this is a boost because e-commerce companies are also seeing a boom right now, and the demand is led because of trucks from them as well. Apart from that, Phillip Capital has also mentioned that they've experienced a slight market share loss in the small commercial vehicle space, both from the organized as well as from the unorganized space. So this will be a key booster, and the estimate is a 5 to 6% growth as well. We also had, Maruti today, where they mentioned 18,000 bookings a day is what they're getting versus 10,000 earlier. So it's not just the bike segment, the car segment is also getting a boost. So overall, multiple positive developments in the first 3 to 4 days of Navratri. Even though we've had an absence of 21 days of sales, the last 9 days will likely make up for it. And we could be in for a very, very interesting month on 1st October when this data comes out.
I think after the start of the GST 2.0 reform from 22nd of September, we are seeing a very good response. In our showrooms, on average, we are getting close to 80,000 inquiries daily. And we have almost now retailed 80,000 vehicles in the first 4 days of the Navratra. So that's a very good sign. And what we are seeing is the response in the small cars. Typically, the vehicles which are in the 18% GST slab, the response is further, I would say, better than the vehicles which are there in the 40% GST.
Following a significant cyber attack, JLR is now seeing signs of recovery. Key sections of its digital infrastructure are gradually coming back online, and a comprehensive recovery program is in full swing. Danish brings us the latest developments on this. Danish.
Well, things are slowly limping back to normalcy for Tata Sons' own luxury car maker JLR. Well, the company suffered through a cyber attack, which was reported on 2nd of September. And since then, the company has been doing efforts to restore its systems, and twice it has been unlucky. But now, the company showed that from 1st of October, all the systems will be up and running and the production will also restart. Well, JLR told NDTV Profit that it is doing all the efforts to ensure that everything is back to normal soon. They told NDTV Profit that a particular financial system is up and running again, by which the company is now able to clear the backlog of vendors and other stakeholders. Similarly, this particular system is again restarted, and through this the company is also able to sell and register cars. And let me tell you that this was one of the primary reasons how we came to know that there was a cyber attack incident at JLR, as the company was unable to sell cars in the past few weeks. But now, all in all, if we see, sources have told NDTV Profit that from 1st of October, all the situations and all the systems will be up and running at JLR. And even right now, certain systems and certain IT infrastructure has been restarted, and the company is sure that in the coming few weeks, the things will get back to normal, and the JLR will be able to sell its cars and manufacture its cars as this was able to do a few weeks ago.
Well, so individual stories notwithstanding, the markets seem under intense pressure as we've established, and the indicative closing prices are not great either, and this is despite some slight positive commentary coming in on the negotiations, at least, even if we don't know the outcome. Just that very sharp pullback. Chakri Lokpriya, CIO equities at LGT Wealth, Johnson right now on the show. Chakri, if you had this option of sitting on some bit of cash, and maybe you do, but I'm asking that if you had that option, or if you still have the option, are you sitting on oodles of cash, or have you missed the bus already for sitting on cash?
Good afternoon. Thanks for having me. I think now is the time to have some cash. We're sitting probably about 4-5% of cash. This is an environment which is highly uncertain. It is damned if you do and damned if you don't. If tomorrow they pair up and become friends again, and suddenly the market runs up, then obviously what we're doing is we're trying to rejig the portfolio away from tariff impact, and also for slower earnings growth, because now it looks like basically there will be a round of earnings cuts.
Okay, yeah, and Kunal, Kunal, that's not a bad point that Chakri is making, right? It's a market wherein you're damned if you do and damned if you don't, because it is very volatile and uncertain. So, Kunal, when I hear you say that the markets may slide to a position of 24,500 or 400, which are key support levels, do you expect, looking at the current trend, for the market to have a bounce back, or do you believe that the mood currently is somber, and at those levels you see if it slides to those levels, or does it bounce back?
I think, yeah, definitely, Neeraj. What we have seen that the India VIX has also bounced back from the lowest level. So volatility is definitely going to be there around this support zone. So 24,500, 400 is where we would start in the next week. I think on the opening Monday or Tuesday, probably you will have those levels tested. And probably from those levels, we need to see whether the market is able to sustain that levels. We see some buying interest, because Tuesday is again the expiry for Nifty as well. And that is where you will have a bit of volatility for Mondays as well as Tuesday's trading session. And if we are not able to hold 24,400 also post the weekly expiry, or you can say the monthly expiry, you will see that correction going on the downside. So I think volatility is going to persist around the key zones. We have already seen 5 days of decline here. So we might see one more day of decline there, which is where the critical support zone is. We might consolidate there, see some volatility of 200 points, maybe up and down. But good area where Nifty should at least stop, because all the indicators would be in the oversold zone. So there will be a stop, there will be a pause there. You might have some pullback, and then you can again continue this downtrend towards the lower level of 24,000.
With regards to strategy on Nifty 50, one stock that is under pressure since morning is Awari Energies. The US probe on the company, which is India's solar panel maker, is under US probe. In fact, customs are suspecting evasion of anti-dumping and countervailing duties. There are temporary restrictions that have already been put in place. The allegations, in fact, they've been accused of mislabeling Chinese origin solar cells as Indian, and the case is triggered by American Alliance for Solar Manufacturing Trade Committee. You did have worry that came out with a clarification that US is an important manufacturing base and they will continue to cooperate in ongoing investigations in the US. In fact, they've gone ahead and acquired assets of Meyer Burger to further expand manufacturing in the US, and they're working in a steadfast manner to build manufacturing base there as well. In fact, from 1.6 gigawatt module manufacturing unit in Texas, they are looking to expand it to 3.2 gigawatts. Now, the question over here is whether their additional capacity that they're looking at in Texas, does that get questioned as well if anything gets proven in this kind of a scenario? Chakri, what would you look at in terms of where Waaree Energies go? Because yesterday also we did speak to the management, and the commentary overall in terms of business was absolutely bullish. There were concerns that in the next 3 to 4 years, when a lot of competition that keeps coming in, there could be pressure. But now the entire US angle with the probe coming in, how are you looking at it?
In general, solar and US are not good words right now. There has been a complete de-emphasis on solar on anything renewable by the Trump administration. And on top of that, exporting or having operations in the US, where that is also a negative. On top of that, if this mislabeling is indeed true, so I think there are too many moving parts and therefore would stay away from Waaree Energy.
Wow. Yep. And the price damage has been strong. We, of course, try and get the management to talk about this. And I'm sure they will come and be open about it. Let's wait and watch how that moves ahead. It's had a good support usually at these levels, so bear that in mind. The other set of stocks which are falling today, and I wonder if they are good short candidates, because that's what the dealing room seem to be suggesting, are the EMS players, Amber, Dixon, etc. And Kunal, I wonder, you look at the derivative positions, you look at the charts, do you think there is a short trade? Amber, Dixon, Keynes, etc. They are not cheap stocks?
See, I think definitely if you look at the entire setup specifically on Dixon, what I can see on the technical chart that there was a rising wedge pattern that has been broken on the downside with volumes. The stock has broken the 20 DMA. There was negative crossover as well on the momentum indicators, and now we have got that confirmation on the price as well. So I think more downside left for Dixon. The immediate support is around the 17,000 mark, which is where the first support is. And once that is taken out on the downside, we have a gap area which is around 16,250, 16,300 mark. So I think more even from the current levels, you could see 1,000-point downside that could kick in for Dixon. 18,000 now continues to be a very strong resistance. Any pullback, even if you get on Monday's trading session, could be a good opportunity to initiate shorts on Dixon.
Okay, in fact, UBS has a target price of 32,000 on the counter as well. So that's what you should be watching out for Dixon Technologies. But moving on, one of the top stories of the day that we're talking about is a Vodafone Idea EGR plea, where the hearing has been deferred to the 6th of October. The cuts have deepened further on a Vodafone from a 6.5% to nearly 8% in trade. We have Danish who joins us to tell us more. Danish, what have you picked up so far?
But the top court has deferred hearing Vodafone Idea's plea challenging the additional AGR dues of 9,450 crore rupees by the Department of Telecommunications. Well, in today's hearing, A.C. Tushar Mehta, who is representing the government, he said that the DOT needs some more time on this case, and hence he is seeking a deferral of this hearing, and the top court agreed to it, and now the matter will be heard on the 6th of October. But this is a very important case for Vodafone Idea, because we all know the debt situation of the company, and any additional demand of AGR dues from the DOT side can really impact impact the entire financials of Vodafone Idea, and hence this is why Vodafone Idea had approached the top court earlier, and in the previous hearings, Vodafone Idea clearly said that they really don't understand that how DOT can ask for more AGR depending on the previous few verdicts by the Supreme Court. But on its defense, SG Tushar Mehta had mentioned that the additional AGR dues are not over and above, but these are certain miscalculated errors in the financials of the company, and hence a new DOT demand was given to Vodafone Idea. But all in all, if we see, this is a very important matter for Vodafone Idea, and especially looking at SG Tushar Mehta's stance in the top court, in which we can clearly see that he's adjusting to the situation of Vodafone Idea. And moreover, the Indian government also holds a 49% stake in Vodafone Idea. So all in all, if we see, Vodafone Idea's hearing will now be done on 6th of October.
Thank you, Danish, for that. This has been a trader's favorite because on the day the Supreme Court agreed to hear the plea, that's the day when the stock saw some smart moves on the upside. And today, now that the plea has been moved in terms of the hearing to the 6th of October, that equal amount of gains that came in on that day have been lost right now. Kunal, would you advise traders to look at this as a buying opportunity till the 6th of October?
Sorry, can you please come on the stock again?
Vodafone Idea.
Okay, so for Vodafone Idea, again, we have seen a sharp run up from the lower levels. The breakout was around the mark of 7.5, 7.4 zone, and we have seen a rally towards the 9. But again, there needs to have multiple confirmation. Now, since today is the weekly close, we have never seen the stock giving us a close above the mark of 8.5. And again, today the weekly close is going to be below that mark. So we need to have a strong close for the momentum to kick up toward the mark of 10 or 10.5 on the higher end. The support for the stock on the downside is placed around the mark of 7.57 zone. So I think it's stuck in a broader range. 7.5 is the support, 9 is the resistance. Till the time we don't see a breakout or breakdown on either side, you will have the stock consolidating in this broad range.
So that's with regards to Vodafone Idea. One interesting story that we're tracking, Neeraj, is what's happening with IT as a sector. When people thought that probably it'll start getting out of the woods, you have multiple headwinds that have continued to come in there. Latest was the H-1B visa. Post that, the commentary that we heard from Accenture as well, what analysts indicated is that the commentary is not that weak, but it's mainly the guidance cut that is worrying the street right now. And taking that into consideration, look at a TCS, the stress that stock is going under. Only stock on Nifty IT, which is at a 52-week low. The biggest loser there, and 32% downtick, underperformed the IT index itself as well. I think let's understand from Jasmeet in terms of what that profit intelligence piece tells us on what's happening with the TCS, what's worrying the street, and what could be in store. Jasmeet, over to you.
Well, right, thank you for that. Let's quickly understand the stock performance. You see, the stock is nearly down 32% on a yearly basis versus Nifty IT, which is down 19%. And TCS is the only stock which is 52-week down. If you look at the market capital, it has deteriorated roughly by 5 lakh odd crore over the span of 1 year. Let's quickly understand what's happening with TCS and what's the street expecting. Now, if you look at the cautious signs, the company reiterates that the discretionary spends are still under pressure. So Q2 is something to watch out for. While they also see the CLSA comes up and says that they feel company to have incremental pressure on the overall margin going forward. That's another thing to watch out for. While they also see that the margins are under pressure given after the buyback announcement by Infosys, it creates a pressure on TCS and the other players also to have similar things in the downturn. Well, if you look at the JP Morgan's note, they expect margins to improve and a growth to be driven by from H2 onwards. So Q2 is something still under pressure expected from here on. While the overall, if you look at the additional impact of H1B visa is something also impacting TCS. Now, if you look at the way forward from here and a few positive signs for TCS, firstly, company is positive about the international market. As per the Q1 con call, they say they are positive on international market going forward. They expect it to do better in FY26 compared to the FY25 altogether. While also TCS majorly focused on financial services, and given the Accenture's result which came up yesterday, they saw a huge incline towards financial services. So that turns out to be positive for TCS. While looking at the other aspect, JP Morgan says that the growth expectations have bottomed out, and they also see a limited downside from here on. While they also make a note that the business model is not broken, so that's a positive sign. Lastly, we also say that the overall macro environment have not deteriorated further. So they have overall remained stable, while Q2 is something to watch out going forward. Now, if you look at the valuation, the stock is currently trading at a valuation of 22x, while it's a low of 5-year as well as a 10-year average. So the valuations are very cheap at this point of time. And if you look at the analysts, what they are recommending on the overall stock, we have buy almost at 33, while majorly is the buy rating. We have sell at 6, while hold have been maintained by 13 analysts. And if you look at the upside from here on, it stands at 26 odd percentage.
Yeah, well, and you Jasmeet, that's great research, and thanks so much for that. But you can't really keep tech out of news, and I think our guests have already said that at least Sudeep has said that it was weak, and I don't think Chakri would have a different view either. Chakri at 52-week low, but I wonder if any of the tech stocks become an investment candidate as things stand, or do they become investment candidates at all? What's your view?
I think we'll continue to remain underweight IT because of the continuous negative news coming out. You know, the macro or discretionary spend in the US might have bottomed out, but the H1B kind of is a big dampener. While 70% of all H1Bs go to Indian IT companies, more or less. And so given that environment, margins will be hit. And you know, while valuations have come down, the earnings growth rate has also come down from, let's say, 2020, 2021, where it was about 15%. Now it's hardly about 5%. So against this backdrop, I think we will continue, unless tomorrow US wakes up and suddenly becomes there's a friendlier tone, then these stocks will run significantly. Until then, it's best to be on the sidelines.
Okay, so that's the view on the IT pack. Let's take Kunal Shah's BTST, STBT calls for Monday. Kunal, what do you have?
I think I'll go for the sell side. As I told at the start of the show, we are likely to expect Nifty to touch the 24,500, 400 zone in the next week. So here for me, sell is HDFC AMCs. So HDFC AMC again has a rising trend line breakdown on the stock. 20 DMA has been breached. The momentum indicators are in the negative crossover, and clearly we are seeing a good amount of selling pressure into the stock. So this is a sell for me from the current levels, or any bounce what you get into the stock even on intraday perspective. 5,700 should be your stop loss on the upside. Sorry, 5,720 should be your stop loss on the upside, and on the downside, I can expect the stock to go towards 5,400, 5,300 mark.
Wow. Okay. 5,400 to 5,300 from the current level. I think all of this, UTI AMC too, if I'm not wrong, was looking weak today. I think capital market plays per se are not looking the best of plays right now. Remember, this can turn on a dime, but for now, it's not looking good. Chakri, I wonder actually, can this be the most obvious sector for a rebound? And the only reason I say this is because all through the last few months, wherein the returns have not proved to be great, etc., the Indian retail investors' inflow into SIPs has stayed steadfast, and therefore the ability of the AMCs to deploy capital, be the last port of call, and thereby have earnings probably stands better than a few other uncertain sectors. Is that a wrong theory?
You have absolutely the right theory, Neeraj, because you know SIPs have continued to be continue to be strong. The inflows are strong. The realization that financial assets and the need to be in financial assets has grown for many reasons. You know, for that purposes, I think, you know, the leaders will continue to lead, and therefore, you know, all these kinds of dip ought to be bought into. And that's where the volumes are, and they'll continue to see, and, you know, further markets correct, you'll see further acceleration of SIPs.
Okay, further acceleration of sorts when it comes to HDFC AMC as well in trade. The other thing that we need to talk about right now is also JSW Steel and the resolution that has come in for this one. In fact, the Supreme Court has upheld JSW Steel's resolution plan for Bhushan Power and Steel, quashing objections from ex-promoter Sanjay Singhal and sub-creditors. You know, let's actually get in my colleague Vishy to tell us more.
So the Supreme Court has actually upheld the JSW acquisition of Bhushan Power and Steel. Essentially what it has done is it has overturned an order that the Supreme Court had passed back in May of 2025. Essentially at that time, the Supreme Court had held that there were serious process inaccuracies in the way JSW Steel had acquired Bhushan Power and Steel under the Insolvency and Bankruptcy Code, and that these process inaccuracies were too big to ignore for the Supreme Court. So in May of 2025, the Supreme Court had actually said that the acquisition would need to be reversed and Bhushan Power and Steel would need to be liquidated. Today, of course, the Supreme Court has heard the review petition by JSW Steel as well as some other parties, including the Committee of Creditors, which had argued that the order was bad in law because some of the pointers that were made in the Supreme Court order originally in May were not actually accurate, and that the reversal of this transaction was not possible. So now, of course, the Supreme Court has held that order will now be junked, and JSW Steel's acquisition of Bhushan Power and Steel will continue as is. If you remember, back in 2019 is when the Committee of Creditors had accepted an offer by JSW Steel, a little less than 20,000 crore, to acquire Bhushan Power and Steel. Later, it took till 2021 before the plan could actually be implemented and JSW Steel could acquire this company. The Supreme Court in its previous order had said that this was too long a period to implement the resolution plan, and therefore it needs to be reversed. Today, of course, the Supreme Court is saying that these delays were caused primarily because of a lot of legal objections and legal challenges that were raised by the erstwhile promoter of Bhushan Power and Steel, Sanjay Singhal, the CBI and the Enforcement Directorate, and that JSW Steel or the Committee of Creditors cannot be blamed for the delay that had taken place before the plan was, of course, implemented. Alongside that, the Supreme Court has also held that JSW Steel has actually infused equity into Bhushan Power and Steel as part of the resolution process. The compulsorily convertible debentures that were issued by JSW Steel have been held up as equity instruments, and that issuance of these instruments indicates that JSW Steel has actually infused equity into the company to protect it. What we also know from the order that was passed by the Supreme Court earlier today is that the objections that were raised by Sanjay Singhal have been quashed entirely. Objections that were raised by creditors as well. The financial creditors of Bhushan Power and Steel had said that they need to be given a share of the EBITDA of Bhushan Power and Steel after the resolution process was completed. The Supreme Court has held that cannot be possible. So all in all, an end to a pretty sordid saga. Over the last few months, JSW Steel was in a lot of pressure. Now, of course, JSW...
Vishy, I'll have to come in because the markets are just about to end, but thank you so much for this. But let's start wrapping up the markets because it's just 1 minute left. On a very weak day for the markets, we are ending about 2.5% lower for the week, which is not a good sign, with the mid caps and the small caps down over 3% a piece for the week. So it's not turned out to be a great week, and a lot of losses for IT, for pharmaceuticals and a few other sectors. The BSE 500 winners and losers list should come up on your screen because that will give you the whole story. Look at the losses here. Vodafone Idea, no decision or decision postponed, down. Or bullish positioning getting thwarted. HLE Glasscoat, Laurus Labs, RT Drugs, Kaplan Point, IT and pharmaceuticals are essentially the two buckets which have gotten cracked the most. There are some winners. I mean, Larsen and Toubro a little bit. Some of the Tata Group, Tata Motors, Tata Investment, etc. Godrej Agro, 3%. But nothing too dramatic. In fact, the losses on some of the individual buckets, EMS for example, look very weak. Dixon, Umber, Keynes and others had a deep gash. Like we said, a lot of pharma names had a deep gash. If you can just pull up the individual names once, then I think a lot of pockets had weakness. So just let's get the EMS players up on the screen. You can pull up a Dixon, pull up a Umber and a few others. And there was weakness personified on fairly stiff volumes out there. Keynes too down about 2%. We already spoke about pharma, a lot of mid-cap or non-nifty IT names as well. Persistent, Emphasis, etc. All of them had gashes to themselves. Pharma obviously was weak and therefore definitely looked weak, but mid-cap IT too, not the best of days. And the weekly performance, like I said, for Nifty, for mid-caps, small caps, not great. I mean, this is Nifty 50 intraday for the week. I think 2.3, I thought it was 2.54%, but 2.3%. So not great. Mid-caps and small caps nearly down 3% or slightly over 3%. Clearly showing that this week was completely anti what has happened in the past 2 or 3. Now, have we reached a place from where you can say that we'll bottom out? Maybe from a numbers perspective, 100, 200, 300 points more. But I think until the thaw is clearly evident, you might well see the markets gyrate with a bit of a negative bias. So keep an eye out for that perspective. But from all of us who put this show together and the shows through the week together at NDTV Profit, thank you so much for tuning in.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
One night before we were supposed to get the money in the bank, we get a phone call and the deal was off. We were in the middle of COVID. We were in a situation where we did the math that at zero revenue, we could not survive more than 3 to 4 months.
You're 25, you work for a multinational, you're living in the south of France.
Yes.
And you're not liking it. You want to come back to India and work harder.
We realized that legally it was, not allowed to work more than 35 hours a week. When I asked my boss for a permission to come on a weekend, he got very upset.
तो आप वो Indians हो जो सबका नाम खराब करते हैं. Tell us what the kernel of the idea starts from before you go mass consumer.
People are opening multiple browser windows or tabs to do the same search on 3 OTAs, 2 airlines. So we built this meta search engine that would, crawl or use their APIs to give you where the best deals were, and then we would lead you to them to buy.
You almost finish each other's sentences. So that chemistry is really there. One thing that really annoys you.
Hard to, have a discussion that's not very objective because he's the one who's more data, numbers and objective driven at times.
Sometimes, I have to control his positivity about certain things. Hold on, this might not.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडी
Hello and welcome. You're watching Market Express and I'm your host Himakshi Bahuguna. Now let's get straight into the show. First up, let's see how the markets have fared today. So benchmark indices ended with steep cuts for the 6th consecutive day, wiping out almost 2 weeks of gains. Now the Nifty and the Sensex fell about 1% each as Trump's fresh round of tariffs and heavy FPI sell-off demotivated the investor sentiment. Also, broader markets have underperformed the benchmarks by a significant margin, with the small and mid-cap indices ending over 2% lower. Infosys, M&M and ICICI Bank contribute most to the Nifty's fall. Now, while shares of L&T and ITC provide marginal upliftment, so all sectors have declined sharply, with Nifty IT, defense and pharmaceuticals leading the sectoral drag. In fact, all the constituents of the IT index have weighed by the global headwinds end in the red. Market breadth also ends highly skewed in favor of the declines, with over 1,900 stocks ending in the red zone. Now about the market picture from this week's perspective, viewers. Benchmarks have snapped a 3-week gaining streak. Now Tech Mahindra and TCS have fallen in the Nifty the most. Now Nifty Midcap 150 has fallen over 4% for the week. Nifty IT fell over 7% for the week, and with Coforge and Emphasis declining the most. So all the sectoral indices have fallen over 1% for this week. Now, viewers, US President Donald Trump has announced a slew of big new taxes on various items this morning. Now, these tariffs will start on October 1 of 2025. Now, they target drugs, trucks, kitchen items and also furniture from other countries. Now, Trump says that this will stop unfair foreign competition and also bring jobs back home. But experts warn that it could actually make things more expensive for everyday people. Now, the biggest hit is a 100% tariff on any branded or patented medicine imported to the US. Trump also says that companies can skip this tax if they build factories there in US, like breaking ground or also starting construction. So a 30% tax will hit the upholstered furnitures like sofas and chairs. Now, these come mostly from places like China, Vietnam, Mexico and Malaysia. So for heavy, that is the big trucks. So, think rigs over 10,000 pounds. Now, Trump has set a 25% tariff there. Imports from Mexico have tripled since 2019, hurting brands like Peterbilt and also Freightliner. Now let's see how the pharma sector, has performed today. So the pharma, exports body doesn't see much impact on India from the US proposed US tariffs. Now, according to the body, high quality and low cost is the strength of Indian generic medicines. Now, the body says that America has been saving a lot of money on generics for the past 10 years. In fact, it points that the United States has been saving almost $200 billion from Indian pharmaceutical imports. Now, as Trump has proposed to slam a 100% tariff on the medicines, the Indian Pharma Exports Group hails Indian imports as a big cost-saving opportunity for the US that is now maybe being effectively scrapped. Now, on the other hand, Morgan Stanley says that Trump's pharma tariffs may not hurt most Indian firms as they focus on the generics. Now, Sun Pharma is an exception due to its exposure to branded specialty drugs in the US. Now, the firm notes that Sun Pharma has a US plant which may offer some protection there. Long-term impact is seen as limited, but short-term risk remains. Now, viewers, the Supreme Court today cleared the way for JSW Steel's 19,350 crore takeover of Bhushan Power and Steel. Now, this verdict ends the 6-year legal fight. Back in 2019, JSW's plan to buy the bankrupt steel maker was approved by the creditors, but delays hit hard due to challenges from the CBI and also ED and Bhushan's former promoter Sanjay Singhal, who was arrested for the fraud. So the deal only closed in 2021. Lenders have demanded a share of Bhushan's profits, arguing JSW's compulsorily convertible debentures were in true equity. So the Supreme Court disagreed, calling CCDS equity instruments and also upholding the creditors' original plan, saying that courts can't override their wisdom. Now, this shuts down singles' objections and also lenders' claims, securing JSW's control. RITES has secured a significant international order and have received a letter of award worth 153 crore rupees from South Africa's Thales Logistics. Now, the deal is for the supply of the diesel-electric locomotives, which is a key export for the company. So this win further strengthens RITES' presence in the African market. Next up, we have Vari Energy. So it is under a US probe over alleged mislabeling of Chinese solar cells, as Indian customs suspects evasion of anti-dumping duties, with temporary restrictions now in place. Now, the company says that it will cooperate with investigations and also continues to expand its US manufacturing base. L&T is in focus, gaining over 2% in trade after announcing its exit from Hyderabad Metro Rail Phase 1. Now, the Telangana government takes charge of this project, offering a one-time settlement and also absorbing the debt. L&T steps away after years of losses and also limited support from the state. The company says that this move helps clean up its books and also refocus on the core areas. Paris Defence was in focus today as they have bagged a 34 crore international order from Elbit Security Systems Israel for electro-optic supplies. Now, the order will be executed between February to November 2026, adding to its robust order book. Paris Defence's order book has grown steadily over the years, which is now standing at 928 crore rupees in FY25 with a 2.5 times book-to-bill ratio. Viewers, JLR is also recovering from a major cyber attack with key parts of its digital infrastructure back online. Now, a comprehensive recovery program is underway, including efforts to clear supplier payment backlogs. Now, its global parts logistics center and also the vehicle processing systems are returning to full operations. The company says that it will update the financial impact of the cyber incident in due course. Next stock is Supreme Petrochem, which has commenced its operations of 2 new production lines at its Amdoshi facility in Maharashtra. Now, the new lines are dedicated to producing compounded ABS, which is a versatile engineering polymer. Now, the new facility will have an installed capacity of 20,000 tons per annum to meet the growing demand for compounded ABS in key sectors such as automotive, electronics, and also various structural applications there. Nomura initiates a buy on Titan with a target of 4,275 rupees, and they have cited a strong structural story and also steady demand outlook. Now, Nomura believes that organized players like Titan are expected to grow 1.5 times faster than the industry, with headwinds largely behind. So sales and margins are resetting to new normal levels, and also a recovery is expected from H2. Nomura says that Titan is better placed than domestic peers on a risk-weighted basis. On to some more brokerage notes. Morgan Stanley turns more bullish on AU Small Finance Bank, hiking its target to 1,000 rupees, implying a 33% upside. Now, it maintains an overweight rating, citing a strong setup post Q2 and also expectations of accelerating the loan growth and moderating credit cost. The firm sees metrics improving into FY27, and also AU Small Finance Bank remains its only overweight pick among mid-sized private banks. Global brokerage firm Macquarie has also released a new report on the Indian IT sector, identifying TCS as its marquee buy. Now, the firm's optimistic view stems from the strong performance of Accenture's financial services vertical, which grew at 12% year over year. As Indian IT companies have a high exposure to this segment, Macquarie believes that it will drive margin expansion and also pick up in the growth for the sector over fiscal year 2027. The Supreme Court gave the struggling telecom giant Vodafone Idea a short breather today in its long-running battle over huge government dues. So the company is fighting a fresh 9,450 crore demand from the Department of Telecommunications for AGR. Now, Vodafone says that this extra bill for 2016 to 19 ignores the past court fixes and also could sink the firm, which already owes over 70,000 crore rupees total, and also warns that it won't survive past 2026 without help. So Solicitor General Tushar Mehta, speaking for DOT, asked the bench led by Chief Justice B.R. Gawai for more time to sort a fair fix, noting that the government owns nearly half of Vodafone's shares after converting old dues to equity. Now the court has agreed, shifting the hearing to October 6 now. And let's now give you some information on the market debutants. Now, GK Energy has listed at 171 rupees on NSE, which is a healthy, 11.8% premium over 153 issue price, and also at 165 rupees on the BSE, up 8%. Now, the Pune-based firm's 464 crore IPO opened on September 19 and closed on September 23rd after being oversubscribed by 93 times. Now, the company is a provider of solar-powered farm pumps under the government's PM Kusum scheme. Now, investors cheer the green energy push, but watch for market volatility as the firm eyes more rural solar growth. Satvik Green Energy had a quiet stock market debut today, listing flat at 465 rupees per share on the NSE. On BSE, it opened at 460 rupees, down just 1%. So, from the ban. Now, the 900 crore IPO, mixing 700 crore fresh shares and also 200 crore from the promoters, have wrapped up after a strong subscription. Funds from the IPO will build a new 4 gigawatt factory, pay all the debts, and also grow its operations. Tomorrow, that is September 27, Prime Minister Narendra Modi will launch BSNL's massive rollout of over 97,500 4G mobile towers in Odisha. Now, over 92,600 of these towers have already been installed, use a fully indigenous 4G technology stack, upgradable to 5G. Now, these have been built by Tejas Networks for radio access, C-Dot for the core network, and integrated by TCS. Now, this network, part of the Atmanirbhar Bharat push, began trials in 2023 and now covers rural and urban areas, offering BSNL a chance of revival, with the private players like Jio and Airtel. Amazon has also agreed to pay $2.5 billion to resolve claims brought by the US government that it tricked millions of people into enrolling as Prime members and made it difficult to cancel. Now, a total of $1.5 billion will go to the refunds for customers who were duped into signing up for the service, according to the proposed settlement announced by the Federal Trade Commission. Initial claims for unemployment insurance were well below expectations last week, helping to douse caution at the Federal Reserve and also elsewhere that the labor market is in danger. First time, filings for the week ended September 20 totaled the seasonally adjusted 218,000, down 14,000 from the prior week's upwardly revised figure, and also significantly less than the Dow Jones consensus estimate for 235,000. The Labor Department reported on Thursday. Bosch is set to cut 13,000 jobs as part of its plans to save 2.5 billion euros. Now, the engineering giant said that the losses in its mobility division in Germany, which provides vehicle parts and also software, came as a result of a stagnated market and pressure from the rival companies. The market has seen increased competition from the likes of Tesla and also China's BYD. Now, it also blamed increased costs arising in part now from US President Donald Trump's tariffs. The United States economy grew at a faster clip than earlier thought in the second quarter, with revised data underscoring its resilience despite headwinds from the trade policy and also slowing global momentum. Gross domestic product, that is the GDP, the broadest measure of the economic output, has expanded at an annualized 3.8% pace from April to June. Now, the Commerce Department said in its third and final estimate that is well above the 3.3% reported in the second estimate and the initial 3% figure. US President Donald Trump has announced a slew of big new taxes on various items this morning. Now, these tariffs will start on October 1. They target drugs, trucks, kitchen items, and also furniture from other countries. Trump says that this will stop unfair foreign competition and also bring jobs back home. But experts warn that it could make actually things more expensive for everyday people. The biggest hit is a 100% tariff on any branded or patented medicine imported to the US. Trump says that companies can skip this tax if they build factories here, like breaking ground or starting construction. A 30% tax will hit the upholstered furniture like sofas and chairs. Now, these come mostly from places like China, Vietnam, Mexico, and also Malaysia. So for heavy trucks, think rigs over 10,000 pounds, Trump sets a 25% tariff. Imports from Mexico have tripled since 2019, hurting brands like Peterbilt and also Freightliner. President Trump also signs an executive order approving the sale plan for TikTok's US operations. The plan actually moves forward to separate TikTok from its Chinese parent ByteDance. Now, a new US-based company will be formed, valued at approximately $14 billion. The order delays the TikTok ban enforcement until January 20th, allowing time to finalize the deal, line up American and global investors, and also get Chinese government approval. So the algorithm will be retrained and monitored by the US partners. Investors include Oracle, Michael Dell, and also Rupert Murdoch. Now, Trump confirms that the Chinese President Xi Jinping's approval for the deal. TikTok has 170 million users. On to some more global news. President Trump has took an aim at the booming chip industry to boost the US manufacturing and also cut dependence on the foreign suppliers like Taiwan. Now, under the plan discussed by Commerce Secretary Howard Lutnick, chip makers must balance imports with equal domestic production or also face tariffs. Exemptions could go to firms like TSMC, Intel, and also Samsung if they ramp up the US factories. Now, this addressed national security worries as America relies on overseas chips for everything from phones to missiles. But this could actually, also raise costs for the tech giants like Apple and Dell, who may now track chip origins closely. And the Trump news continues. Donald Trump welcomed Pakistan's Prime Minister Shehbaz Sharif at the White House. Now, this meeting, timed with 80th UNGA, follows a July 2025 trade deal cutting the US tariffs to 19% on Pakistan goods. Relations had cooled due to past tensions with India. But Trump's praise for Sharif's role in India-Pakistan peace talks and also a recent $600 million, US aid pledge for flood recovery sign ALS as a shift. Now, with India's Russian oil buy straining its US ties, Pakistan's strategic value grows. So the two leaders have discussed counterterrorism and also regional stability, aiming to deepen this newfound friendship. Britain is introducing mandatory digital ID cards starting with new workers, aiming to curb illegal immigration. Now, the scheme requires anyone beginning a job or renting a home to show a digital ID on their smartphone, which is verified against a central government database. Now, Prime Minister Keir Starmer calls this as an enormous opportunity to secure borders and also make illegal work harder. Now, the ID dubbed the Brit card will become available to citizens and also legal residents by 2029. Now, critics warn about privacy and also civil liberties risk, while supporters say that it will just simplify the access to services and also reduce fake documents used for employment and housing. On to some more global news. Elon Musk's XAI has filed a lawsuit against OpenAI, accusing it of stealing trade secrets linked to its chatbot Grok. Now, the suit claims that ex-employees were hired to access confidential data. OpenAI denies the charges, calling it part of Musk's ongoing harassment. The legal battle adds fresh heat to the AI race. The Tirupati Laddu scandal has a fresh update. Now, the Supreme Court heard the CBI's urgent plea and also quickly stayed the High Court's critical order, giving the agency relief and also pausing any sort of halt to the probe. So things heated up in July 2025 when the Andhra Pradesh High Court slammed the CBI, saying that the director broke Supreme Court rules by letting J. Venkat Rao, who was an officer not officially on the SIT, lead parts of the investigation. So the High Court ordered a fresh rule following probe to protect, the case's sanctity. But Justice Gawai asked plainly, if the SIT wants to appoint a special officer, what's wrong with that? Stressing that the CBI hadn't abandoned the case. Viewers, the Russian origin MiG-21 fighter jets, which have been the backbone of Indian Air Force combat fleet for over 6 decades now, took their farewell flight in Indian skies on Friday at the Chandigarh Air Force Station. Air Chief Marshal A.P. Singh flew the last sortie of the squadron with the call sign Badal 3, a spectacular display by Indian Air Force elite skydiving team Akash Ganga bedazzled the Chandigarh sky today as the jets descended from a height of 8,000 feet with the majestic flypast of MiG-21 aircraft accompanied by precision of the Air Warrior drill team and also an aerial salute. The Supreme Court banned the sale of any crackers in Delhi NCR, including green crackers. Now, the Apex Court allowed certified manufacturers to produce green firecrackers in Delhi NCR in the region. Now, the court also directed the centre to work with stakeholders and also present a solution on the ban on sale and also storage of firecrackers in Delhi NCR by October 8. With that, viewers, it's a wrap on this edition of our Market Express, but please stay tuned to NDTV Profit for more news and updates.
One night before we were supposed to get the money in the bank, we get a phone call and the deal was off. We were in the middle of COVID. We were in a situation where we did the math that at zero revenue, we could not survive more than 3 to 4 months.
You're 25, you work for a multinational, you're living in the south of France.
Yes.
And you're not liking it. You want to come back to India and work harder.
We realized that legally it was, not allowed to work more than 35 hours a week. When I asked my boss for a permission to come on a weekend, he got very upset.
आप वो Indians हो जो सबका नाम खराब करते हैं. Tell us what the kernel of the idea starts from before you go mass consumer.
People are opening multiple browser windows or tabs to do the same search on 3 OTAs, 2 airlines. So we built this meta search engine that would, crawl or use their APIs to give you where the best deals were, and then we would lead you to them to buy.
To almost finish each other's sentences. So that chemistry is really there. One thing that really annoys you.
Hard to, have a discussion that's not very objective because he's the one who's more data, numbers and objective driven at times.
Sometimes, I have to control his positivity about certain things. Hold on, this might not.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडी
The Nifty and Sensex snapped the 3-week gaining streak as H-1B visa and tariff woes weigh on the market. All sectoral indices fall over 1% for the week. Mid and small cap indices lose more than 4%. GK Energy makes a lukewarm debut as it listed at 12% premium on the exchanges, while Sattvic Green Energy makes a flat start on the street. President Trump announces 100% tariffs on imports of branded and patented pharma from the 1st of October, spares generics. India braces for the impact as stocks of pharma companies drop over 2%. Waaree Energy loses over 6% after reports of US government investigating the company for solar tariff evasion. Management says the company will continue to cooperate with the investigations. The Supreme Court clears the final leg of hurdles in the Bhushan Power and Steel case, giving full backing to JSW Steel's resolution plan. The Supreme Court asked the centre to take a decision on revising the absolute ban on manufacture of firecrackers in Delhi NCR after holding consultations with all stakeholders. In the meantime, the court allows certified manufacturers of green crackers who have the permits to manufacture them. MiG-21 fighter jets retire after 6 decades of service at a mega event in Chandigarh. Defence Minister Rajnath Singh calls it a proof of India-Russia ties. Good evening, you're watching Profit 360 on NDTV Profit. I'm Sanjana. Along the next half an hour, I'm going to bring you the latest in markets as well as national and international news. So let's dive right into it and have a look at how the markets fared today. The Nifty 50 and the Sensex ended lower for 6 sessions, and this is posting the worst week since March. On a weekly basis, the Nifty 50 and Sensex snapped a 3-week winning streak. All sectors also ended in the red. My colleague Puneet now joining in with a more detailed wrap of all of the market action. Puneet, over to you.
Well, it was a tough session to say the least. The Nifty broke down from the 24,700 level. We saw some key losers in the session today as well, and that is the story of the week as well. Continuous pressure throughout the week, with the Nifty ending almost 2.6% down for the week. For Friday today, the Nifty's ended below 24,700. It was a session where during the day we spoke about 24,900 as the key support level, but by the end of it, we had broken 24,800 and then 24,700 as well. Stocks like Mahindra & Mahindra as well as IndusInd Bank were the top Nifty 50 losers for today, and those gave up the gains, while the mid-cap and the small-cap index, both of them were down over 2% each. In terms of sectors, the Nifty IT and the Nifty Pharma were the biggest losers essentially in terms of sectoral mix, and Pharma did get impacted because of the comments that came from President Trump. He's put on a tariff essentially now on patented drugs, and while it does not impact Indian pharma companies, it still had a sentimentally negative impact because of that. When you look at for the week, the Nifty has pared its 2-week gains in this particular week, with the Tech Mahindra and TCS falling the most for the Nifty in this particular week. Tech Mahindra is down 9%, TCS is down 8% for this particular week, and TCS has seen the biggest weekly loser essentially in the last 5 years essentially in this particular time frame. So definitely a stock that hit 52-week lows today as well. Amongst others, the small cap 250 has fallen 4% in this particular week. Kaplan Point and Avanti Feeds fell the most, while the mid cap as well continued to be under pressure. That one is down as well in this particular week. The Nifty IT for the whole week is down 7%, largely impacted by the stocks I just mentioned. Nifty Realty, Pharma and IT fell over 5% each for this particular week. Overall, going into next session, we will be needing a lot more supports, and we might find those as well. But ending this particular week on a very weak note, to say the least.
Absolutely, Puneet, and the proof is in all the sectors ending in the red. And as the US is set to impose a steep 100% tariff on branded pharmaceutical imports starting October 1st, this spells trouble for India, with the American market being the biggest revenue driver for drug makers like Sun Pharma. Now, my colleague Varsha has more details on how this could impact the sector. Varsha, over to you.
Yes, US will impose 100% tariff on branded and patented products and not on generics, because India is a hub when it comes to generics, pharmaceutical exports. So these tariffs are not on generics. Now, the tariff will also not apply to companies who already have manufacturing plants in US or some of the companies who are building manufacturing plants in US. So the tariff would be exempted. Now, which companies will be impacted? One is Sun Pharma. Why? Because they have a specialty portfolio, like Illumia. So almost specialty portfolio contributes 19% to their overall revenue. Now, onto the facilities of Sun Pharma in US, they do have one facility, but they do not disclose how much contribution US facility contributes to overall revenue. But in Q1 FY26 con call, they did say that they're not going to invest more capex into US facilities, because Indian domestic plants capacities are enough to cater to all the US products as well. Now, why today, if you see, despite only tariffs on patented drugs, why whole pharma sector will be under pressure? Because if Trump can impose 100% tariff on patented drugs, investors are of concern that he may tomorrow impose tariffs on generics, and that's the uncertainty that lies ahead, and because of this, whole pharma sector will be under pressure. But do note that these tariffs are not on generics, and India is a hub when it comes to export of generics pharmaceutical products.
Right, Varsha, thanks so much for that. And meanwhile, India's pharma industry, like you rightly said, is facing serious tariff pressure after this particular announcement of 100% tax on branded and patented drug imports from 1st of October. We also spoke with Manish Sonthalia, Director and CIO at MK Investment Managers, and he highlighted that this could sharply impact companies, especially if the entire value chain, so I'm talking from active ingredients to finished medicines, come under the tariff net. Let's listen in.
I think all the four major tariff announcements today does impact India to some extent. Of course, the pharma being the largest component of the tariff, in today's announcement, there's some ambiguity currently whether, the entire value chain is going to get tariffed, or only the final branded formulation is going to get tariffed if it's not made in the US. So this would have implication for the CRDMO, CDMO, CMO companies. If the entire value chain is to be taxed, if the entire CMO, CRDMO facilities are not there in the US, if that is also going to be subject to 100% tax, then there is a wider impact. On the other hand, if the only final branded formulation is to be tariffed, then there's a limited impact. Of course, we also don't know whether specialty or complex generics are to be tariffed or not tariffed.
Meanwhile, markets continue to climb new highs even as concerns over the US tariff impact linger. Now, despite ongoing tariff uncertainties, there are no clear signs of a deeper slowdown in the American economy. This is the word coming in from Khun Go, head of Asia research at ANZ, noting that underlying economic indicators still reflect steady resilience in the US, with growth remaining broadly solid amid these mixed trends. Let's listen in for more insights.
The US economy is still holding up pretty well. The outward revisions to Q2 GDP plus the real-time GDP tracking for Q3 is still indicating growth of around 3% and above. So there's no signs of a deeper slowdown in the aggregate US economy. But I think this is where you have to really dig down into the details, because part of the strength of the US economy is being held up by the AI-related investment boom. Now, this boom, while it's great for certain companies, and it's a key reason why U.S. equity market up to recently have been hitting all-time highs, it's not necessarily great for the labor market. And this is where, for the Fed itself, it's really to focus on inflation and the labor market. There's no doubt the labor market has been weakening. The downward revisions and the recent loss in job momentums point to that. So next Friday's payrolls number, assuming it comes out, if there's no government shutdown, will be the critical one for the Fed.
Now let's take a look at today's listings. We saw GK Energy closing nearly 10% higher after making a decent debut on the exchanges. The company listed at 12% premium over the IPO price, and the initial public offer was oversubscribed more than 89 times on the last day of issue. Meanwhile, Satvik Green saw a flat listing as the shares listed over the IPO price of 465 rupees. Meanwhile, Waaree Energy's shares plunged around 7% after it took the hit after the news of a US probe into the suspected tariff evasion. The case was triggered by a US solar trade group, and temporary restrictions are already in place. Now, Waaree has clarified that it is cooperating with the investigation. But for more on this, let me quickly go across to my colleague Varsha.
So yes, US has started an investigation against Waaree. The complaint is that Waaree took solar cells made in China and sold to US as if they were made in India, and because of that, a temporary restrictions have been put on Waaree. Now, if found guilty, Waaree it would be difficult for the company to sell their products to US, considering US as a huge market for them, because overall 20% of revenue comes from US and 90% of module exports go to US from India. Till probe ends, uncertainty will keep.
And let's quickly take you across to the briefing that's happening by the MEA's Randhir Jaiswal on US tariffs. Let's go and listen in.
विशेष जानकारी के लिए तो मैं कहूँगा कि जो संबंधित मंत्रालय हैं यहाँ पर, उनसे बातचीत करेंगे तो ज़्यादा आपको जानकारी मिल सकती है। कश्मीर के मुद्दे पे हम लोगों का बयान साफ है। हमारा क्या पोजीशन रहा है पिछले गत सालों में, गत दशकों में, उससे आप सभी लोग भली भांति वाकिफ़ हैं। जहाँ तक नॉर्थ साइप्रस की आपने बात कही, मैं आपका ध्यान आकर्षित करना चाहूँगा। जो विदेश मंत्री की मीटिंग हुई साइप्रस के फॉरेन मिनिस्टर से, उस पे ये बातचीत हुई और वहाँ पर आपका ध्यान मैं आकर्षित करना चाहूँगा कि विदेश मंत्री ने इस बात पर बातचीत की और ये कहा गया कि हम उस बात का समर्थन करते हैं कि एक कॉम्प्रहेंसिव और लास्टिंग सेटलमेंट हो साइप्रस के मुद्दे पे, इन अकॉर्डेंस विथ द अग्रीड UN फ्रेमवर्क एंड रेलेवेंट UNSC रेजोल्यूशंस। Ravinder, coming to your question, first, the number of deportations that have happened from the United States in the last several months, since January 2025. So far, we've had 2,417 Indian nationals deported or repatriated from the United States.
Right, we'll try and get you more inputs coming in from Randhir Jaiswal. That briefing taking place, he spoke about the Prime Minister actually speaking with Russia, and also the issue of the team returning after the high-stakes tariffs conversations in the United States. Let's move on to what's happening on the GST front. With GST revving up auto sales during Navratri, both the demand for four-wheelers and two-wheelers is breaking records. Maruti Suzuki's Partho Banerjee, we actually caught up with him to understand how the demand is looking and if the momentum will actually sustain. Let's listen in.
I think after the start of the GST 2.0 reform from 22nd of September, we are seeing a very good response. In our showrooms, on average, we are getting close to 80,000 inquiries daily. And we have almost now retailed 80,000 vehicles in the first 4 days of the Navratra. So that's a very good sign. And what we are seeing is the response in the small cars. Typically, the vehicles which are in the 18% GST slab, the response is further, I would say, better than the vehicles which are there in the 40% GST.
And in another big news coming in, the Supreme Court has upheld JSW Steel's resolution plan for Bhushan Power, dismissing objections from the former promoter Sanjay Singhal. The court emphasized that the final authority lies with the Committee of Creditors and that the plan's commercial wisdom cannot be questioned by the judiciary. Joining us now with more details is my colleague Vishwanath.
Acquisition of Bhushan Power and Steel. Essentially what it has done is it has overturned an order that the Supreme Court had passed back in May of 2025. Essentially at that time the Supreme Court had held that there were serious process inaccuracies in the way JSW Steel had acquired Bhushan Power and Steel under the Insolvency and Bankruptcy Code, and that these process inaccuracies were too big to ignore for the Supreme Court. So in May of 2025 the Supreme Court had actually said that the acquisition would need to be reversed and Bhushan Power and Steel would need to be liquidated. Today, of course, the Supreme Court has heard the review petition by JSW Steel as well as some other parties, including the Committee of Creditors, which had argued that the order was bad in law because some of the pointers that were made in the Supreme Court order originally in May were not actually accurate, and that the reversal of this transaction was not possible. So now, of course, the Supreme Court has held that order will now be junked and JSW Steel's acquisition of Bhushan Power and Steel will continue as is. If you remember, back in 2019 is when the Committee of Creditors had accepted an offer by JSW Steel, a little less than 20,000 crore, to acquire Bhushan Power and Steel. Later, it took till 2021 before the plan could actually be implemented and JSW Steel could acquire this company. The Supreme Court in its previous order had said that this was too long a period to implement the resolution plan and therefore it needs to be reversed. Today, of course, the Supreme Court is saying that these delays were caused primarily because of a lot of legal objections and legal challenges that were raised by the erstwhile promoter of Bhushan Power and Steel, Sanjay Singhal, the CBI and the Enforcement Directorate, and that JSW Steel or the Committee of Creditors cannot be blamed for the delay that had taken place before the plan was, of course, implemented. Alongside that, the Supreme Court has also held that JSW Steel has actually infused equity into Bhushan Power and Steel as part of the resolution process. The compulsorily convertible debentures that were issued by JSW Steel have been held up as equity instruments, and that issuance of these instruments indicates that JSW Steel has actually infused equity into the company to protect it. What we also know from the order that was passed by the Supreme Court earlier today is that the objections that were raised by Sanjay Singhal have been quashed entirely. Objections that were raised by creditors as well. The financial creditors of Bhushan Power and Steel had said that they need to be given a share of the EBITDA of Bhushan Power and Steel after the resolution process was completed. The Supreme Court has held that that cannot be possible. So all in all, an end to a pretty sordid saga. Over the last few months, JSW Steel was in a lot of pressure. Now, of course, JSW Steel looking a lot more relieved.
Thanks for that, Vishwanath. And let's move on to another case that came up today in the Supreme Court. This is with regards to Vodafone that actually came up in the Supreme Court today. Vodafone Idea's fate in the long-running AGR dues dispute remains uncertain as the Supreme Court today postponed the hearing to October the 6th. Now, this delay follows a government request for more time to address fresh dues running into thousands of crores, even though the centre itself is an equity holder in Vodafone Idea. Now, the stock, meanwhile, closed nearly 6% lower after plunging to an intraday low of 7 rupees and 90 paise. My colleague Danish now joining us with all of the details.
But the top court has deferred hearing Vodafone Idea's plea challenging the additional AGR dues of 9,450 crore rupees by the Department of Telecommunications. Well, in today's hearing, A.C. Tushar Mehta, who is representing the government, he said that the DOT needs some more time on this case and hence he is seeking a deferral of this hearing, and the top court agreed to it, and now the matter will be heard on the 6th of October. But this is a very important case for Vodafone Idea because we all know the debt situation of the company, and any additional demand of AGR dues from the DOT side can really impact the entire financials of Vodafone Idea, and hence this is why Vodafone Idea had approached the top court earlier, and in the previous hearings Vodafone Idea clearly said that they really don't understand that how DOT can ask for more AGR depending on the previous few verdicts by the Supreme Court. But on its defense, S.G. Tushar Mehta had mentioned that the additional AGR dues are not over and above, but these are certain miscalculated errors in the financials of the company, and hence a new DOT demand was given to Vodafone Idea. But all in all, if we see, this is a very important matter for Vodafone Idea, and especially looking at SG Tushar Mehta's stance in the top court, in which we can clearly see that he's adjusting to the situation of Vodafone Idea. And moreover, the Indian government also holds a 49% stake in Vodafone Idea. So all in all, if we see, Vodafone Idea's hearing will now be done on 6th of October.
Thanks for that, Danish. And launched in 2007, ixigo is one of India's earliest online travel platforms that use technology to revolutionize how we travel. Founded by IIT graduates Alok Bajpai and Rajneesh Kumar, the duo left successful careers in Europe to transform India's ticketing chaos into convenience. Our managing editor, Tamanna Inamdar, sat down with them on the latest episode of The Disruptors, where they opened up about their journey from battling near bankruptcy to making bold pivots that shaped their success. Let's listen into a snippet of that conversation, and don't forget to catch the full episode airing today at 6 p.m. and later tonight at 9 o'clock.
You start right before the GFC, global financial crisis. You do a pivot and then you have COVID come in. So I don't know about the other crisis, we'll learn about it through this interview. But you start off and then the global financial crisis hits. How does that work?
That was a crazy story. So I think we were 24 hours away from signing a term sheet. No, signing actually the definitive agreements and probably wiring the money in the bank, because all the other stuff was done already. And by that time, we were in that phase where you are thinking that, oh, you know what, you've made it big, you've raised a big round, and you are in that growth phase. So we kind of spend a lot of money on marketing, and we were almost on the verge of kind of running out of cash. And then the GFC happened. So one night before we were supposed to get the money in the bank, we get a phone call and the deal was off because Lehman Brothers had collapsed. And we just discussed, and then we said, what do we do now? So next day we went to the office. And to be honest, we had no idea of how to deal with that kind of a crisis, because it was the first time something like this had happened to us. So one of the things that we thought was that the best thing to do in a situation like this would be to be completely transparent with the team and just tell them what's going to happen. So we went to the team and we told, here's the situation. We'll probably run out of money in 2 to 3 months. And so we'll have to let go of at least half of you. And the team really appreciated the fact that they just thought that, we had answers to all the questions, but that's what people always think about founders, but sometimes they don't. And, when they saw us that vulnerable, that's when they kind of, rose up to the occasion, and they came back to us and said that, you know what, you don't have to do that. Give us some time and we'll figure out something.
Right, don't forget to catch that conversation this evening at 6 o'clock and later tonight at 9 p.m. Let's take you to what's happening with regards to Jaguar Land Rover. Following a major cyber attack, the company is finally showing signs of recovery. Key parts of its digital infrastructure are gradually coming back online, and a comprehensive recovery program is actively underway. My colleague Danish now bringing us the latest developments.
Well, things are slowly limping back to normalcy for Tata Sons-owned luxury car maker JLR. Well, the company suffered through a cyber attack, which was reported on 2nd of September. And since then, the company has been doing efforts to restore its systems, and twice it has been unlucky. But now, the company showed that from 1st of October, all the systems will be up and running and the production will also restart. Well, JLR told NDTV Profit that it is doing all the efforts to ensure that everything is back to normal soon. They told NDTV Profit that a particular financial system is up and running again, by which the company is now able to clear the backlog of vendors and other stakeholders. Similarly, this particular system is again restarted, and through this, the company is also able to sell and register cars. And let me tell you that this was one of the primary reasons how we came to know that there was a cyber attack incident at JLR, as the company was unable to sell cars in the past few weeks. But now, all in all, if we see, sources have told NDTV Profit that from 1st of October, all the situations and all the systems will be up and running at JLR. And even right now, certain systems and certain IT infrastructure has been restarted, and the company is sure that in the coming few weeks, the things will get back to normal, and the JLR will be able to sell its cars and manufacture its cars as it was able to do a few weeks ago.
Thanks for that, Danish. We'll of course continue tracking this and bring you the latest development. And before we go, it's a historic moment for the Indian Air Force as the MiG-21 takes its final flight. After nearly 6 decades of service, the Indian Air Force retired its iconic MiG-21 fighter jet, which took its final sortie in a decommissioning ceremony held in Chandigarh in the presence of Defence Minister Rajnath Singh. Let's take a look.
This is the end of an era for the Indian Air Force, one that has lasted over 6 decades. Today, the MiG-21, the most formidable of fighter jets, the hero of 4 armed conflicts with Pakistan, made its last flight, tipping its wings in a somber yet joyful salute to the generations of pilots it trained and with whom it flew into deadly dogfights. The legacy of the MiG-21, a Soviet-era fighter that should have been rendered obsolete years ago, will be that of a war horse that became synonymous with the country's Air Force, executing attack, defense, and recon missions for decades. Today, though, with over 300 crashes and aging airframes, the time has come for the MiG-21 to say goodbye and for the Air Force to welcome the homegrown Tejas, the veterans' replacement.
One night before we were supposed to get the money in the bank, we get a phone call and the deal was off. We were in the middle of COVID. We were in a situation where we did the math that at zero revenue, we could not survive more than 3 to 4 months.
You're 25, you work for a multinational, you're living in the south of France.
Yes.
And you're not liking it. You want to come back to India and work harder.
We realized that legally it was, not allowed to work more than 35 hours a week. When I asked my boss for a permission to come on a weekend, he got very upset.
आप वो Indians हो जो सबका नाम खराब करते हैं. Tell us what the kernel of the idea starts from before you go mass consumer.
People are opening multiple browser windows or tabs to do the same search on 3 OTAs, 2 airlines. So we built this meta search engine that would, crawl or use their APIs to give you where the best deals were, and then we would lead you to them to buy.
You almost finish each other's sentences. So that chemistry is really there. One thing that really annoys you.
Hard to, have a discussion that's not very objective because he's the one who's more data, numbers and objective driven at times.
Sometimes, I have to control his positivity about certain things. Hold on, this might not.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है. अरे और रहमान
सोनू निगम के लिए जोरदार तालियां.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है.
मैं आपका बात से सहमत हूं. उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
the world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy.
Hello and welcome. You're watching Know Your Company, our special show on the NDTV Profit with me, Somit Sarkar, and my co-anchor Puneet. Well, today the company that we have on KYC is NetWeb Tech. So firstly, let's understand what are the key questions that we would want to know from the analyst and from the management when it comes to NetWeb Tech. Firstly, whether the growth guidance that the management has given, is it sustainable? Now, earlier the management had guided for a growth of around 30 to 35 odd %. So is that growth sustainable even for a longer period of time is something that we would want to know. When it comes to order wins, the company has announced mega order wins in this month, that is in September 2025. So what are the further order wins that we could see when it comes to AI infrastructure is also something that we would want to know from the management and from the analysts. How are they looking at? When it comes to its partnership with NVIDIA, how does this partnership helps the company? Does it help them does this help them secure more larger orders going forward is something that we would want to know from the management. And when it comes to what is the view of the analyst on the current valuations, given the sharp run up that we have seen in the share prices, are the valuations sustainable at current level is also something that we would want to know from the analyst. And lastly, these two order wins that the company has announced will suffice growth or will suffice strong growth for the company till FY27. But what happens to growth beyond FY28? That is something that we would have to know from the analysts that will be joining today on NetWeb Tech. But first, let's start with Puneet on what does this company actually do?
Well, definitely it's one of the most interesting ones because it doesn't actually have a direct peer, to say the least. It provides high-end computing solutions, which essentially means they do provide supercomputers for various applications in key industries, and we'll get to the industry part in just a bit. It deals in fully integrated design and manufacturing capabilities of these computing solutions, and because of that, the supercomputers have appeared 15 times in the top 500 rankings as well. When you look at the other key aspect, which is the key segment, and they divide that into 5 key operating areas. Computing is one, private cloud. These are the two main ones that we watch out for because that's almost 70% of the company's revenues. The third includes AI systems, and you'll see that the revenue is actually doubled over the last 2 years for the AI system category. It is a new one, to say the least, so we could expect some higher growth in this particular sub-segment. Fourth one, storage, and the fifth one is data centers. Now, data center actually has a huge applications. The company used to manufacture servers earlier as well, but because of the high growth segment in the first two ones that are mentioned on the screen right now, we've seen the contribution of data center actually be in just some low single digits as well. But that's largely the top 5 segments that NetWeb Tech operates in. It's important to know which industries they cater to as well, because a lot of industries which require high computers and high super solutions as well are clients of NetWeb Tech as well. So if you can look at the industry classification as well, that's the other one. We've seen space and defense be roughly about 28%. IT/TS is the other one, which is the majority of the company's share. Education and research as well, and the other enterprises is the other industry as well. It has a lot of clients, especially from the government side as well, that do cater into these segments that they operate in, but that's largely on this company's industry that they cater to. Very quickly, I just want to highlight the other data for Q1. Revenue from repeat customers is roughly about 72%, and that because they are such high growth customers that you would have repeat orders from these ones. The other ones, 23 new clients that got onboarded across the industries in Q1. pipeline is over 4,000 crores for the company because of the scope that it offers and no direct competition essentially as of now, at least in the listed space, with an order book of existing about 229 crores. So the difference between the order book to the pipeline is also quite sustainable and quite huge. So it could materialize at least in that space as well. They also had a recent order win of 415 crores. That's to supply Tyron AI GPU accelerated systems, and that we are going to talk about that with the analysts as well as with the management as well, and that's deployment of AI infrastructure as a whole. But that's largely about the company. We've told you about what we actually want to know from the analysts as well. But let's now look at the metrics, Sumit.
Well, yes, the first, there are total 8 metrics on which we are going to rate this company, that is NetWeb. The first one would be income statement, followed by balance sheet, then the cash flow, how the return ratios for NetWeb Tech, shareholding pattern, what has changed over the years, street cred means how the stock has performed over the last few time frames, how the valuation standing, what's the street coverage, and what is the outlook going forward for NetWeb Tech. So based on these 8 parameters, we are going to rate NetWeb Tech in the next 10 minutes. So firstly, when it comes to income statement, if you look at the company's income statement, the growth has been quite strong. 67% is the CAGR growth that we have seen over FY22 to FY25. For 65% similar growth coming into EBIT, and similar growth that we are seeing when it comes to net profit. Net profit CAGR growth has been around 73%, and over the last 3 years that we have seen, margins, if you look at the EBIT margins of the company, that has remained in the range of around 13 to 15%. So not much of a deviation, strong level of margin, strong growth that we have seen in the last 3 years. Now if you look at the first quarter performance, the first quarter of FY26 performance for NetWeb Tech, on a sequential basis, yes, it has declined 27%. But then again, this business is largely dependent on how the order wins cycle are. And if you look at YOY basis, yes, again, a strong growth is what NetWeb has reported on a YOY basis. 102% growth in revenue. EBIT has increased by 141%. Margins expanded by around 221 basis points to 13.8%. Net profit came in at around 30 crore, which is a jump, which is nearly double of what the company reported last year. So again, a strong growth on a YOY basis in the first quarter as well. So thumbs up that we are giving it when it comes to the income statement for NetWeb Tech.
Well, balance sheet also likely has seen strength as well in this particular time frame. We've given this a thumbs up because if you see the movement essentially of the book value, just from roughly about 93 crores in FY23, the book value has now inched up to 530 crores in just the last couple of years. So it's definitely a key positive. In this particular time, the company has reduced its borrowing. That's helped contain profits as well. And the cash and bank has also increased to roughly about 222 crores in FY24. We saw a slight dip from those levels to 180 crore in FY25. But the jump essentially from FY23 compared to FY25 is so vast and so huge that it's a clear thumbs up on balance sheet metrics as well. Cash flow, Sumit.
Right. Now, if you look at the cash flow here, yes, the operating cash flow has come down. 27 crore is what we had seen in FY23, which has come down to negative 13 crore. But as a percentage of PAT also, it has reduced. But on a net basis, if you look at, the company has still been generating cash, given the fact that there are multiple other sources for the company to get cash here. If you look at the complete statement here, there are cash flows from financing and investing options as operations as well. So on a net basis, yes, the company has been generating cash. So on net cash flow, it has remained largely stable in the last couple of years, around 80-83 crore. However, given the fact that operating cash flow has reduced because of the increased number of receivables, we are giving it a neutral rating as of now.
Now, when you look at the other key metrics, which is return ratios as well, because that is the other important one. While FY23 was a strong year at about 47% in terms of return of capital employed, the reason we are giving this a neutral rating is largely to know what could be the stable run rate for the company. Is it going to be 28 to 25%, which we've seen the last 2 years? That's going to be one key question. On return on equity as well, when you look at the other metric, was roughly about 45% in FY23, FY21. FY23 saw a huge jump to 68%, but we've largely seen a stable 25 to 29% in terms of return on equity as well. So we've largely given this a neutral rating, being very conservative on our ratings, and that's largely because of lack of stability, if any, over the last 3 to 4 years. It is a high growth company, so we've given this a neutral largely because of that aspect and to know what could be the run rate going forward as well.
Right, and when it comes to shareholding, again a thumbs up that what we have given, because the promoter holding has remained largely stable over the last 1 year. FI holding has come down a bit, but again not much of a decline, just 100 basis points of a decline. DI holding has also declined by around 100 odd basis points, but again public holding has increased by similar number from 13% has increased to 15 odd percent, but promoter holding has remained largely stable. Again 70% plus promoter holding is quite positive when it comes to Indian companies, and hence a thumbs up that we have given for the shareholding part.
When you look at the street cred as well, and there's not too much to complain here, honestly, because just in the last 1 month, the stock's up almost 59%. When you also look at, longer time frames as well, essentially in the last 6 months, it's almost up 135% in terms of stock returns. On a year-to-date basis, we have seen some knee-jerk reactions, but still up 26% and largely outperforming both the Nifty as well as the mid-cap performance. 43% on a yearly basis. So this is no doubt we've given this a thumbs up. Very strong profile in terms of stock returns that the company is given in this particular point of time.
Right, and the outlook, what is the company expecting for FY26 and FY27? Now, firstly, if you look at the street coverage here, there are 3 analysts covering the stock, and all of them have a buy rating. In fact, one of them just upgraded the rating in the recent times, opposed the order win that the company had announced, and the average upside, that is the return potential for the next 1 year, stands at around 17%, which is again a reason for us to give a thumbs up to NetWeb Tech.
Well, when you look at the outlook, and I'll also cover the valuation very quickly, because they have given a stable outlook, 35 to 40%, and Somit mentioned that if that is sustainable, we'll quiz the management on that as well. That's the key aspect. Apart from that, they've delivered 40% CAGR since listing as well in terms of revenue profile. EBITDA margin is largely maintained at 14%. So that'll be the other thing to watch out for if they are able to maintain their growth. The management has guided for that, but with the new orders in the India AI mission as well, that's going to be the other growth area for the company. When you look at the valuation aspect as well, very quickly, it's not cheap by any means or imaginations. On a price to earning basis, it's trading at 62 times, but that's also for FY27 basis. It's almost trading at 100 times in FY26 basis, and that's why in terms of the current aspect of PE, it is expensive to say the least. Even when you look at the EV EBITDA metric as well, that's largely expensive on that as well. So when you look at the overall rating as well, we'll pull that up very quickly as well, and Somit will take us through all of them right now.
Well, income statement is a thumbs up, balance sheet is a thumbs up again, cash flow and return ratio is quite neutral. So at least 2 out of 4 in the first page. Second one, again, shareholding thumbs up, street cred thumbs up, valuation is down, and street coverage is a thumbs up. So 3 and 2 around, okay, it should be 5, and okay, 2 neutral is 1. So it's around 6 out of 8 is what the rating that we have given to NetWeb based on this. Now let's get into let's get our analyst on the show, Renu Bed, Senior Vice President, Research with IFL Capital. Ma'am, firstly to start off with, yes, the company has reported quite a strong growth that we have seen of late, but do you expect this growth rate to be sustainable even beyond FY28, because the recent order wins will lead to strong growth at least till FY27, but what beyond that?
Yeah, hi. The kind of orders that we have seen for the company, especially under National AI Mission, most of these are short cycle executable orders. And while these orders will be completed by the first half of 27, the further new orders should be recurring. So if you look, the total corpus under National AI Mission has been about close to 11,000 crores. And NetWeb is pretty much confident that they should be able to garner at least 50% share, which implies 5,000 crores plus of revenue opportunity. So the current order 2 wins that they have announced cumulate to close to 2,100 crores. And just to that extent, we still believe that these are just 40% of the revenues that they are targeting. And the rest revenue momentum from new order wins should continue through FY 27-28. In fact, after these 2 orders in second half also, there should be a couple of more order wins, which will drive better visibility for fiscal 27. So in fact, in our revenue forecast, we have taken close to 1,300 crores of revenues from these NAIM orders in fiscal 26 and close to 2,300 crores in fiscal 27, including 1,500 crores worth of new order wins, which will be executed then. While the revenue numbers will taper down from 28-29, nonetheless, it will help better penetration of NetWeb solution in India's AI infrastructure there.
Ms. Baid, very good morning to you. Thanks so much for joining in. It's Puneet this side. You also cover the EMS space very actively, so the high growth is not a concern. But largely, when you look at, in terms of revenue profile, you did mention, what would these new orders do for margins for the company?
Well, since these orders are not just for hardware, but for the entire solution, along with the Tyron software that they offer along on the platform. So to that extent, these are double-digit margin orders. One can contemplate that, yes, compared to the base run rate revenues, where they were earning almost 14% kind of margins, these, given the size and scale, would be at least a few 100 basis points lower. So we still expect that these projects should be between 10 to 11% margins for the company. So on a blended basis, it will not have a significant dilutive impact on the overall margin profile of the company. So we are forecasting about 50 to 80 basis point lower margin than what the company had guided for the base run rate business, which was 13.5% to 14% at the end of last quarter.
Right. I wanted to understand one thing. I believe by the end of the first quarter, their capacity utilization was around 65 odd %. So post this couple of order wins, do you expect that utilization levels will increase and they might have to do some more capex on their front or some more hiring at their end?
So yes, they were operating at 65%, but that was on a single shift basis. SMT lines typically can run 24/7, so easily they can scale up to double shift and if required to third shift. Broadly, there might be some incremental capex of maybe 5-10 crores to debottleneck, add up some more assembly capacities for the servers, etc. But I would say on the capacity front, they are relatively better placed, and that's the reason why they have been able to take these orders with these kind of delivery timelines. So both not just on the SMT line, but also on the other manufacturing activities related to the assembly of the server, they are today well prepared. In fact, the server activities on the assembly side was fully commissioned at the end of 25 itself. So to that extent, they are well prepared to execute this kind of growth rate.
So just to conclude conversation, I just wanted to understand. So over FY26 to FY28, what is the kind of growth that you're expecting on revenue, EBITDA, net profit front?
Overall, if you look in terms of numbers, clearly we are looking at 65% CAGR growth in revenues. Profit CAGR has been 40% plus. But if I look only in terms of AI-driven revenues under the AI mission, so those revenue numbers would be growing almost in terms of absolute numbers. They will add incremental 5,200 crores to the top line. And the base run rate in the AI segment will still be growing at 55% CAGR. So yes, there is a big pop-up, which is driven by these national AI mission orders. But yet overall, in terms of their growth profile, we don't see any headwinds. So from a profit number, which was expected this year to be close to 2.5 billion, we expect the company to really double PAT by 28 to close to 5 billion rupees. So clearly, PAT doubling in next 2 years from this year's expectations, and revenue also expected to quadruple thereon.
Right. Well, thank you for joining us and giving us your perspective on the stock, that is NetWeb Tech. Strong view coming in from IIFL Capital. Now, we also spoke to the management of NetWeb Tech to understand how their growth plans or growth plans look like going forward. Let's listen into that conversation. AI segment used to be around 7% of your revenue a couple of years back, which has now increased to around 29% in the first quarter. Where do you see the revenue contribution coming in from this segment, say 2 years down the line, sir?
As I mentioned that, so our AI portion of our revenue continuing to be healthy, and it is 25 to 30%, and all the missions pertaining to AI mission infrastructure capabilities are being reported and accounted separately from the revenue segment that you generally see what we submit to BSE and NSE. So entire AI mission related revenue accounting and governance will be done separately. So I think for every such project pertaining to the AI built up is going to be seen as a separate account and separately reported to the market.
Okay, post this order win, what will be your capacity utilization at, I believe in the first quarter it was around 65% level?
Yeah, so when you talk about the capacity that we are building, right? As you know that we have our in-house motherboard manufacturing, server manufacturing, and all. So we will be delivering these orders in course of time, depending on our funnel or even the pipeline conversion basically happens into 6 to 18 months. That is the timeline that is there. So as and when these newer orders that are coming up, we will be fulfilled in due course of time.
Okay, and with this new order wins, will your revenue growth will be much more in FY26, FY27 than what you had guided earlier?
Yeah, so we will obviously, so with these larger orders coming in, obviously it is natural that our revenue growth is going to be much faster compared to what has been there in place, and we anticipate some more other orders which are there in the pipeline will also mature during the course of time. Yes, obviously this will translate to a better revenue as we move forward.
Right, sir. Just wanted to understand the tie-up that you have with NVIDIA. How does that help the company? Does that add more credibility and helps in securing orders faster?
So we have been working with all our ecosystem partners from a very strategic perspective, whether it is NVIDIA, from the GPU server perspective, or AMD or Intel. Now, having said that, our relationship with NVIDIA is deep-rooted, while NetWeb is one of the 6 global manufacturers of GPU servers based out of India. And we are the only one in India. So we do have the technology relationship with them. We get to understand their, the systems and the softwares that are required to leverage the underlying platform better. And that relationship really helps us to delivering outstanding capability much faster and time to market as they are launching their new generation solutions. And that is the way NetWeb and NVIDIA works in tandem to help build these kind of solutions. By the time they launch their newer GPUs or newer software stack that is available on the NetWeb built GPU servers as well. And that basically really helps. That technology association really helps us making these solutions, bringing to the market faster, and that also convinces our customer about our joint value proposition and how that translates to their business success.
Well, that was the management of NetWeb. You also got the analyst view in this particular episode, so you got the twin benefit as well. But thanks so much for tuning in to KYC. Lots more action on the other side. Stay tuned to NDTV Profit.
One night before we were supposed to get the money in the bank, we get a phone call and the deal was off. We were in the middle of COVID. We were in a situation where we did the math that at zero revenue, we could not survive more than 3 to 4 months.
You're 25, you work for a multinational, you're living in the south of France.
Yes.
And you're not liking it. You want to come back to India and work harder.
We realized that legally it was, not allowed to work more than 35 hours a week. When I asked my boss for a permission to come on a weekend, he got very upset.
तो आप वो Indians हो जो सबका नाम खराब करते हैं. Tell us what the kernel of the idea starts from before you go mass consumer.
People are opening multiple browser windows or tabs to do the same search on 3 OTAs, 2 airlines. So we built this meta search engine that would, crawl or use their APIs to give you where the best deals were, and then we would lead you to them to buy.
You almost finish each other's sentences. So that chemistry is really there. One thing that really annoys you.
hard to, have a discussion that's not very objective because he's the one who's more data, numbers and objective driven at times.
Sometimes, I have to control his positivity about certain things. Hold on, this might not.
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
और रहमान
सोनू निगम के लिए जोरदार तालियां।
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं the best app to use is the NDTV app.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just...
I've heard of prison REITs in the
Prison REITs?
Prison REITs in the US.
No. How does the structure of the REIT get created?
It's still a small number, but from 6,000, 300,000 is a big growth. That's a wrong way of looking at it. Just looking at the dividend yield. September, third week of last year, you would have made a return of 36%.
Why was it beneficial for you to acquire assets in the SEZ?
We also got SEZ benefits.
Sure.
What you get, most of it is tax-free.
The jury's out on physical real estate as an asset class. We've had debates right here about it. Some people swear by it. Others say the acquisition cost is too high, to say nothing of the opportunity cost. But what about fractional ownership? What about real estate investment trusts? How do they work? And if they are meant to allow you to invest in real estate assets, why has the SEBI tagged them as equity? What are the tax implications? This is MoneyWise on NDTV Profit, and my name is Alex Matthew. Joining me in studio is the man with the answers to all of those questions, Ramesh Nair, the Managing Director and Chief Executive Officer of Mindspace Business Parks REITs. Thanks so much, Ramesh, for taking the time. Let me start with the most basic question. What is a real estate investment trust?
So, REIT is a pooled vehicle which invests in different asset classes. I work for an office REIT. We get rentals from the various clients who occupy these buildings. We deduct expenses. Then there is interest payments after that. And after that, we distribute the income to the various unit holders. So as simple as that, like a mutual fund invests in the equity markets, we invest in a particular asset class, in this case, office real estate.
Okay, so a number of questions already emerged from that one statement, right? You invest in office real estate, so the natural extension of that would be that there are REITs that exist that invest in residential real estate and that invest in the other type of real estate, which is retail, right? Which is malls, etc. So where do they exist? Do they exist here in India?
So in India, we have only 5 REITs. The first REIT came up in 2019. And since then, 5 REITs have listed. So 4 of them are office and 1 of them is retail. Between the office REITs, they own around 165 million square feet. The retail REIT is around 11 million square feet. Overall, when you look at the Indian market, we are talking of a market cap of around 1,50,000 crores with a AUM of around 2,25,000 crores. Compare that to US, where REIT as a product has been there since 1960. We're talking of a market cap of close to $1.9 trillion. Today there are like 1,000 REITs across the world in 40 different countries. Multiple REITs. So in US you would have rental REITs, they would have large data center REITs, there would be industrial and logistics REITs. I've heard of prison REITs in the
prison
REITs in the US. There would be resort REITs.
So the implication of that is that a prison earns money.
Rental income.
How rental income? Oh, so it rents out to the state.
Yeah.
So it's privatized prisons that rent it out to the state, and the state pays a rent, and that gets distributed. Wow, yeah. I didn't even think of that. Okay, so but let's talk about the fundamental objective of a real estate investment trust, right? It is a vehicle that allows an individual to participate in investing in an asset that would otherwise be difficult for them to invest in. So we're talking about, especially we're talking about office spaces, it's very difficult for an individual. It's practically impossible to buy the same building that an Infosys is renting, right?
Exactly.
Whereas you will have IT service providers that are renting businesses or buildings that you own. So as a REIT, ultimately the primary cost for you is the acquisition of the building. Do you at all get into the building of buildings?
Yes.
The construction of buildings?
We do.
How does that work?
So from our point of view, we have a 37 million square feet portfolio. In that 37 million square feet, 30 million is ready. 7 million is actually under construction or under development, getting different approvals. So it's a mix of ready and under construction.
Okay. So, and who does the actual construction? You would contract a developer or builder, or basically in EPC mode, you would effectively get this done, right?
So we would typically partner with people who understand that. Here in this case, our sponsor, K-Rager Corp, has a very large in-house construction team, and we would give them a fee for constructing the buildings.
Okay. So, like I was saying, the primary objective then from the perspective of the REIT, first we'll talk about the REIT and then the individual, right? So the REIT ultimately is an entity that is created to own a number of real estate assets, physical assets. It will then serve as a landlord for those assets. It's responsible for getting clients to come and live in those or utilize those assets. It will collect the rent. It has certain overheads.
Yes.
The management of those assets are the REIT's responsibility, and it makes a certain profit.
That's right.
How do you decide as a REIT what the spread of your assets will be, and where do you get the capital from? Is it through the initial primary issuance, or do you already have a certain asset pool and then you go and you list and you basically have unit holders come in? How does the structure of the REIT get created?
So from our point of view, as per SEBI regulations, you are supposed to distribute 90% of your net distributable cash flows back to your unit holders. So for growing, for investing more, we need to go to the capital markets. So capital markets is either looking at debt or looking at equity. Today, we have a debt of close to 10,300 crores. So that's the debt we have taken over the years to grow our REIT.
Okay. No. So, but how does the ownership structure of the REIT work? Ultimately, you're talking about a trust. And so there will be original sponsors of a REIT, and then ultimately you increase the number of participants or owners of the trust, right? So how does that structure work?
So initially when we listed, there was a lot more interest from foreign FPIs.
Yes.
Today what we are seeing is there's a lot of family offices who are interested, HNIs who are interested. There was Blackstone when we initially listed, who used to own 15% of the REIT. Blackstone then sold it to Abu Dhabi Investment Authority. And Abu Dhabi Investment Authority in turn today has sold it to multiple mutual funds.
Sure.
So today the ownership is 64% of our REIT is the sponsors. Balance is FPIs, retail investors, insurance companies, pension funds. So it's a mix of all that. The balance 36%.
And broadly, would you say that REITs in India are owned more by institutions rather than retail investors, individual investors?
That's changing. So the early days, when the first REIT was listed in 2019, we were the second ones to list in 2020. Initially, most of the interest came from FPIs. That's kind of changing. And today there's a lot more HNI interest. So the first REIT, Embassy REIT, was listed in 2019. There were only 6,000 retail investors back then. Today, there are close to 300,000 people who have invested in the REIT market. But again, when you look at 300,000 people, with the 11 crore people who invest in equity markets in India and 5.5 crore people who invest in mutual funds, it's still a small number. But from 6,000, 300,000 is a big growth.
I'll come back to the scope of the buyers and how that is expanding and what the implications are for supply demand and ultimately the prices of the REIT. Let's come back to the perspective of the REIT, right? So ultimately the price of the REIT per unit is described by your share price that is tradable on the exchanges, right? You mentioned that you have assets under management of a certain size and you have a market capitalization of a certain size. Why is it not at parity?
So typically what happens is a REIT is valued based on 2-3 different principles. Somebody looks at a professional valuer who values, as per SEBI, we are supposed to value it twice in a year. So he looks at a fair market value based on, he discounts future cash flows and arrives at a fair market value, which is called the GAV, the gross asset value. From that, you deduct debt, you deduct security deposit, is what you arrive at your NAV. So NAV is supposed to be the true value.
Reflection.
True reflection. Sometimes there is a premium, sometimes there is a discount because the market is also going up, right? Like what we saw in the Hyderabad market, just last financial year, we saw the average rentals in Hyderabad going up from around 75 to 90. Still climbing. Efficiency rates which occupiers were willing to pay. At once upon a time, occupants wanted 80% efficiency.
What is an efficiency?
Efficiency basically means carpet area to the leasable area ratio. When you pay for 100 square feet, how much area do you get as carpet area?
Okay.
Used to be 80 square feet once upon a time. Today that's dropped to 70, which means you have more space to lease. So when these kind of things happen, when the market goes up, when there is a lot more rental increases than normal rental increases, which is typically 5%. In a typical contract, the client has 4.5 to 5% rental increases. But sometimes the market shoots up. There could be a client who's paying 50 rupees rental, who's decided to vacate, and we could lease that same space at 100 rupee, which actually happened last quarter for it, because the client who had a lock-in, he had a lease term ending, who ended up leaving, we get that opportunity, what we call the mark-to-market opportunity. So these are the ways one increases the value. We also increase the value by doing external acquisitions. External acquisitions can be acquiring from third parties. External acquisitions can be acquiring from our sponsor. Today, our sponsor has close to 18 million square feet, which is at different stages of development and completion. External acquisition can also mean where we have joint ventures with the landlords. Let's say we have a 1 million square feet project, the landlord owns 300,000 square feet of it. Over a period of time, sometimes landlords tell us that, okay, I want to
sell it to you.
I want to sell it to you, and they would first come to us because it obviously increases their overall value proposition when you're part of a larger park. So all these things help increase your gross asset value over a period of time.
And so it's much more than just a reflection of the real estate that you own. It's the expectation of how the yields or the rentals will move up over a period of time. Effectively, it is a measure of future value which gets discounted at the current level. Like any other equity.
Like any other. See, the key thing here is a lot of people look at REITs as a yield product, which is a wrong way to look at it. Yields today are around 6%.
Explain that for the benefit of, and I was coming to yield. Sorry to interrupt you, but I want you to explain this concept so that people understand this and why a lot of people traditionally looked at it and compared it to fixed income products, because ultimately your yield often is spoken about in the context of a debt product, of a bond, right? So you have an investment that you make in a bond, you get an interest or a coupon payment, and so if you hold it to maturity, you get a yield. In this case, you're talking about a real estate asset. You have invested in a REIT which holds a certain amount of real estate that cost a certain amount of money, and on that investment you're getting rent. And that rent as a percentage of the overall cost is looked at as the yield, correct?
That's right. That's right.
So why is that the reason why people have compared it to a bond or a fixed income product? Because more or less is predictability on how much you're going to get as a yield, right?
See, there is definite predictability that whatever, you could get a yield between 5.5% to 7%, depending on which REIT you have invested in. But that's a wrong way of looking at it, just looking at the dividend yield. Last week you saw the returns on Sensex over the last 12 months was nil. Same time, if you had put money in Mindspace REIT exactly a year back, last week, last September, third week of last year, you would have made a return of 36%.
Including the capital
appreciation of around 30% and yield of around 6%. That's the way to look at a REIT. I know things are not always going to go up.
It's not linear.
Yeah, it's not linear because you could have a COVID year, you could have a global financial crisis kind of a year. But even if you look at a 5-year period, we just celebrated our 5 years since listing. In the last 5 years, imagine the kind of things which have happened in the world. We had COVID. Everyone wrote off office. There was work from home. Everyone is working out of homes. We had a lot of SEZ vacancies which were happening. In spite of all that, if you look at it from a 5-year period, on an annualized basis, we have given more than 15.5% annualized returns.
Inclusive of the yield that you...
Including
and the
yield
dividend
and you basically where the share price has gone and the dividends which you're given. If you have to kind of divide it by 5 years, you're given a 15.5% plus, which is which in a world which is so uncertain, in a world which is there's so much of volatility, I think giving that kind of returns is quite commendable.
Okay, certainly. I want to get into some of the aspects because, yes, you're seeing that the last 12 months has been great, right? But there was a period of lull. In fact, if anything, the last 12 months has been catch-up. And there were a few niggling issues that came about. Something about special economic zones, something about, the renters in those markets. What happened?
So 3-4 things. So I'll first talk about the market and then go to SEZs. Back in 2021, the office market demand was around 25 million square feet, net demand of office. That's come back to 50 million square feet. So office absorption, a lot more.
Because people came back to work.
Yeah. And companies growing. They didn't grow in 2020 and 2021 because of COVID. Vacancy levels, which used to be around 18%, today is dropped to 14%. Back in 2015, most corporates would look at an SEZ where demand for SEZ versus non-SEZ space was 50-50.
Okay.
Why would they go to SEZs? Because most office demand came from IT services companies, large IT companies, and they were getting the tax rebates in an SEZ. That had changed by 2020 because the tax benefits had gotten over in SEZs.
Sure.
So demand became 90% of SEZs and 90% non-SEZs and 10% SEZs. So 50-50 became 90-10. And all the developers were left with vacant SEZ spaces, including us.
Okay.
So the government in 2023, highly supportive government, who came out of the rule that even if you have a floor vacant in an SEZ, you could convert it into a non-SEZ by paying a certain fees to the government.
Because I just want to clarify, so those SEZ properties were available to you at a discount or at lucrative prices? Is that, or was it the tax rebate that
we own those properties?
I know, but
tenants were not showing interest because the tax breaks.
But I'm talking about why was it beneficial for you to acquire assets in the SEZ?
We also got SEZ benefits.
Sure.
Construction costs would have been 15 to 20% lower on stamp duty, custom duty, all those things.
Which is why you had to pay the government a cost to convert to non-SEZ.
Non-SEZ.
Right.
So what we have done, for example, is we have converted close to 22 lakh square feet of ours, which was vacant, to non-SEZ space. Vacant SEZ space have been converted to non-SEZ and managed to actually lease 16 lakh square feet of that.
Okay.
So that's worked very well for us, and thanks to the government, they came out of these rules in late 2023. And it's kind of played out over the last 1.5 years. We've been able to increase our occupancy. Back then, our occupancies used to be around 87%. Today, our occupancy is nearing 94%.
Okay.
So we've been beneficiaries of that rule change.
Okay. And this is a process that is ongoing. There's still more to go. And when do you see that completing?
So it depends when. Even today, we have a lot of SEZ space, which is occupied by various occupiers. We can only demarcate it when they leave the space.
Right.
And we also have to wait till one full floor becomes vacant. Let's say it's a large floor and one tenant, which is half the floor, vacates. We still cannot demarcate it. We'll have to wait for the other tenant also to go to demarcate.
So the potential for occupancy is actually much higher. It can go maybe on the next 1.5 to 2 years. What is the average lock-in period that people get into? What is the kind of terms that people get into?
Typically, occupiers sign a 10-year lease.
Okay.
Lock-in periods vary between 3, 4, 5 years is the lock-in.
We've talked about the potential. We've talked about the fact that it's a steady state earner. There is potential for capital appreciation also. We've spoken about the various reasons why that is. Now, I do want to ask about a couple of things. One is that the recent tagging by the Securities and Exchange Board of India of REITs as equity. And you made a statement. You said that it shouldn't be looked at as a rental asset or yield asset, and you've spoken about why. What are the benefits of being tagged as equity? Does that mean that there will be more buyers that come through, especially in the mutual fund space, where now in a number of categories they will be able to include REITs in their portfolios?
So simple logic, Alex here. You widen your investor base. There's a lot more interest. There's better price discovery. There's more liquidity. So let's look at the Indian mutual fund sector. Close to 75 lakh crores, the mutual funds
Assets under management.
Under management. Out of this, 60% are equity funds, around 20-25% are debt funds, around 8% are hybrid funds. Because we were classified as a hybrid fund, there was always a confusion if we are a niche product or a mainstream equity product. Today, that confusion is over. We are no longer a hybrid product. We are a simple equity product, which means we would get included in various indexes, which means, let's say, there are these large American ETFs, which are the index funds, which are there, who would have a Asia allocation, an India allocation. We would have that kind of money coming in. And given that the product to the market being an equity product has been simplified, we feel there would be a lot more retail investor interest also. Mutual funds silently have invested like 30,000 crores in REITs over the last few years.
Okay, so we've covered a lot of ground, but let's also talk about the tax aspect of it, because ultimately there are two forms of earning in this. You either have capital appreciation, as you've described very aptly, and you also have a regular distribution by the REIT to unit holders. How do you ensure, or how do investors in your REIT get taxed? I ask this because there are two ways in which this is calculated.
So from a distribution point of view, what we do is around 55 to 60% is given as dividend, which at the unit holder's hands, he doesn't need to pay a tax. Around 5% is given as interest component, which is taxed at tax slab of what the unit holder is, and balance around 35% is given as capital repayment, where on receipt he doesn't pay tax, but when he sells, he pays short-term or long-term capital gains tax as applicable. This is one of the key points of investing in REITs, which the market needs a lot more education
on. Yes.
So what you get, most of it is tax-free.
Okay, so and the reason why I asked you this is because there is a second way in which this is calculated, and that is effectively, by the way, if you're wondering about this, is that if the REIT has moved to the lower corporate tax rate, then the unit holder will have to pay tax at slab rate for the entire dividend that is received. But in the case of Mindspace REIT, as we've established it, let's actually drill this down and illustrate it so that people understand. If as a unit holder, I have received 1,000 rupees of payment, or 100 rupees of payment, right? 60 rupees of that
55 to 60 rupees.
55 to 60 rupees of that is a dividend payment for which I pay no tax.
No tax.
5 rupees of that is the interest component for which I pay based on slab rate.
Yeah.
And the remaining 35 rupees gets adjusted with what I have paid initially, my original acquisition cost.
That's right.
That original acquisition cost gets deducted from that.
Yeah.
And then what the final value of whatever I sold, when I do sell, is used to calculate the gain or the loss, to calculate the incidence of capital gains.
Capital gains. And what we do we do it very transparently. SEBI regulations are there. Once a quarter, when we give these dividends, it's clearly mentioned what is the breakup of all these three aspects. Once a year, we also send a Form 64B where the unit holders can use this in their tax filing.
Yeah, and of course, ultimately, when the sale happens, there is capital gains that has to be booked at 12.5% long-term capital gains, because ultimately it's a listed equity asset.
That's right.
Okay, so it's pretty clear, and I think that we've covered quite a bit of ground. I'm sure that there will be questions that emerge, and I'm sure that we'll have an opportunity to speak again. But thank you so much for joining me today. Absolute pleasure.
Thanks, Alex. It was nice being on your show.
Well, we tried to cover all the ground on real estate investment trusts, and I hope that we've done a good job. Let us know what you think, and if you've got additional questions, like I said, we'll address it on future shows. Thanks so much for tuning in. This is NDTV Profit.
One night before we were supposed to get the money in the bank, we get a phone call and the deal was off. We were in the middle of COVID. We were in a situation where we did the math that at zero revenue, we could not survive more than 3 to 4 months.
You're 25, you work for a multinational, you're living in the south of France.
Yes.
And you're not liking it. You want to come back to India and work harder.
We realized that legally it was, not allowed to work more than 35 hours a week. When I asked my boss for a permission to come on a weekend, he got very upset.
तो आप वो Indians हो जो सबका नाम खराब करते हैं. Tell us what the kernel of the idea starts from before you go mass consumer.
People are opening multiple browser windows or tabs to do the same search on 3 OTAs, 2 airlines. So we built this meta search engine that would, crawl or use their APIs to give you where the best deals were, and then we would lead you to them to buy.
You almost finish each other's sentences. So that chemistry is really there. One thing that really annoys you.
Hard to, have a discussion that's not very objective, because he's the one who's more data, numbers and objective driven at times.
Sometimes, I have to control his positivity about certain things. Hold on, this might not.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है.
मैं आपका बात से सहमत हूं. उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है.
और रहमान
सोनू निगम के लिए जोरदार तालियां.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
Manish Sonthalia, Director and Chief Investment Officer of MK Investment Managers, with us this morning. Manish, thank you so much for taking out the time. I know you were on your way somewhere. You stopped your car to do this conversation with us. We deeply appreciate it. And it was also important because we want to try and get a sense from you on what is the mood right now. Is there panic because of these, tariff tornadoes or tariff tsunamis which have come overnight? Or is there a sense that this is more of the same?
So, Tamanna, every day there's something new that is coming on account of tariffs, and obviously India is also getting impacted because of that. But somewhere down the line, there is also a realization that, everything said and done, the earnings downgrade cycle is somewhere close to the bottom. That whatever earnings downgrade one was to have seen as far as India is concerned is coming to a close. And you could say that there's also been some compression in P multiples. So from that point of view, if the flows continue to remain what they are, I'm talking about the domestic flows, then it's okay. I don't think there's much to panic. I don't see too much of panic in investors' minds. In fact, people are looking to deploy capital in these declines. I don't see any panic as such.
Manish, that's a strong statement and good to hear that. In fact, day before yesterday, HSBC upgraded India to overweight. And when we spoke to Harold van der Linden, his call was that his Asian clients seem to be believing, and they seem to be telling them that even if the thaw between US and India were not to happen, valuations relative to history are in favor, and 2026 allocations would mean FI flows would return. So if the domestic flows stay strong, and if HSBC's thesis on global flows is correct, are we actually looking at some upsides, and significant ones at that, over the course of the next 6 months?
The harakiri in the market today is the currency. The currency depreciating to 89 and below that. Of course, one could say that Indian currency is somewhat undervalued at these levels. It's not overvalued. At one point in time, it was overvalued. Now, based on the current situation, Indian currency is undervalued. So from that point of view, the negative implication of all the export embargoes and tariffs, etc., is broadly more than priced in the currency. And if the currency is undervalued, you don't have too much of an impact on earnings, or whatever impact on earnings had to happen has already played out. There's still rate cuts that are likely to happen. I think there is a case of a buy only. There is no case of a sell per se. There could be some time correction. The markets may take some time to digest this, but absolute downfalls in the market from these levels, unwarranted according to me.
So what would be the play here, Manish? Let me just get your take on pharma, for example, the latest recipient of attacks. Just thinking back on all the whole host of attacks. There's an H-1B attack, impacts IT. Then there is at one point an auto tariff which impacts auto companies. Now, pharma we thought would be staying away because no country wants to impact something like the price of drugs for its population. But nevertheless, what do you see when it comes to the pharma companies? What's been your assessment?
Yeah, so I think all the four major tariff announcements today does impact India to some extent. Of course, the pharma being the largest component of the tariff, in today's announcement, there's some ambiguity currently whether, the entire value chain is going to get tariffed or only the final branded formulation is going to get tariffed if it's not made in the US. So this would have implication for the CRDMO, CDMO, CMO companies. If the entire value chain is to be taxed, if the entire CMO, CRDMO facilities are not there in the US, if that is also going to be subject to 100% tax, then there is a wider impact. On the other hand, if the only final branded formulation is to be tariffed, then there's a limited impact. Of course, we also don't know whether specialty or complex generics are to be tariffed or not tariffed. So at this given point in time, I would believe that the large pharma companies, something like, the Sun Pharmas of the world, they have some 15-16% revenues, which are basically likely to get impacted because of these tariffs. Or there could be some branded plays for players like Lupin and, Cipla and Dr. Reddy's. But that's about it on the headline implication, because Section 232 is also implied currently, and, biologics, etc., not falling within today's tariff announcement. It's only the branded portion which is going to get tariffed at 100%. So, we need clarity as to whether the entire API value chain is also going to get tariffed because they go into the branded formulations, or only the final branded formulation is going to get tariffed. So that is one piece. Auto and auto components, heavy trucks, $2.5 billion worth of heavy trucks exported to the US, plus $2 billion worth of auto components. Now they are going to be tariffed at a higher rate. These have some implications. Bathroom vanity fittings, etc. Again, India has some exposure in terms of exports. Some $1-2 billion worth of exports of that component also goes through upholstery, furniture. That is also some. So all in all, you'll have a impact of $5-6 billion on the other components, apart from pharma, which is the biggest piece, $10 billion. Of course, branded is totally out, so we are saved from that front. But generics is totally out, so we are safe from that front. Branded is going to get impacted, yeah. So these would have short-term implications, and one should build in 50% collapse in revenues from what we were getting previously in the short term.
Sorry, 50% collapse in revenues.
That is how you should build in. That is how we should build in our models, right? If let's say 16% of X company's revenues is branded formulations, you assume that 50% of that is not going to come through, and 50% is what you are going to manage with the higher tariffs. So that is how you try to quantify the implications in terms of numbers for some of these companies.
Okay, Manish, what is your sense on what's happening on the positive side, which is demand and domestic demand in India post GST 2.0? We are now, 5 days into Navratras. Are the telltale signs, and I know you do a lot of groundwork, are the telltale signs that the demand has been strong, and is it across categories?
Autos is clearly a flyer. There is no doubt about it. Autos is flying off the shelf. Even anecdotally, previously also, whenever excise duties, when we were in the excise duty regime, they came down. Autos did really well. And I think speaking to retailers, etc., the festive season demand has been a mixed bag across categories, but discretionary somewhat is looking much better than previous Diwali is what retailers tell us, and consumer durables durables, automobiles. These are some of the areas where things have started to look up. Not so much in the other category, but yeah, GST positive is basically felt into durables and autos is what we can fathom at this given point in time.
And is it getting restricted to just that, durables and auto, the whole FMCG boost that was expected and the re-rating of your consumer staples? Manish, do you think that that's not really panning out?
So biscuits, etc., the point is that the prices are not coming down, but grammage is going up. So whether that is going to lead to more offtake in terms of the number of packets, etc., not too much of anecdotal evidence out yet. But there is hope that as things stand and as things move forward, this is also going to look up. Plus, we are having some very good monsoons. So FMCG, no direct beneficiary that we have come across at this given point in time. Of course, companies have taken a price cut as per the government's directive, or there has been an increase in grammage. So we'll have to wait and watch and come to specific numbers as things progress in the coming months.
Just one point on IT, and of course Accenture's read-through was looked at very, very closely, some varying views on what it really means for IT stocks. All of them are seeing the hit today. Do you think we're going to see another rough quarter, especially with this overhang of H-1B visas?
Yeah, sentimentally the things are negative for Indian IT per se, and but Accenture numbers were not that bad. I mean, Accenture numbers in terms of upping their hiring, etc., is pretty much at par. Only thing is that this H-1B visa is going to raise costs for Indian IT guys. Something to the extent of 2 to 3%. Plus, there is going to be lowering of multiple. Of course, multiples have already got lowered significantly. But on the tailwind side, you have the currency depreciation, so that is going to aid things. But all in all, this 1 lakh for new applications on the visa front, on-site hiring is likely to go up. There is going to be some dent in margins, but I think all in all, there is deep value in Indian IT companies at these prices.
Thank you so much, Manish, for speaking with us and taking out the time. There are consistent tariff attacks and new surprises and shockers coming in from the United States right now as far as trade with India and the world is concerned. How do you build a portfolio? How do you preserve your capital in a time like this? That's what I'm going to ask Vikas Khemani as my first question. He's founder and CIO at Carnelian Asset Management. Joins us on the Talking Point this morning. Vikas, great to speak with you and have you on. Thank you so much for your time. When you woke up this morning and you saw all the series of posts, what was the first thought that came to mind?
This is nothing new. I think we have been used to it now for the last couple of months. So it's the first time in any history, at least I have grown up believing that when you see any policy change through the Twitter and with a lot of sort of vagueness in it, right? If you are making a policy change, you are actually supposed to release a proper circular with a lot of details saying that what includes, what doesn't include. So it just creates a very huge tentative environment, uncertain environment. But I think that's what the individual likes. So I guess we have to get used to it, and he has power. But my take on this is that it's not negative for Indian pharma companies because Indian pharma is largely generic, and US cannot afford to put any tariff on generic drugs. It is mainly meant for branded, patented drugs, where India is very, very small. It could be less than 10% for some of the companies, not even all the companies. So I do believe that and when the details come out, you will know that probably that may not be also covered. So and there will be way arounds and all. So I don't think it is negative for India or Indian pharma company per se.
I think what is more negative is their continued onslaught, right? Every day it's something or the other. Last week it was H-1B, now it is pharma, and you know that something new is going to keep coming. In that sense, do you think the market is bracing for what comes next and is unable to find its feet?
Not really. I think, it's not, I mean, I don't read it as a targeting against India or say, but it is basically, he's been saying this, how he wants to bring back manufacturing to US. And so it is also a lot of things. Why, my own view is that, why you want to do through Twitter is that you want to just address your voter base, that you are, you want to be seemingly taking some actions against, which says that, I'm making America great again. but the far more consequences could be far more deeper, and it actually might not be really what intended consequences are. And in fact, I feel that if they get implemented, US will have a huge inflation. But I'm sure, hence, like in H-1B case, visa case, first they just released the issue, and then they came out and say, look, it does not apply to the stock of the H-1B visa, only to the new visas and all. And I'm sure there could be some again tweaks around going forward. So point is that I think it's just to be done, in my opinion, being done, in my opinion, to address their own vote base and say that I'm doing something. But fact is that, in India is doing only generic medicines, which I think is by and large fine. I don't think it'll get impacted.
Buy into pharma stocks today as this panic sets in. Is there a contrarian trade there, Vikas?
Absolutely. I mean, I don't see any reason why, you should not buy, depending on your research and view on this. But we are positive on pharma names, and we've been holding, and we have not changed anything, in our portfolio. And, like how we saw in IT, first reaction was negative, and then most ITs recovered. So I think, as the first reaction always is negative in markets, and then you will see slow recovery happening.
I'm just trying to understand if you have that same view as far as IT is concerned. Because even when the H-1B visa issue came up, the commentary was that a lot of Indian IT companies have already weaned off H-1B. They don't have that much dependence anymore, etc., etc. Now, Accenture's results, which came in yesterday, though better than expected, don't seem to give confidence that the macro environment's looking up. How do you see it as an impact or a head start for Indian IT companies ahead of the results?
So see, Indian IT companies, there are two sets of Indian IT companies, and I think that is where I think the large IT companies and the mid-sized IT companies. Large IT companies are going through in a process of, building a lot of capabilities as far as the AI and, related fields are concerned. And as that happens, it might take some time, but also they will save some cost. But if you see order book or order wins of most IT companies has been very, very decent. So I don't think while given their basis, you can't have very large sort of growth coming through any which way. So the right way to look at it, in my opinion, IT companies, mid-sized IT companies will do well. And every time there's a technology transformation or transition happens, you find new set of companies doing very well. For example, in 2009 or post-2000 global financial crisis, in 2009 to the next 10 years, companies like Persistent, HCL Technology, LTTI, LTTS, Mindtree, they were minnows, and they became, 10 to 15x, 20x, 25x in their journey. So every time in this cycle also, newer, while some existing companies will remain around, but newer companies or smaller companies might benefit far more, and hence those are the companies to look at. Having said that, IT service